JP.
Thank you, Jeff.
See you guys. Thanks.
Okay, Joseph.
Bill, it's a pleasure to see you again.
I know you're on
We
the
see each
other
other
side.
too often.
Yeah, you're on the other
I
side.
wanted to bring you on today, Bill, to kind of give our customers some perspective, because on a day like today where there's just been a swirl of information and knowledge that we're all being inundated with, which is fantastic. It's good to kind of stop and think about what the center of all that is. And the center of all that, and I say this with a certain amount of pride, is Link 2, because Link 2 is that motive force that's brought all of that knowledge and all of these participants together on this stage. And for the signal purpose of educating our investors who also form a community. And it's that community that's growing and that's continued to be loyal and committed to us, Bill. So I think it would be great if we could spend the next couple of minutes maybe having you do a recap of where we started, what our results were in terms of our investments and exits, and maybe talk a little bit about some of the elements that went into defining that success. Is that good?
Sure, thanks, Joe. And it's nice to see you. I know you're over on the other side of the country today, so thanks for.
I am in DC visiting my dad.
It's excellent. So we went from March 11th to 2 weeks ago without my leaving Monterey County, actually. Haven't been back to the San Francisco office since March of last year, but the first trip I did take out of the county was to have lunch with Joe and with David. So good to see you guys and to catch up again. But it's been some year. It's been some year for Link 2. I'm sure it's been a year for all of you. That's been just amazing. So we have a great investment team. Joe heads up that investment team. He's got a huge background in investment banking. And over the last year, he's been bringing on a lot of new people. Alan's been here almost from the beginning, but then Chris came in, and between Victoria and Dan and Josh and the whole team, he's got a huge team that really helps us now with what do we invest in. But as he was saying, let's go back to the beginning. We started with limited capital, limited assets, but a great idea. The idea was kind of turning the idea of a fund around. Because in the secondary market, any of you that have experienced it, if you want to buy something in the secondary market from any of the other players that are in the market, it's a broker type deal. You have to negotiate it. You have to go through the ROFR, the right of first refusal. Sometimes there's more than one of those rights. Sometimes take 2-3 months to close it. And then when you get to the end of the deal, it gets bought out from under you, you lose the deal. So that's kind of a frustrating process for all of us out in the big markets, but also most of those places you need $250K for them to listen to you. We wanted to bring this back to us, people like Joe and myself, accredited investors, but we don't have $5 million to put into this asset class. And I think most of our investors are kind of in that same boat. So the question Joe assigned me with for today was, let's take a look at last year first. So in terms of last year, we made 41 investments in 10 companies. And when I say we, it was pretty much me with Joe's advice on what to get and how to get it. We didn't have a lot of capital when we began. So we started with Coinbase, Robinhood, Ripple, and Link2. Those were our first 4. But during the course of the year, we kept investing in the companies that we believed in. Of the 10 that we invested in, 5 have gone public or filed to go public. So got a pretty good track record for being newbies in this space. And I started thinking about why did we invest in what we invested in, what we ended up getting out of this for our investors. Remember, Link 2 is an investor in all these companies. We don't go in as a broker and make money whether you win or whether you lose. We invest in all of these up front. We buy them. We're on the cap table first, and then we ask our members if they'd like to also invest. So you get the choice after it's already been vetted, after it's already been purchased, after it's already there, you get the choice of individual investments. Unlike a fund where maybe you put 100,000 in and then they choose for you, you can choose on a granular basis what you're interested in investing in. And that worked for us very well last year. So Jill, I'd like to hand it back to you because I know that this is your chart. Why don't you talk to us? This was last week. You sent this over to me. We now have 90 investments that we made in 21 total companies. 3 have exited, 5 are in the process. Tell us about this.
Well, basically the story of this year, as opposed to last year, is that Linku's pretty much doubled both the pace as well as the breadth of our investment activity. So as you said, we've gone from 40 to 90 investments in total in a portfolio that's gone from 10 to 21 companies. And the total number of exits, both completed as well as in process, is now up to a total of 8. So there have been 3 new names added to that exit pipeline. And those are Better and NerdWallet, both of whom have entered into SPAC mergers that are going to consummate in the coming months. And then Kraken, who have declared their intention to do an IPO either later this year or sometime next year, based on market conditions. So the returns, just based on our analysis of those 8, for our customers range everywhere from 2.2x to 13+x for the best performers in that portfolio. We have 2 names that were not so great. They're laggards. So our customers there are looking at returns that are roughly 1 to 1. And those are investments that will probably take a little more time to yield. But I think 6 out of the 8 are very, very clear winners, even at this stage.
Thanks, Joe. And you bring up a point that for me, it's always been a kind of a mystery ever since I've been investing in the angel market, the what you call the UAP or the X factor. I'm not an investment banker. First of all, I'll tell you all that, and I'm not an investment advisor. So what I'm saying here today is more about how I do it, just as an individual investor, not really advice on how to do the thing. But my background by education is math. My background in business is engineering, so I tend to do a lot of spreadsheets, a lot of calculations, and figure things out. When I first got into the angel investing world through Keiretsu Forum, linked to this proud member of Keiretsu Forum, and we own the virtual chapter of Keiretsu Forum and also create their technology. Got involved with a lot of angel investing, and one thing that I always heard was I made X, I made 5X, I made 10X, I made 2X on that deal. But I never heard I made 10X in 1 year or 2X in 20 years. It's just the X factor. And for me as an investor in real estate for so many years, I've always looked at more than just at the X factor. So I did a little math, back of the napkin math here. This is about linked to. Our first seed round was at 21 cents in 2016. We just did a tender offer last month at $1.40, and we're selling at $1.40 platform. It's also our most recent 409A from a couple of months ago. So the investors who invested at 21 cents in 2016 got a 6 2/3 return so far on their investment. If they came in the second seed round at 30 cents in 2017, they'd have a 4 2/3 X factor. And for those investors who came in last year in our A round at 40 cents, they're lagging way behind. They only have 3.5X return compared to those people who invested back in 2016, who had almost a 7% return. I never looked at investment that way in real estate. We always looked at internal rate of return because there's a time value of money. So internal rate of return takes into account the calculation of what your money is worth as it's being used. And if you're doing it in the future, you have to make certain assumptions. Of course, with this calculation, we're looking in the past, so we can start in reverse and use NPV or the net present value, because we know what that is. That's $1.40. So if you take that net present value and you back it up 5 years to 2016, what's it worth today, that investment, or 4 years to 2017, or just 1 year to last year, this is a major difference. And this has to do with a very important factor in investing in this kind of class that we're investing in, and that's about timing. Timing of when you get in the deal is very critical. If you look at the path of a private company, you start way back at the seed level, usually friends and family, maybe small angel groups. We've been heavily invested ourselves, linked to over the years in the early and late stage companies through our access to Keiretsu Forum. Many investors here today in Link2 came to us through Keiretsu Forum. But you notice this is actual graph curve from numbers. What happens when you get up into the later stages of secondary market and going to IPO? That's when you really get the hockey stick and upward curve of valuation. And so timing becomes very important, because not only does it increase the return in terms of internal rate of return, but you also have to think about the risk that's involved when you invest in a company. 90% of all startups fail. 10% fail within the first year, but the real key factor that we've been looking at is during years 2 through 5, 70% fall into that category of failure. So if you're investing in a company that's an angel investment and they haven't started yet, your chances that that's actually going to make it to the end are 1 out of 10. Whereas if you're investing the way we've been doing over the last year in companies that are very much later stage, they're much less risk. And so we believe we're de-risking the investment by waiting longer on the curve, but we're not really losing in terms of return. We're actually gaining quite a bit in return, because we don't talk about how many X we made. We look at the actual return that we made on our investment through internal rate of return. And that's one of the ways that we look at investments and classify them. So what are the 3 keys to success that we look at internally? Probably the biggest is diversification. If you had invested in Ripple last year on our platform as one of our first 4 products, you'd have a slight increase in value today, not that much. If you invested in Coinbase, you'd have like an 8 or 10x return on your investment in less than a year. But how do you know which one is going to be the one that's going to make it for the following year? And that's why we invested in 10 last year, 5 ending up going public. And that's why we're investing in the other companies that you see here on the right-hand side of the curve that we've been investing in this year, because we believe in a diversified portfolio. The second element, as I was saying earlier, is timing. When you get in the deal and when you get out of the deal are the 2 biggest factors with your rate of return and how much you'll make on the deal. And timing, a couple of people were speaking earlier about this today, and there's a bit of an art to that timing, there's a bit of a science to that timing, but the holy grail, or the timing that would be the perfect timing, is if you bought into something and it hadn't announced something big yet, and then the next day they were saying it got announced, because by the time you wait for somebody to announce for something, then the price starts skyrocketing. And remember, in the secondary market, it's not like you can go out and just buy it the next day. You still have to go through the ROFR period. You still have to contract for it. You still have to get it. Link has been caught on both ends of that spectrum. We invested in a lot of companies in 2020 that were at a very low price when we contracted for them, and by the time we closed, they'd already gone up substantially in value, and we had the lower closing price, which is why we've been able to offer our own investors some very good deals in those marketplaces, because we contracted for them months before they come up on the platform. The opposite has happened to us. During the froth in the market, all of our customers are asking us for particular products. We go out and contract with them. We have to close them. 2-3 months later, market may have changed and maybe we bought for too much. The advantage to our investors, they don't have to buy that stuff. If we buy it, we sit on it. We bought a Marquetta block that was, our purchase price was $10 more than the current price. You guys never even saw that. It didn't even go up on the platform. Because by the time we got it, by the time we closed it, we knew it was overpriced, and we're not going to overprice things to our investors. But because we're in for the long, and because we buy so much of everything in so many different series, our average price in Marquetta is still lower than its current market price. So as a company, we're not losing out on that Marquetta deal. We only lost out on that one transaction. Diversification, buying into the deal over and over again. If you believe in a company, it's because they have good bones. Probably the biggest thing we look at, what are the bones of the company? Are they making money? Do they have revenue? Are they profitable? We're in it for the long. We buy these things and we don't get out until they become liquid. So they end up being good investments for us, even if they're not hot today, so long as the company keeps increasing its revenue and making money going forward. That's a very important part of what we look at. And then the third piece, in terms of keys to success, is specialization. I advise everyone to look at things you understand. So you'll notice on the left-hand side, this was my time when I was buying. All those deals fit into either fintech or blockchain. And that happens to be my background in engineering, building fintech and blockchain applications. So I knew the companies. I knew a lot of the people in the companies. That was important to specialize in that area, because I don't know a lot about the other companies on the right. Companies on the right were venturing now into different verticals than we were in last year, but we have a lot of great investment advice now coming in. Through our new investment team, we're still specializing though, because we're still specializing in that pre-IPO market. We're still specializing in a certain narrow market that we believe in. Sometimes it changes a little, like security scorecard that we just got in last week. The new cybersecurity issues that have been coming out with the pipeline and various attacks is making that a hot industry. So we're looking at a few others of that type as well. So I think part of this is maybe let's look at what diversification can do for you. I just took this morning. This was random snapshot of it. This is a snapshot of an actual portfolio of one of the investors I'm linked to. We won't tell you the name. I'll use the pronouns he, his, him, even though this could be female or male. But he invested just under $300,000 so far on the Link2 platform, which is an average of about $22,000 per company. Coinbase already returned his investment of $78,125 for the $10,000 investment that he made last fall. And he also has Acorns, Robinhood, and Better.com that are exiting. This is an example of a pretty good portfolio. And if you diversify your portfolio, a piece of advice, although I'm not an advisor, it's just my own advice. I believe in diversification, and I'd rather get 10 things at 10 grand if I've got $100,000 allocation to this asset class than put all 100,000 into one. It's your own investment style. And some people are different. If you had put 100,000 into Coinbase last year, you'd have been a huge winner. But if you put $100,000 into something else that didn't get this list or wasn't as good, maybe you wouldn't have done as well. So diversification really helps for you to get a better return on your total investment. And we're helping with that, right? So we've got the pick the winner contest that's going on today. If you want to put up the poll again, Grim or Mike, what we've told people today that are here is choose which one of these companies you think will be the next one to exit. By exit, it could be an IPO, it could be a SPAC, it could be a direct listing, it could be an acquisition, but whichever one is next to exit, we're keeping track of this and we have your name on which one you voted on. if that one is the next one to exit, you will get a $1,000 credit on any investment you make linked to. So be sure to vote because it can lead to a $1,000 credit. So that's one of the things that we've got going on today, which has to do with picking the winners. The other piece really is about how we want everyone to be involved a little more with diversification. And so for this one, what we've said since the beginning of the day is today, if you invest in any product that isn't in your current portfolio, so if you're a new person, it's any product. If you're an existing member, it's any product that's not in your portfolio, you'll get a $1,000 credit for that purchase. We don't have this built into it. We just decided to do this a couple of days ago. So it's not built in programmatically, but we will refund to your wallet. We've already done it a few times today. People bought with their wallet. We can do an immediate refund, get you back $1,000. Or if you do it via a wire, just send us $1,000 less. Or if you forget that, we'll send $1,000 back. But you get a $1,000 credit per purchase for anything that's not in your current portfolio. And that also applies to multiple purchases. So if you buy 5 different things that aren't in your portfolio, you get $1,000 credit for each of those 5. I think, Joe, that, I mean, I've been a little, I mean, to be too long-winded here, but that's really kind of where the philosophy is, how we think, or at least how I thought about investing last year. I'm learning a lot. This is teaching me a lot, not just you, but coming to the conferences, coming to the luncheon, listening to people like Greg and JP and others. You know, we're here today talking about things. Stephen has been a stalwart in terms of advice, lots of advice from lots of great people on the team. You've done a great job, Joe. That team, the community that you've built up, it's different. We've been in a lot of different investment vehicles, but this really feels like a community because we're all in it together. And that's a critical piece of what makes us about. Thank you, Joe.
Absolutely. So thank you for those insights, Bill. And we continue, to share that idea of IRR discipline in terms of driving our investment decisions. So I can tell everybody that's a customer that there's no doubt that that's going to be a hallmark of our investment philosophy going forward. In terms of what you said about specialization, there's not enough of a life in either you or me for us to be able to learn everything we need to learn about some of the sectors that are emerging and investment worthy. But what we do have time to do, and what we're currently in the process of doing, is that we now have a big enough community, a base of customers and investors who have specializations and talents and expertise in areas that we don't have, Bill. And I can tell you that very soon, after this conference, we'll begin to form effectively an advisory council that's called for members of our community that have expertise in some of those areas. I was just, for example, last week talking to one of our members who is a software engineer, and in his professional work is actually in the process of doing some implementations of supply chain management software for a couple of Fortune 500 companies. The vendors of those systems are some of the hottest unicorns today. Now, that's a space I don't know anything about, but this guy who's our customer does, and he's actually working hands-on on these implementation projects. So he's going to be part of our advisory council and will be able to help us, identify companies of that ilk. So I want to share that with our customers as well. And in the coming days, please come to me or the other members of the sales and investments team that you feel that's something you'd like to participate in and contribute to, because we would dearly welcome it.
Thank you, Joe. Thank you, Bill. That was great to see the progress we've made. There's a question out here which I'm going to ask you, which is, what's Link2's long-term exit strategy?
Yeah, I saw that one there too, Grim. That's a good question, and I'll answer it with a real answer. Our long-term exit strategy is that no one will ever have to ask the question again of us or any private company when they're going to exit. our total goal is to provide liquidity in the private sector so you can get in and out without the company having to exit. And we're moving toward that. We've already got the first half of it done with getting in. We're going through our application now for an ATS, and there will come a time when people will be able to trade in and out. And we hope that Link2 will never have to exit. Matter of fact, last month, we did a tender offer. We did our first liquidity event for our Link2 shareholders, a tender offer. Link2 Liquid Shares LLC purchased $1.4 million worth of shares from some of our shareholders. So we wanted to get some early liquidity. We're going to be doing more of that with Link2, and I would assume the way we're skyrocketing right now and going, the exit wouldn't be long away anyway. It's just, we hope that people don't have to think about that in the future.
Good. Thank you so much. So I'm going to ask you, I'm going to put both of you on the spot as well today to choose out of the list that we have on a poll which one you think is going to exit next. And the winner of that poll will get Matthew Lemurle's new book, The Intelligent Investor, Silicon Valley, Practical Wisdoms for Investors and Entrepreneurs from 50 Leading Silicon Valley Angels. So that will be the gift in addition to the winning gift of $1,000 credit. But Joe and Bill, tell us what you think. Bill, and then Joe, tell us what you think will be the next company that's going liquid on our list.
I don't want to like influence our voters on what they.
Well, they've voted already.
Okay, but I would. Joe's already put Kraken on the list because they've announced something. So I won't use that one. But I have a feeling it's going to be Ripple, simply because they announced they were going to do an IPO in January at Davos of last year, 2020, and the only reason they didn't do it when all the rest were doing it was because of the SEC thing that's going on. So that's a coin toss. If the SEC thing got resolved quickly, I think they'd be going quickly to IPO. If it doesn't, they're going to wait because they don't want that stain as they're waiting. It's my guess. Joe, do you have a guess?
I think that it's close. For me, I would pick Uphold by a narrow margin, simply because, not because I don't think Ripple's going to do what you're talking about, Bill, and not that I don't expect the situation will be as you described. But the one thing I know about the SEC is that they're not fast. And they can't do two things at the same time, meaning they're not going to be able to review and approve a registration statement filed by Ripple until they get done with the first thing on their plate, which is settling this outstanding enforcement action. So given that, I think they'll be a little slower than Uphold. But, that's my speculation.
Thank you, Joe. Thank you, Bill. As Mike pulls up the results, or gives us the results of the voting, there you go. Ripple there. So anyone who voted for Ripple gets Matthew Lemurle's book. It's all about education. So anyone that registered for that, thank you so much. We'll see you later. Bill, Joe, thank you. Oh, by the way, Joe is speaking with the Managing Director of Kraken this evening, and they'll be talking about various interesting topics. So if you're around, please join us. That event will take place at 5 o'clock Pacific time. So join us for that. Matthew Lemurle, I'd like to introduce you and your guest, James Zhang. Matthew Lemurle, a published author for several books, which we gave away some of today, Matthew. Just Matthew's been a fan, a great supporter, advisor to Link2. We thank you for all your support. Thank you for bringing James along. I could say so many good things about you, Matthew, and I'll start with Investor. Blockchain Co-Investors is on our platform for all of you guys who want to invest in a variety of investments. Will go with Blockchain Co-Investors. That's an investor, a fund of funds. We'll let you introduce yourself, Matthew, a little bit, and then James, and talk about NFTs and what that looks like. I remember a year and a half ago when we were talking about NFTs, people didn't even know that acronym. Now, everyone seems to be talking about it. So tell us, Matt, take it away from here, and help us keep up with time, and you have to 2 o'clock. Thank you.
Well, thank you, and it's great to be here again, and it's wonderful to see the great progress. 5 out of 10 already going public of that initial crop is quite amazing, or at least announcing that they're going to go public. That's quite amazing. Kareem asked me what my tip was for the next one up. And let me just say this, IPOs take a long time, SPACs move really fast. So if any of the companies currently on the platform is in discussions with a SPAC, that would be my top choice for who's going to go public first, and I'll just leave it at that. So who are we? I'm Mahmood, and with Blockchain Co-Investors, we're the leading blockchain fund of funds. So we're invested in the top 25 blockchain VCs globally. It means we're invested in approaching 400 blockchain companies and projects. So as Bill said, if you want diversification, our Fund 3 is currently on the Link2 platform, and you can make a small investment, and Fund 3 will be diversified on a global basis across about 250 plus blockchain opportunities. So we believe in diversification too. I'm not here today, however, to talk about blockchain co-investors. We're here to talk about NFTs. And when Kareem asked me to put together this session, I started off thinking I'd bring a panel, and then decided that given the time we have and the complexity of the topic, what I'd do instead is bring one of the leading CEOs of a NFT company, and we do a fireside chat. So that's what we're going to do. So James Chang is that person. Now, for full disclosure, James and I have known each other for a long, long time. We've actually worked together on and off for, it's more than 10 years now. But James is one of the leaders in the NFT space. And so, James, why don't I ask you first just to briefly introduce Concept Art House and yourself, and then we'll go through the questions about NFTs.
Sure. Hi. Thank you for inviting me. It's an honor. I'm James. I've been in games industry for 20 years as an artist, art director, entrepreneur. I've had 5 exits as either advisor or founder. I'm a blockchain investor myself. For Concept Art House, we've been delivering top digital assets and art for the games industry for the past 13 years. Over 1,000 games shipped. Our current partners and clients include Blizzard, Roblox, Call of Duty with Activision, Marvel, just a bunch of really big games. And then Concept Art House raised some funding, which we'll talk about, and we created Crypto Art House towards the end of last year. And we are creators of NFTs and NFT games. And I'll go into some of those later.
Thanks, James. And just tell us, the audience, a little bit about some of the other NFT companies that have partnered or invested in Concept Art House, just so that they get a sense of how connected and central you are in the ecosystem.
Sure, great, thanks. Yeah, we have 4, I think at least one of them you guys are familiar with. We have 4 companies / protocols that are over $1 billion in valuation backed Concept Art House, including Animoca. They recently announced their funding at $1 billion valuation. Animoca has backed quite a lot of projects in the NFT space, including Dapper Labs and CryptoKitties. Gala Games is quietly creating a really impressive NFT engine. This is the co-founder of Zynga about 8 years ago. We've known each other a long time. So Gala Games, co-founder of Zynga. Before that, he was co-founder of MySpace. That's the second one. Third company is Greg Kidd and Hard Yaka, like many of you may know. He's an early investor, co-founder of Ripple, and first money in Coinbase, first money in Filecoin, I believe. And then we have Kevin Chu and Holly Liu, who are co-founders of Kabam, which was another, they exited Kabam, which was a $1 billion exit for them. They're creators of 2 massive blockchain companies, Forte, and which is now a $1 billion company, and the other one is Rally. So those are some of our investors, but we have a lot of really good angels as well.
Thanks, James. And as we'll talk about in a minute, when we talk about NFTs, you have to be connected into the ecosystem. Both many of these projects are collaborative projects, but the distribution has to go out over multiple platforms. And the analogy here is if you'd created Bitcoin, you wouldn't want to just sell Bitcoin at one exchange. You want to sell it across all exchanges. So when you create NFTs, you want your NFTs to be interoperable and you want them to be available across all platforms. And James has knitted together that ecosystem already. So now, I don't want to begin with NFTs because that is sort of confusing to a lot of people. So why don't we just turn the clock back 20 years to get started? And let's talk about digital assets more broadly. You know, you've been working with digital assets for 20 years in the video game industry. What are digital assets and why are they so important in the worlds of virtual games and video games?
Got it. What a huge question. I mean, video games by nature, entire video game thing is a digital asset, and all the other things you do or buy or level up or get in a game are digital assets. So I guess the best way I want to answer you is, okay, so if you play a game today or if you have kids that play games, anything you do or buy in Fortnite are digital assets, obviously. Those of you that have kids of appropriate age, you look at Roblox, all digital assets. So these are all NFTs before they were NFTs. So for me, a personal identity with this is just my experience of playing World of Warcraft and spending so much time into it. I knew when I finished, you know, I played the game pretty hardcore for about a year. At the end of that, I'd spent so many days developing my character. I knew it was worth money, had no way of, the only way I could sell it was to get on eBay and potentially sell it. But I knew that character was worth money and I had personal emotional ties to it. So I'll kind of leave that there. But many people today, even if you're not involved in the NFT space, you develop a personal connection with your digital assets, whether it's Counter-Strike or the character you're leveling up in World of Warcraft.
Okay, thanks, James. So let's just double click on this just a little bit. So for 20 years, we've had digital assets and virtual currencies in video games and virtual worlds. And as you point out, they were not easy to trade. And at least at the beginning, you couldn't really do it outside the game. Now, for those of you who have long memories, secondary markets did start springing up. And Brock Pierce, who is probably one of the most famous figures in the blockchain world, cut his teeth on building secondary markets for World of Warcraft digital assets. James, just explain for a moment how you might have taken a digital asset from, say, World of Warcraft and sold it to someone else on a digital platform outside the game. Just how might that have worked?
That's really funny. I had a chat with Bart Stevens on the same topic. We both had the same experience with WoW Gold, really. So I was, gosh, the year was 2005 when I was really into WoW. I was so busy as a VP. I really wanted to advance. I was the main tank. Basically, I was a really important person in my guild with my real life friends. And I had two choices of how to have a really competitive high level character. I could spend nonstop 2 weeks grinding away, but I was a VP of this company, or I could just go on eBay and buy gold. So I went on eBay and bought gold, and some of my friends laughed at me, but it was absolutely the right thing to do. So you'd have to buy it and trust that somebody is going to go into the game and mail you this 2,000 gold pieces that you pay real money for. There are people like Bart Stevens that saw that and they created an entire secondary market. I don't remember what the company was called, but they were gold farmers. They were almost, you could almost say they were mining for Bitcoin before it was Bitcoin. So I think that's what paved the way and built in the experience that they had later on when Bitcoin became a thing.
Thank you, James. And
happy to double more with that.
No, we're going to keep on going, but the reason we're going down this thread is because I think a lot of the 100+ investors listening in right now don't really understand that crypto assets and digital assets have been around for 20 years, and that there are people who are very expert at mining them, buying and selling them, distributing them. And those are the same people that are creating some of the protocols and the platforms that are now trading on Link2. But let's keep on going. So now blockchain did change this a little bit, because before we had to trust that the game maker limited the number of the assets they created. And we trusted that they did that. These are digital assets, so theoretically, you could replicate them ad infinitum. But we trusted that there were a limited number of these assets within the game. But blockchain nails down that trust, because when we attach a digital asset to the blockchain, which is what we call an NFT, a non-fungible token, we limit its ability to be copied and we make it scarce. So just give us some examples, James, of just how much people would pay for a scarce digital asset in a game or in a virtual world. Just some examples so people here understand that people really value these things.
Sure, and I encourage everyone to, there's quite a lot out there. And I find it very interesting if you're into the collections culture. But the thing that I would start with is definitely the default piece. It was $69 million. I'm sure everybody saw that. If you, yeah, that's the top NFT in my mind that's sold. One of our investors, Gala Games, they made headlines in Wall Street Journal selling a castle for $1.6 million. And people who think that's crazy, or is it a smart investment, time will tell. The thesis behind the purchase of $1.6 million castle, what if I told you that castle was Winterfell in Game of Thrones, and that it's a real game, and that you become the lord of that castle and you can earn currency or tokens by leasing out your land? Then it starts to look a little different. Then you have the Jack Dorsey's tweet that sold for quite a lot of money. And another product I'll point you to would be NBA Top Shots. Yeah, definitely. So in terms of volume and revenue generated, that game has generated over 600 million revenue from January to now. And it's collecting digital basketball cards. The top card has sold for over $200,000. Why? Well, it's part of culture. Synonymous to that, earlier this year, the Tom Brady rookie card sold for $2.5 million. That was a piece of cardboard. Was that cardboard worth the money, or was it the belief and the culture and the prestige that came with that cardboard? So, yeah, so I do want to talk about culture and prestige in a second, but those are just some examples of the kind of activity that are happening in NFTs. And I would encourage you to think about art and collectibles as one bucket, and then NFT assets as part of a game as another bucket. And both of those are exciting territories.
Yeah, that's really good, James. So just for the audience again, James passed very quickly through multiple examples then. You might own a piece of art that you put on your wall. You don't have any challenge believing that's worth a lot. You might own a baseball card and you're not challenged believing that that's worth a lot. And, James has basically just given you live examples of digital versions, NFT versions of exactly the same things. They're just born digital. So they are born digital instead of being born physical, but the concepts and the rationale for their value are the same. So James, moving along, what are some examples? I know that you're working on a couple of big IPs right now. I hope that you can share a little bit about them. I'm not sure if you're under NDA or not, but what are the biggest IPs, intellectual properties, or brands or sports teams that have already embraced NFTs? And what are a couple of things you're working on?
Got it. Cool. I know we're on limited time too, so I'm flying through this, but I'll leave my email and people can ask me questions if you're interested. This is absolutely made for sports, from ticketing systems. Like, think about it. You go to I'm in the San Francisco Bay Area, we're Giants fans here, but imagine you could have a digital virtual ticket. And if something exciting happens in a playoff, and those tickets are worth, I have some Super Bowl tickets behind me. So that's a huge opportunity. Obviously, trading cards have been around forever. NBA Top Shots tapped into that. So the entire sports franchise is super excited about blockchain and NFTs because of the scarcity and the collectability of it. The other thing is the direct access to the celebrities and athletes is very exciting for them. Look at what Panio has done, right? Now you can pay $500 for Mike Tyson to sing happy birthday to your kid. It's 1 minute for him, but it gives fans a direct way to participate. So blockchain in many ways is activating that aspect. So right now, NBA is obviously all in. If you look deeper at who developed an NBA game, it's Dapper Labs, the creator of CryptoKitties. Their next title is UFC, which is actually a game we're working on, and they've given us permission to talk openly about that. That's very exciting. It's not just collecting UFC fighters, it's having a utility to it. So if you collect an NFT, that has a function within the game. If you look at Muhammad Ali has a NFT drop, the Golden State Warriors did a great drop just commemorating their 56-year history. So the sports brands are almost all into it in one way or another. Disney and DC have kind of put their stakes in there. They've sent cease and desist letters from anybody that's copying Disney work without even without getting permission. And then you have a lot of celebrities like Post Malone, the D'Angelo twins, all looking into it. And then musicians are very excited about the NFT space as well. And I would, you can look at following the money, as CAA is one of the 4 biggest agents in Hollywood, just working with directors and actors. They have their own fund investing specifically into blockchain NFT space. Same for A16Z, same thing for United Talent Agency, Endeavor, and so on.
Great, thanks, James. So let's just talk about how big this can be. So, you and I know that the world's largest video games are huge cash machines. The video game industry today is bigger than the film industry, the TV industry, the book industry, and the news industry combined. And a really, really big video game like, to use an example like Fortnite, Fortnite will have hundreds of millions of users around the world. I have no idea. Do you have any idea of what the global revenue of a really big game like Fortnite would be, James?
It's billions a year. I know Call of Duty Mobile is making $1 billion a quarter. So that's $1 billion a quarter. Yes. Right.
So it's
biggest games. Correct.
Yeah. So for people who aren't in this space, these numbers are huge. $1 billion a quarter is a very big profit stream. Do you have any idea around, are you allowed to share any idea around Dapper Labs and the NBA Top Shot game?
Yeah, well, I would encourage you to look at DApp Radar. That's decentralized application, DAPPradar.com if you're curious. And the top projects you can sort according to NFTs, according to games. It's not the whole stories, but it's largely accurate. $600 million in 6 months is pretty strong for a collectibles game. And I think we're just at the tipping point of that. I know Tim Sweeney himself is looking deeply into the blockchain space. I know one of our partners is already generating $1 million a day in revenues from their NFT projects, from their NFT sales. And I also want to talk about, today is a pretty tough day for Bitcoin overall. But if you look at NFT sales, there is a correlation, but it's largely resistant to what the cryptocurrencies are doing. It is a different thing.
Yes. Yeah, and those numbers are really, really pretty amazing. I should say, for full disclosure, we, in addition to being investors in Concept Art House, Animoca, Galaxy NFT, and so on, we're actually also investors in DApp Radar. So I just wanted to get that out of the way. All right, so the revenue is flowing now. The amounts are very, very large. How do you, as someone like Concept Art House, how do you get revenue shares and royalties out of participating in this space when you partner with a Dapper Labs or a Galaxy and so on? How do you make money, James?
Yeah, so we have 5 auctions coming out across 4 different marketplaces. We have our forecasts, which are all based on who's buying our NFTs. It's very cool to look into this space of collectors. These are early speculators, gamers, who did really well with taking risks in crypto. And they want to buy a piece of culture. That is why people are buying the Top Shots, and why I believe they will buy our UFC game and assets. I don't want to get too granular into actual game creation, but those are reasons Dapper selected us, and those are reasons some of the top artists selected us. The top artists, I'll mention one. Frank Miller was the guy that made Batman who he is today. He's been a legend in comic book art for 40 years. We're doing his NFT drop around Sin City, around 300, and maybe one day we'll get to do Batman. He's already rich and famous. He's already had every marketplace wanting to work with him, but he selected us because he knew we understood art and the creativity around it. So we're doing cool things like taking issue 1 of Sin City and animating it and making Frank's legacy more current to today's virtual audience. We flip a switch onto the game side with UFC, NBA Top Shot is collections. It was intended to be game. They never quite got there with the game. They hired us, and now we're partners to bring a game onto what NBA Top Shot already is. So when you collect these little moments of like a LeBron James dunk. So imagine in UFC, you're collecting a Conor McGregor knockout, and there's a game where you can equip that video knockout, and it gives you +3 to power to win the fight. And if you're in the top of the leaderboards, you're winning tokens or potentially cash prizes or NFTs, or you get access to the top fighters. So there's all kinds of utility around this. So the people that believe in NFTs and games believe this is the future. Access to celebrities, athletes, brands, and there's a lot of utility and value created behind digital assets that you own. I don't know if that was too long of an answer, but no, we participate because I think we've been creating digital assets for we've probably created like over 1 million illustrations, digital assets, 3D models, many of them you or your kids play. We're in the center between these super complex protocols that are not yet artist friendly and artist communities that don't know how to create amazing NFTs. So we're at that intersection point. That's why our investors believe in us.
Yes, and I'm aware, and we don't have time today to talk about it, but I also know several of the world's largest protocols.
I love that
partnering. Are partnering with you, and it's part of the reason Greg Kidd's involved. Greg believes that Concept Art House can really be a layer that allows protocols as well as things like Global ID to really reach much broader audiences in fun and engaging ways. So we've only got a couple of minutes left. So NFTs, there's 2 ways to invest in NFTs. One of them is to buy NFTs, and the other is to invest in the businesses that are building the infrastructure around NFTs. And in that sense, it's exactly the same as crypto. You can pick your crypto assets, you can buy your XRP or your Bitcoin, or you can invest in the businesses that are building out the infrastructure, which are the Upholds, the Link-Tos, and so on. Now, on Link-To, we've got a lot actually right now of blockchain infrastructure companies, but I actually don't think there's an NFT company today on the Link-To platform. So James, if any of the investors here listening in right now, if they wanted to invest into an NFT infrastructure company, how would they do that? How would they go about doing that?
You mean angel list direct investments or into Link-To, or?
Well, just generically, I mean, if people want to invest in a Gala or a Concept Art House or Animoca for that matter, how do you do that today? They're not on the Link-To platform, so in practice, how do you do it?
There could be secondary stock transactions. It could be angel list syndicates, and there's quite a number of them out there. Yeah, so I'm actually not an expert in talking about that. I mean, we're speaking with a whole group of, we have a number of syndicates that we talk to, and we have a group of Y Combinator people interested that we speak with, but it's usually not direct.
Okay, all right. So for the purposes of today, that's to do. Bill and Joe, I know you're listening in. Hopefully this has given the audience a good sense of what are NFTs and why do we think they're such a value creation opportunity. James has volunteered to be available for people with questions, and we'll share his email to Virginia. Maybe we need to figure out how to get an NFT company or two onto the Link-To platform, so the Link-To audience can invest into this space. And James, do you have any other closing thoughts you'd like to share? I know that this is a real passion of yours.
Yeah.
So any last thoughts?
I do. I have 2 thoughts. So I have 2 thoughts I want to share really quickly. One is if you are tuned in to what's going on with NFTs, non-fungible tokens, and there is a decline of activity and purchasing of NFTs, and people ask me all the time, what does that mean? Are you afraid? No, I think it's a great thing. I think it's a great parsing out of the lower quality NFTs that just want to take advantage of the hype. I think the high quality NFTs are absolutely here to stay. just look at most of your Pokemon cards are not really worth money. Most of the videos on YouTube are not very good. Most of the games you can even download in the App Store are not good. But the top 10% is huge value creation and it's all culture. So that's my thought to NFTs, and I do believe they're here to stay. The second thing I want to leave is it's really about culture. And I've had long conversations. The guy, his name is Metacoven, the guy that paid $69 million for the NFT. Why? He's got some brilliant thoughts around this, but really it's about participation in culture. And I'll kind of like leave you with this. There was somebody on NetEase that mentioned this. I think right now we're in a transition between the physical good and the virtual world. So the question I've posed to people that don't understand NFTs, I say, what's more painful to you? To lose all the photos in your photo album in your house or all the photos on your phone? And the point I'm trying to make is the attachment we have now to our virtual goods is perhaps more important than our attachment to the physical goods. And NFTs are a way to make digital assets truly ownable and scarce. That's why I think NFTs really matter. And before, this technology couldn't do that. A JPEG was just a JPEG. Now it creates that scarcity. So when you're buying a piece of art, you're buying into the virtual culture. And you have to have the collector genes, you either collected comic books or you didn't. And if you collected comic books back then when they were physical, you still had that gene collected digital. And that's why these things have sustained value. And why Tom Brady rookie cards are still going for $2.5 million and comic books are still worth money. In the future, those comics will simply be digital. And the way that they're scarce and unique and ownable is through the NFT and the blockchain technology. And that's why I have a long-term view on this space. So I thought it was important to share.
Thanks, James. I think that's very thought-provoking. We have used up our time. As always, it's great to be at Link 2. We're big believers and backers of Link 2 ourselves. Blockchain Co-Investors is on the platform, even though there are no NFT companies on the platform, but Blockchain Co-Investors is, and we are investors in Animoca and Gala and Forte and Dapper Labs, Super Rare, OpenSea, Concept Art House and others. So maybe that's a backdoor way to get some NFT exposure. But we'll put our heads together with Kareem and Bill and Joe, and we'll figure out if we can't get some NFT companies up on the platform as well. And with that, let me pass you back. Let's pass this back to Kareem. I don't know if you have any questions for James. Kareem, do you?
There is one question on the Q&A that is there no token or coins to invest in NFTs?
Oh, there's so many.
Okay, there you go. That's the answer.
Tokens. They are jostling for position, and there's enormous value creation depending on the token and thesis behind it. But it's very, very, very nuanced. There's a technology component, there's a speed and transaction security component, there's a discoverability component, a usability component. So there's a lot to it, but I would encourage you to follow some of the leading investors in the world, and we've had the fortune through Blockchain Co-Investor to back some of those investors. So there's a lot of ways to find out which tokens are worth betting on.
Thank you so much, Matthew. Thank you so much.
Thanks, Matthew. Thanks, everyone.
Blockchain Co-Investors is a great back door, as you've heard. You'd like a front door, James.
Thank you.
So what we'd like to do is have you back on a Link to Learn where we can get more in depth into this business model and explore that a little bit more. And I'm sure we'll talk a little bit more about how we can bring some investable opportunities to our investors here with us. Thank you, Matthew. Thank you, James.
Thank you.
Moving on to the next panel, Arnold Herr will be with Ryan Dare. Arnold, by the way, was a protege of Kevin Shah when we were talking about Kablam and Rally.io. And we've had him on before. We've done a great podcast with Arnold. It's great information. And we're very happy to have Ryan Day here today with us. And we're going to be talking about the global future of gaming investments and what that looks like and what that means. So thank you both, Arnold and Ryan Day, for being here today. And I'll leave it up to you to introduce yourselves, just because you have such a deep background, and we're looking forward to hearing that. Thank you.
Yeah, sure. It's also Evan, and his handle is Rain Day. But he can introduce himself when because he has a much more interesting story than I do. But just real quick, my name is Arnold Turner. I'm the COO and co-president of Genji. We're a global esports organization that operates teams with offices all around the world, including Shanghai, Los Angeles, and Seoul. And we also have a huge educational arm that basically helps teach the next generation of big gamers, helps them get esports scholarships, and is heavily involved in the edtech space. But the more interesting thing, and I think it's a good segue with the previous segment, and this is why I brought Evan in, who I think is one of the smartest people within the gaming and gaming culture space, because he's kind of been through it all, is really understanding that culture is leading a lot of these changes that are happening on the tech side that I think can, help lead to interesting investment opportunities. And that's where I wanted to kind of focus in on the culture aspect, as well as open up a bunch of questions, because I think Evan has probably the most balanced view of this crazy world that doesn't make that much sense. But before I go too deep into it, I want Evan, why don't you introduce yourself and kind of your background and how you got into the gaming space? Because I think it's helpful to kind of, especially to this crowd, to know that all sorts of folks have come into this space and are doing really cool things.
Yeah, thanks, Arnold. I appreciate it, and it's good to be here today. I got into gaming through loving games growing up. I mean, my dad and I and my family, we'd go to Vegas, visit my cousins for 2 weeks, and I would not get off the PlayStation the entire time I was there. But it didn't intersect until later on in my life. I was a soccer player. I played for the U17, U18 national team, and I went to UCLA for 4 years. I was drafted to DC United in the MLS. And at that point, I looked at the actual business of Major League Soccer at that time, which was about 10 years ago. And entry-level starting positions were really around $40,000 if anybody's going to try to grind up. And the ceiling wasn't too high, where all-stars were only making around $100,000 in comparison to the NBA or the NFL. So for me, always kind of being multifaceted and having this passion for gaming, I kind of went and said, how can I turn another side of me into something that's financially successful, but it's also something I love to do. Because when you're you play sports, I think you live a life where you're doing what you love as your job, and that's something I wanted to continue. And it kind of lies into the culture he mentioned, where I think a lot more younger individuals, especially between 6 and 30, have this idea in their mind of this is the space I want to conquer, the digital space, versus necessarily something that's happening, in the physical world. And so I set apart to this idea of combining sports and building content to get an opportunity there. I love sports. I wanted to broadcast sports. And I thought, how can I do that? I don't know anything, but I would hear these people broadcasting video games. And, Arnold may talk about it, but we have a lot of teams in League of Legends. People getting paid millions of dollars to play, and there are announcers announcing that action. And I thought, wow, what a cool way to bridge my gaming love and my sports background to start doing that. And so I built a YouTube channel just to check it out, just to start getting into that space, try to get on the eyeballs of people in the gaming industry. And at about 50,000 subscribers, I got a call. They said, come down. We lost some casters. We saw you did your own tournament. And I ended up actually being flown down, offered the job right away. And that started my esports broadcasting journey alongside my content creation. So over the last 5-6 years, I've not only been building YouTube, but I think TikTok recently, which is an interesting point a lot of people aren't on, which is I think is something you should pay attention to about 600,000 followers across all my channels, but also learning the craft of esports broadcasting for major tournaments. And we just finished, I don't know if you're familiar with Apex Legends, but it's a similar title to Fortnite in terms of a battle royale. We just finished a $2.5 million tournament a week ago, and I was broadcasting all of that. So the opportunities to suddenly unfold into a space that didn't seem to exist is kind of been my journey. It's been an interesting one, but it's kind of brought me back to some of my roots of my passions when they first started.
Yeah, and I think, by the way, I think Evan is being very humble. Like, this guy has basically 400,000 YouTube subs. He's one of the most well-known people within the gaming content creator space. But one thing that's really interesting is that, you're considered by some, not by me, because I think I'm older than you. Yeah, no. But you've seen kind of, you're able to kind of bounce back between the folks that are, that have no idea this whole gigantic subculture exists, like a lot of folks maybe that are listening in today. versus you're also engaging with a very young audience that that you have to kind of interact with. Like, what have you seen in terms of that divide of like trying to explain gaming to some of the older folks versus when you're talking to these younger folks and they're talking about stuff maybe even we don't understand?
Yeah, I mean, it's actually quite interesting being in the middle of that, because I think TikTok is a platform that represents everyone who is a generation of younger than me coming up and making content that I've had to journey to understand and catch up with, which is kind of what content creators do. You have to be thinking ahead of the space and interacting with it in a way that feels endemic and natural to that space. And that's been a great journey. I've learned a lot, but also I think, even moments going to family reunions or visiting my girlfriend, her brother got married, and so I was meeting a lot of family. Explaining what I do, I have to wait to be like, okay, this is gonna be 15 minutes before they understand a little bit of it. And I think that to me is the opportunity, because there's so many people who are in positions to leverage the content, the audience, the brand value, and I think the communities that these creators have gone out on their own and built from scratch that love them. For people who have the ability to take advantage of that and utilize, hey, here's this person who people love and listen to. Here's this product I want in this gaming space of, males who are 22 to 45 and 65% in the United States. And I want to mesh those two in a way that's more cost effective and more impactful than I've ever done. And that hasn't clicked for a lot of people yet. And I still have to have meetings with, Linksys to say, guys, this is not how you should do this. And they'll say, okay, all right, fine. But, working with other brands like Best Buy, and we've done a lot of stuff with McDonald's, I love partners that get that there's this interaction between, there's something we don't know that we can help you unlock to tap into an audience that we want. And I think that communication between brands and generations is a lot tougher without, even like what we were mentioning with Dapper and being the intersection between the artist and the money and not being able to kind of connect both of those talented things without the middleman. I think content creators are really the next generation of being able to connect brands with the specific niches that they're looking for.
Yeah, I think one thing we've noticed from our side as we talk to a lot of these brands is that a lot of the folks that are the trigger man or the trigger woman for these investment decisions, whether it's on the investment side or on the marketing front, they have to really they have to really stretch themselves to understand the gaming space because they never grew up with it, right? It just wasn't something native to them. So I see that big gap, but I do see a lot of things changing. But I guess, I think, you've always been incredible, and that's one of the reasons why I wanted to bring you to this panel is, Evan's always been the one that has helped us as we help introduce brands into the space. But maybe it'd be helpful to kind of understand, you don't have to name names, but like, what are examples of ones that, worked out really well because they understood it, you do something cool, versus what are the ones that, man, this brand just doesn't get it, and they probably spent a lot of money doing something that didn't make any sense. Like, help us understand.
So I think one of the biggest, let's start with mistakes. I think the biggest mistake is saying that I've seen a lot of really top people in marketing decisions in big companies, and I won't name them, but I've been on panels recently because I work a lot with Google and YouTube, and I've been on a few panels with some big name brands that have come in to talk about what they're looking for in creators. And I heard a lot on those, what they want creators to do for them, and not a lot of how do we make this feel natural. I think there's this big disconnect with, and when you have budgets that are hundreds of millions of dollars and you have worked your whole life to get there, your stuff, it is hard to go into a space where, hey, this person, he's got $500,000 or whatever, but he's a young guy, he doesn't quite know, here, just read this copy, do what we're doing, let's just hit the notes. And to me, that's the stuff that never works. That's the one-time paycheck and nobody cares. Everyone moves on with their life. And I think that is, to me, just such a missed opportunity, because I think really what makes somebody in my community relate to my brands is when it's holistic, when it's a lifestyle choice, when it's something that I like, that is supporting my communities. I'm pitching projects and shows now to brands to say, I want to make a difference. I want to get diversity involved. I want to change people's lives. $5,000 for me to play your game for 30 seconds doesn't mean anything. But if I go out and give $5,000, $1,000 each to new starting consumers who are trying to become, just pay their bills, get an extra, couple hundred a month, and we get those reactions and we turn that into a video, not only does that change those 5 streamers' lives who could become big, but I think it creates this love of that brand that was responsible for it. And I'm seeing it happen very, very quickly. And I know Dr. Pepper is getting into a couple of things that I said, wow, I've had that idea. I've pitched that idea and people didn't get back to me quickly. And now that's got 200,000 views. People are loving it, looking for the next episode. That could be the start of a huge opportunity. So I think being willing to listen to what the creator has to say and not pushing back if you really don't have to, I think is where, one of the things I've seen be mistakes. But I think one of the best things I've seen is when that creativity is not only encouraged, it's leveraged in the right way to where it feels authentic. And I think that's the thing that I think big brands with a lot of money and a lot of investment have yet to capture. But I want to say McDonald's. McDonald's has been a wonderful partner that we've done for now, it feels like over a year. That has put me in so many different locations with the Anaheim Ducks, with the Los Angeles Chargers, and offered freedom. How can we take this to the next step? How can we invest more in you? The streams, to getting people on my stream McDonald's. So we're all eating McDonald's while we're playing games, and it feels very natural and a part of my brand. I could turn my stream on my videos and have McDonald's logo in the corner every day of my life, and it would make sense. And that's the level of partnership that I think gamers and big investors are looking to create. And not this one-off paycheck and then move on. No one really says that made a difference in my life. So to me, those are the partnerships I look for.
And I know from this panel especially, there's going to be a lot of investors with maybe their portfolios. They have big consumer startups, right? And they're always looking to try to figure out how they can get some guidance, work with the right influencers, help them choose the right influencers. What kind of advice do you have for, let's say, a consumer product startup that really wants to kind of enter into that gaming space, but figure out how to do it authentically? Like, what kind of advice would you provide them, especially because they won't have those gigantic McDonald's budgets, right?
Sure. I honestly think mid to low level creators are a gold mine. It's been something that's been proven for a long time. But I think really when you look at the way that kind of these grassroots supporting a multitude of yet talented, but maybe not ninja level or the one gamer that around the world level creators is the way to start to build a social value within the gaming community. The one thing about gaming, and this is something that, getting into it is very hard. I've seen a lot of big companies try to, get in without being, authentic and truly supporting the community. Like I want to kind of get it and run. And if I was looking to create a product, I'd try to create something that really feels authentic to, who the gamer is. So maybe it's something where, I think this is if you're looking to create a product somebody used before gaming, right? I have this, they sent me this advanced. It's right when I stream. But I think the idea of how do you dive into something that's already happening and make yourself useful so that the community naturally just goes, oh yeah, I need some advance, I need some focus. I want to make sure that I am doing what Rain Day's doing because he's my guy. I watched him, that looks cool. Let me give that a try. Versus, suddenly I'm doing this whole big random thing no one expects in a corporate setting or in somewhere that it's like, hey, you're not even playing the games. I clicked on your videos to play. Meshing into what's already happening is where I would try to do it. I think you can find a lot of, maybe 200,000 to 700,000 subscriber-based followers that could really start to say, hey, if this person blows up and we get in the ground level, this could be someone with 10 million subscribers in 5 years. That is all about our company using it every time they go live or do anything. And that, I think, is the biggest investment that I would look to make. Try to find creators who are on the rise, represent your product well, and get into their lifestyle before, and I think that to me is the most authentic thing you could do.
What's really interesting for me when a lot of the things that you're talking about, I remember when we were working on when I used to work at Google, we were working on a product that, we basically wanted to try to leverage a lot of YouTube talent. And I remember doing a UX study with a bunch of I think 13, 14-year-old girls. And this was just a consumer product study. And our first thought was, or my first thought was, just get the biggest YouTubers and they'll be at the top of the YouTube feed. So they're going to click on that. And what we found interesting, and it echoes what you're saying, is young people are super smart about knowing which ones are paid and which ones aren't. Mm-hmm. As soon as we did this, by and large, the majority of people that understood the new influencer and content creator space, they skipped all of the top ones because they told us, oh, I know that they're doing only sponsored posts right now.
Right.
I want to move to these people below, and because they actually care about this stuff. And I was like, wait, but you don't even subscribe to them. It's like, I don't know if they're worth a follow yet, but I'm keeping an eye on this one. And I was
Wow.
like, that's when it really, struck me that, I grew up when I looked at Google search ads, and I would click on the first one, even if it was an ad.
Right.
But more and more, I learned over time that you skip the first ad stuff to get to the real juicy meat of what you want. But we're now doing that with the content creator and influencer space. So I think that's really interesting. And I would love to hear, like, from your community, like,
Yeah.
How do they know when you're doing something that's just for the paycheck? Or
I've had so many ads. I think I've worked with so many partners. I've always been one of my big awarenesses of the money in the gaming industry, and I think they mentioned on the previous panel, but it's bigger than TV, film, book industry combined. And I've always known that, loving gaming. But when I realized how successful creators were actually partnering with brands and those paychecks and what that looked like, I said, wow, I want to get really good at this, because I know someone in one game, in one video, just made twice what I earned last year, and they can do it every day if they want. And that's probably just the beginning. And so I went and said, how do I start to, make this feel good? I have a background in film and TV, and I think that's why, it's so great I'll bring up McDonald's again, but my dad, he did national TV commercials for McDonald's when he was younger for about, 2 years. And so it's kind of cool to have that background in film and go, okay, here's how I think this will present well in storytelling. And that is something that is probably harder to find for some creators. And that's why you got to find the ones that know what they're doing. But if you can, I try to seamlessly integrate it. When I have to go and say, hey, play Raid Shadow Legends, when I know I'm never not going to play it, that's a tough one. But if I can go, with Linksys and say that, I literally need high level Wi-Fi. And here's what's happened in my life, and cut to a moment of my stream, dropping out and not working, and talk about the Linksys introduction solution, and now how I'm currently streaming, and look at the quality, look at the easy frame rate, look at how much fun we're having. That can feel like not an ad, because that's just me improving. My fans go, Rain Day, nice, you upgraded your life. We're here to support you. We love that. And that's why I think, as much as investing, it's choosing the right space to invest to within the creator community. Gaming specifically, there's a lot of different niches. So that's probably the biggest choice that you'll make, finding the right person. But when you do, that can win big for everybody.
I think also that's really the backbone of kind of what's going on with esports and gaming and the content creator community in general, right? Like, you talked about some of the salaries in the MLS. Now the top salaries in League of Legends are $5-6 million before sponsorships, right?
Unbelievable. Yeah.
Some of the biggest content creators, they're making tens of millions of dollars per year.
Yeah.
Right. And what the gap that I see today that I think is really interesting, you touched on it, is both the investor group as well as like the brand group still kind of view this industry. Like, if there was a musician that was making $10 million a year, you wouldn't go to them and be like, hey, can you sing me a song about McDonald's? Right? Because they just don't understand that, like, that's not what they do, right?
Yeah.
And I think that's really the part where I see the biggest investment opportunity, is that, like, the thing that I see is, and this is probably advice I would have to give to the panel, is, you got to find somebody. I guarantee you, somebody in your company or somebody in your firm understands this stuff way better than you do, but you probably never ask them. And they probably keep it a secret that they watch so much gaming, that they listen to all these Twitch streamers and follow all of them. But it's surprising to me how all of a sudden, how they can come from all sorts of places. I think there's a couple questions. Here's a good one that's interesting. All right. What upcoming games that seem interesting to you to produce new content with? But also, what sponsors would you like to see in the future within the gaming space? So it's a two-parter question.
Gosh, that's a great question. BMW, are they around? I love that. I can get I'll definitely take a X4.
We are currently sponsored by Mercedes. But I'll keep it in mind the next time around.
We'll keep that on the low. But I love when brands that feel like there was a great pitch that G2 Esports did with Ralph Lauren the other day. I mean, I don't know if you saw that, Arnold, but it was a great showcase of bringing high fashion into gaming. And Chinatown Market, which has changed its name now, is going to produce something for Apex Legends, which is the game that I play that I think is one of the best investments in gaming right now. They've really revamped Battle Royale. I think Fortnite has such a big bankroll and such a huge audience already. They're going to be relevant, but I think Apex is the only other game in the Battle Royale space that has a 10-year future. And they are a billion-dollar game a year plus. I believe that will increase. But they are, I think doing something in the space where they were doing a Chinatown Market collaboration with clothing and gaming in Apex Legends. And I said, what's stopping, someone from wearing Gucci glasses in Apex Legends and literally spending the same amount of money it costs for those glasses and wearing them on your character in Apex? There's no real difference because the cachet is digital. And so for me, I love to see high fashion brands get in, but also I think companies that are way more in our face than we realize. And it's not about, you talk about cars, things like, Mercedes, Tesla, BMW, but you look at these other things that maybe say, man, that wouldn't relate to gaming. That's what the gaming industry, I think, is looking for, to say that people are understanding us. They're getting how much money we spend. I've spent $10,000 in Apex Legends, okay? They're understanding that we will shell out money for the stuff that we like, and they're coming to work with us. And so for me, big brands that are willing to take that leap, I think is going to see a huge payoff. Because right now I'm just starting to see, this is that moment, right? When the people who get in early are doing it. And in terms of future games, I'm playing Apex a lot. I cast it, so I have to, kind of keep up with my job and enjoy the content. But there's always a great game that comes around every 2 or 3 years, in my opinion, and I usually switch on to that. So we'll see what happens. But right now, I think Apex is the one I have to go for.
And I think you brought up a couple of interesting points that I want to back up with some data that we're noticing is, you mentioned Gucci. There was a Gucci, I think, bag in a game called Roblox, where the bag itself is $3,000. Somebody recently just purchased a limited good at $6,000. Wow, within Roblox, right? So somebody purchased a in-game Gucci bag for twice the cost of what the real bag costs. Another interesting data point is you mentioned the Ralph Lauren coming in and sponsoring an esports team, right? A very traditional, old school brand. Now, actually, one of the League of Legends players is actually going to be one of the main faces of Wimbledon. Wow. Because they're going to have him there wearing Ralph Lauren, and I have no idea if he plays tennis or not, but I think it's, so one advice that I would give to the panel here is that, the gaming world will be colliding with the mainstream world, and it already is. It's just a matter of, making sure that you're prepared for it and that you're ready for it. Because I agree with you. Like, I think more and more brands are coming into the space. We're currently sponsored by Puma. When we were doing this 4 years ago, I couldn't even get a meeting with any of the brands, right? And I mean, what was like your what's a brand that you're surprised that you work with now 5 years from 5 years ago? What was it like working 5 years ago in this space versus what it's like now?
5 years ago, I mean, I had off-brand games. I had people trying to get me to sell like fake coins or free wins for like $20. I think when I had like fake wireless gaming systems coming up, and I'm like, I'm half sure this is a scam, but they seem legit. And I mean, just the stuff that we've done to work with the Chargers, to work with, I mean, just signed a year-long, rest of the year-long contract with Best Buy, which is out of this world. I think an amazing thing. I've mentioned McDonald's. I love them so much, but Bumble, what we've done with them, I think elevating, helping other creators. That's another space that I think is something that I uniquely am getting into, which I think has just such a market no one understands yet. Google, I pitched something to YouTube, and I have a meeting with them tomorrow. But I think the idea is that everyone, when they surveyed what young kids want to do right now, 37% in the United States said, I want to be a gaming creator and influencer. And there's this market of taking advantage of the current influencers, but then there's not much of a market of teaching the skill of influencing. As a soccer player, I know my coaches, they took the summer and they ran a camp. I used to be a soccer coach myself, and they would make more money than in those 4 days of the camp teaching hundreds and hundreds of kids versus the entire year of coaching and their coaching salary. This is a business. The education of gaming, and not only making great gamers, making great content creators. And that is something that I am trying to leverage and get into very quickly, because I know this is going to be big. I know the demand for it. I get messages every single day. How do I do what you're doing, Rain Day? How do I get there? And so to me, that's something that I think my next big journey with a partner or something should be focused around.
Yeah, and I think that's
wait, Arnold.
Go ahead.
1 second. So here's your next big partner. We're going to give you a new acronym, Rainmaker.
Okay.
and you're going to create some programs about financial education as an opportunity. As what we're linked to, it's, hey, this is an opportunity for you to learn how to make investments that diversify your portfolio.
That's a great idea, because you know what? Honestly, the best CPM ad revenue for anything on YouTube is the financial market, because obviously the audience, there are people who have money and are willing to spend it and invest it. I could do a gaming video and make $1,000 on it, but the same person in a financial space or with a financial geared audience would probably make $20,000. And it's an incredible niche, and you know, kind of aligns with definitely the gaming niche, which is a lot of males. I'm 95% male between the ages of 18 to 45 in the United States, probably 68%. I think that just goes to show that, you know, there is a bunch of opportunity, you know, in that space as well. So it's a great idea. Okay,
Rainmaker, here we go.
I think what the education part is something that we recognize as well, and I think you're completely onto something. So just to kind of give a quick background of what we do, one of the things that's happening is we noticed that we would have kids, especially in Korea and across Asia, even in Europe, try to actually come and try to be a pro player with us. But we also got a large group of parents basically saying, hey, my kid wants to get better at playing games. I don't know what to do to try to help him do this, because they say they listen in on what they're listening in on with these random kids, and there's just curse words everywhere. Kids getting so angry because he's not getting better at games. Parent wants to support their kid. So what we ended up doing was we opened a very small group of, hey, you know what, we can fit like 20 kids in here. Let's just see what happens as kind of an alpha test of what happens when we have our content creators in Asia, but now we're doing it in the US as well. Try to come in and say, okay, we're gonna run a small class. Anybody that's interested, and we'll do like an after-school esports gaming program. We started getting thousands of applicants. Wow. And so we said, wait a minute, we gotta do something here. And then most recently, like kind of to end this like worlds colliding, we'll actually be running a Valorant esports camp with IMG, because IMG basically said they had all these kids that are, you know, wanting to learn how to do and get better at esports, but we also want to train them. What the parents want is for 2 weeks, I want my kid to eat healthy, meditate, work out, and, you know, pursue their passion and whatever it is, right? So, you know, that's something that we're working on. So we're seeing the same signs you are. And one other thing, I think, Kareem, you brought this up by the Rainmaker thing. Rain Day is a Rainmaker. So I would encourage any brands that are interested in, you know, trying to bring somebody very smart, very thoughtful to help guide them into the space. I would absolutely recommend working with Evan. He, one of the smartest guys within the gaming content creator space that understands the business side as well as the content creation world. And I think I did a pretty good job of keeping it to 30 minutes, right?
Yeah, thank you, Arnold. Thank you. And actually, Evan, actually, there's in a couple of this session, the following session, we have a company called Grant Barcode Capital that's coming on, and they're going to be talking about the CPG, consumer, you know, packaged industry, and about how they're blowing that out of the water, and a fund that's doing that. So I'll definitely make the introductions for you there. But if you're around, stay for that event. You'll get to learn a lot and share some ideas there as well. So that's an opportunity on the brand side and investors on the brand side. Evan, thank you so much. Arnold, thank you so much.
Thank you.
For you those who want to learn more, Arnold and I have done a podcast, and there's a lot of learning there as well. Take a look at that.
Kareem, I love this because normally everybody I work with is younger than me by far, but now I feel like the young guys. So you guys make me feel again, so I appreciate it.
That doesn't make me feel great. Thanks, guys. Stay around. We're going to have Bob Trice and his partner Sienna and Michael, and we're going to be talking about the culture of food and food investments and where that's going. That's going to be an awesome panel. So stick around, hang around, and learn something. Thank you, guys. Sienna, welcome.
Hi, it's Shauna. How are you?
Shauna, sorry. Good. Rob, Michael, welcome.
How are you doing?
Thank you so much. No, we're doing great. We're running on time. We had to catch up quickly, so we're all out of breath, but I'm so happy that you're here. We're going to be talking to you today about the food and ag tech challenges and opportunities. This is something that's on everyone's minds. I don't think we're paying enough attention to it. So walk us through what that looks like, a brief introduction of who you are, what you do, where you find opportunity, and as investors, what should we be looking for? As you know, this is a panel of accredited investors who are looking at various aspects. We've touched on blockchain, we've talked about currency, we've talked about alternative assets, we've talked about robotics. We'll be, after this panel, we'll be talking about space. After that, we'll be talking about building unicorns, and then back to digital assets. So you're the only panel about food, and I'll tell you what's going to happen. We had NFTs a year ago. No one knew what the acronym meant, and then we've had 2 panels on NFTs today. I think what you're touching on with Better Food Ventures and what you do is highly important, and people need to pay attention. So I leave the floor to you till 3 o'clock, and I'll bump in about 20 minutes and say, hey, I'm back. It's time for Q&A and to wind down. That's okay.
Fantastic. That sounds great. So I'm Rob Trice, and I started Better Food Ventures. It was kind of fun, actually, listening to that last panel, because Michael and Sean and I all come from a longer technology history. I was, just to kick it old school, an investor in RockU and Kabam way back in the day in the gaming space. But after about 15 years in the mobile internet telecom space of VC investing, I really started to look at food tech and ag tech. And I'm so happy that Shauna and Michael have joined us at Better Food Ventures, where we're specifically focused on how we can bring the digital technology innovation to the food and ag value chain. And so we kicked off, we've done about 19 investments, everything from seed to stomach and everything in between. And I mentioned Shauna and Michael. Maybe what I could do right now is just have them very briefly introduce themselves. So Shauna, you want to go first? Ladies first?
Thanks, Rob. So I'm Shauna Day. I'm a venture partner with Better Food Ventures, and I'm sitting in the heart of California's Central Valley. So I like to call myself a recovering investment banker. Spent about 15 years advising in M&A and venture and private equity with a lot of mobile communications companies as well as enterprise software. And I gave it all up to come back to my hometown about 7 years ago and really dedicate my life to the intersection of ag, food, and kind of finance and strategy. And so fast forward today, and I spend most of my time focused on ag tech, so looking at in-field technologies, and then post-harvest into the food supply chain, which we'll touch on a little bit today as well. And one of the things that I think we always like to kind of ground ourselves in is that our team really looks at IT for food and ag, so specialists in software, hardware, software-enabled hardware, and applications. Certainly a lot is going on in the biosciences, genetics, synthetic biology, as well as consumer products, but our team is pretty focused on those kind of enabling technologies.
And Michael.
Thanks, Rob. So my entire career has been focused on new venture creation and innovation in both startups and then larger corporate environments. And for the last 6 years, I've been investing with our team across the entire value chain of our food system, from tech for open field production and indoor ag to consumer-facing food tech. Prior to Better Food Ventures, I spent 2/3 of my career in tech working across a number of sectors and verticals, operating executive, as a board member, and also working with institutional venture capital as well as corporate venture capital. First third of my career was in the restaurant and food sector, so our investment efforts here at Better Food Ventures focusing on tech to make an impact in our food system really encompasses my professional career and efforts today.
Cool. All right, so what I wanted to do is maybe just kick it off. You know, we've been at this a while now, folks, and yeah, to Karim's point, this food tech and ag tech, when we first started, we didn't really even know, it wasn't a defined term in Silicon Valley. Food tech, agri-food tech, and now, you know, we had 130 billion under assets under management in this space last year. There's a significant understanding of the challenges related to digitizing our food system. I just kind of wanted to get your thoughts, kind of as you do that look back historically, and like, where are we? And what do you think of that growth that's occurred in this space?
Yeah, Rob, maybe I can jump in on that one. And just to kind of set the stage for the audience, as we look at aggregate investment into the ag tech and food tech ecosystem globally, last year was a banner year. I think a lot of people going into 2020 didn't quite know what to expect. And we saw venture investing, later stage investing, early stage investing rise from 22 billion in 2019 to just over 30 billion in investment last year, which was a banner year, a standout year for the sector. And I think as you sort of unpack those numbers and look at where the dollars were flowing, it's interesting to see the level of maturing that's really starting to happen across the whole supply chain. I can speak probably more to the farm tech and ag tech side of that equation. And there was even for the first time since we've been tracking it, an uptick above more downstream technologies, consumer-facing technologies in that part of the ecosystem last year. And what you kind of see though is that there's a real maturing, and those later stage deals, bigger check sizes, bigger rounds are really starting to emerge. We're starting to see more consolidation, and granted, a lot of it's kind of defensive or bolting on or tucking in products and customers, but it's a good sign for investors, right? To start to see some turnover, some liquidity in the space, and I think that will continue. We saw a little bit of weakness on the seed and real early stage deals last year, just in terms of deal flow, and I think a lot of that was due to just people wanting to double down on those existing portfolios, make sure that there was enough cash flow to kind of get them through uncertainty that we saw in front of us. We're also seeing more generalists kind of come into the space and looking for those later stage de-risk technologies. So all in all, really good headline news, and just a lot of interest in the sector from sustainability, traceability, all those themes that we're seeing the consumers asking for, I think are driving a lot of investor interest here.
Michael, anything to add there?
Yeah, well, I would say that when we're looking at making investments and looking at entrepreneurs who want to back, we're looking at folks that want to make an impact today and be impactful in our system now, as opposed to trying to find solutions that are only going to solve challenges, feeding 10 billion people in 2050. And I think from a maturity standpoint, one of the things that we've seen over the years is, early on we saw entrepreneurs and people developing new technologies and services who didn't go out and actually talk to the customers to really assess that need. And now we see them doing traditional product and service design and talking to that customer before they even start that effort.
Yeah, I think Michael hits on a great point there, Rob. And to borrow one of my favorite terms from you, it's really, many people on this call may or may not be aware, but ag is the least digitized sector of our economy, yet it represents 5 to 10% of the global GDP, 10 to 15 trillion dollars globally. So we're talking about big markets here, but really under digitized. And this idea of crawl, walk, run is something I think people need to stay grounded in. We're in the early stages of going pen and paper or best practices in your mind to, okay, let's do some digital record keeping. Let's look backwards and see what we did last season. All right, now we're starting to get some trend lines, in place. We can use our digital technologies to start to make some decisions about what should I do, what's going to happen, this season. And really, before you can get to that kind of optimization and automation, we've got to put those basic building blocks in place. And a lot of companies are focusing on solving those challenges today. And then we start to see the real potential for data analytics, for AI, for machine learning get unlocked. And I think the next 5 to 10 years are going to be really exciting in this space.
And just to build on Shauna's point, you need to have an understanding of where this market is to understand what is, and to Michael's point, what's appropriate for the venture market now, as opposed to what you might think and looking at a challenge in the future. As an example, we just made an investment in a company that isn't particularly sexy, but what they're doing is digitizing the wet dairy milk logistics market. And we're basically replacing pen and paper. But if you think about from a farmer and a dairy co-op perspective, this is where they are at. And so this may not grab sexy headlines and TechCrunch or anything like that. This is what's needed to solve the problem for the customers in the market today. So yeah, I wanted to ask Shauna and Michael to spend a little time kind of doing a little bit more of a deep dive on 3 topics. And to John's point, I'm going to be watching Q&A. We'll leave a couple minutes at the end for Q&A, but I asked him to speak about 3 topics. So 1 is climate smart, soil-centric agriculture. 2 is indoor agriculture. And 3rd is food supply chain tech. So Shauna, you mapped out earlier this year about 150 different companies looking at climate smart, soil-centric agriculture. Can you share a couple takeaways that you had from that work?
Yeah, for sure. And I think a lot of this conversation is really rooted in the discussion around carbon marketplaces now and carbon sequestration, where there's obviously a lot of excitement, and I'll kind of build my way into that. But what we basically found in looking at all these companies, looking at ground truthing with soil sensors, looking at aerial imagery, remote sensing, the marketplaces themselves, and some of the software that enables the measurement, reporting, and verification, the reality is it's still very much in its early days. You know, we've got unit economics that are still need to be worked through. The cost to actually measure your soil, measure carbon in the soil, measure your soil health is sort of outsized versus where the farmer returns are right now in those marketplaces. Those ground truthing tools are still pretty nascent. We really need the corporates to look at the tools themselves and how to help those companies scale up. You know, I think remote sensing, again, is a really additive piece of the layer of the cake, but in and of itself, it's not going to solve all of our problems. And certainly CPGs have a lot of interest in sort of advocating more regenerative, more sustainable practices, yet you know, the kind of benefits aren't quite accruing to the farmers themselves yet. So I think there's a strong case to be made for, you know, what can we do today versus what's going to take us 3, 5, 10 years to figure out. And certainly as we kind of reposition the way we think about incremental improvements to soil health, not just the end game of carbon sequestration, but you know, are you improving aggregate stability? Are you improving water holding capacity? Are you improving biodiversity? All of these things we can measure, but it's just, again, getting back to that crawl, walk, run theme. So now I say all of that with kind of the backdrop to, look, if you've ever looked at the Gartner hype cycle, or you sort of know that it goes like this, and there's a peak of inflated expectation, which is typically followed by a trough of disillusionment. And I would venture to say that carbon sequestration, carbon marketplaces are right around that peak of inflated expectations right now, but we still have a lot of work to do to get the rails, to get the pipes in place, to do the measurement, reporting, and verification, so that investors, so that buyers of credits really have the confidence in what they're buying, and the authenticity and the stability of those products and those credits.
That's great. And for just to level set with everyone, agriculture can become the first and largest major sector of the U.S. economy to be carbon negative. So if we are able to improve the way that we do agriculture, so that's the huge opportunity. A lot of impact dollars flowing into this space, but we're still trying to work it out. And you know, that message of we got to crawl before we walk, before we run, you're going to hear that from us time and time again. So Michael, you want to talk a little bit about indoor ag tech? You just finished up an analysis looking at 1,300 different companies using technology for indoor ag production. Can you talk about how you define that space and maybe some of the takeaways that you had there?
Sure. So when we do, and we've done this analysis on a regular basis and we focus on indoor ag tech or scale food production. And so when we look at the 1,300 CEA companies, we segment that entire ecosystem kind of on a traditional tech basis. So we look at component technology, we look at broad, complete systems, and then we actually looked at and bucketed the innovative growers as a segment, because many of them are developing their own technology. We then, of course, break everything out into smaller categories, from automation, environmental controls, or pest monitoring, or farm management. And then I think really importantly, we broadly bifurcate the market into greenhouse production and what people know as sunless or vertical production. And we make at this point to really highlight over the years the greenhouse approach, because over the last few years, sunless vertical has captured a great deal of attention, which is great. But a lot of people may not appreciate that Dutch has been growing indoors with tech-enabled approach for over the last 50 years. We believe that the both of them have a place in the market, and common benefits they have, such as growing produce without pesticides, using 90% less water than traditional production, flexibility of where they can locate their farm, and greater space or land utilization. It's true for both of them. Both approaches have their challenges with their energy footprint, but that's more so with the sunless vertical growers. Lighting and environmental management make up a significant portion of their operating costs. So they're making progress, but there's still work that's required to improve the unit economics and reduce their energy consumption. On the other hand, sunless or vertical operations typically have automation already designed into their systems, and of course, automation is very important across the space in general, both in open field and indoor growing. Automation is less built in and deployed with the greenhouse market, and there's a tremendous opportunity there for automation, particularly in the more complicated crops for harvesting and crop care for tomatoes, peppers, cucumbers. Like open field production, we're seeing labor challenges in the indoor sector, and those labor shortages, interestingly, include growing expertise. So at the end of the day, even though you're utilizing technology to grow indoors, you're still growing living things, living plants, and you need master growers and agronomists to be successful. And there just aren't enough master growers to meet the growth trajectory of this sector. So there's a real opportunity to leverage hardware and software platforms and sensors and data analysis to extend that reach and capability of agronomists moving forward. One final thought.
Yep, go ahead, Mike. Sorry.
I was just got one final thing on this. I think is really interesting about the indoor ag sector. To step back and look at it, is that those growers are essentially vertically integrated as producers. So unlike a commodity food producer and some of the specialty growers, indoor farmers are growers, and they also package, and then they sell a branded consumer product. And we saw during the pandemic, a number of them actually added direct sales to consumer capabilities. So that gives them the ability to be more agile and responsive in meeting consumer needs. They can better market their value prop of sustainability and being pesticide free. They can more easily develop and test new products, and they command premium pricing. So if you compare this to growers that sell to someone else in the supply chain, where they get commodity pricing and they have no idea where their produce is going or who is buying it, you can see there's a lot of advantages for being vertically integrated and selling a consumer product. So.
Excellent. We've also been having an internal discussion about that lack of water out, and Sean is out in the Central Valley, and they're talking about turning off the faucet for 7,000 farmers out in the Central Valley. What's that going to mean for the acceleration of things like greenhouse-based tomato growing out in the Central Valley as opposed to field-based? We don't know yet, but certainly the economics are there. All the claims that the indoor ag people make about, saving 90% water will become much more substantial if indeed this water situation is as bad as people suspect. Shauna, let's turn it over to you for that third bucket and just talk a little bit about food supply chain tech for all of us that experience some sort of shortage or crisis finding toilet paper or some food product during COVID. What's the answer?
Yeah, the silver lining of COVID is that it gave me a chance to not be on the road as much, and my other partner, Britta Rosenheim, and I got to really dig deep for an extended period of time looking at the food supply chain tech. And the way that we kind of define that is from the farm gate to the loading dock of a grocery store, of a QDelva, a big food service provider. And as Michael sort of laid out for you, we think about our world in market landscapes as well, and we kind of break it down into 4 key kind of constituent parts. The first mile, which is really from the farm gate to your food processor, to your produce packer shipper, that first handoff essentially. Then food manufacturing, food processing, followed by distribution and logistics, and finally demand side. So what are the grocery stores using to better forecast demand? And there's a lot of technology out there. In fact, that's probably where we've seen really the sector, the subsector leading in terms of digitization. The first mile, conversely, is your least digitized part of the market, and that's closest to the farm gate, as I mentioned. So I think as we sort of look at those 4 constituent parts, we uncovered about 650 companies, and historically it's been dominated by, you know, your horizontal software players, your Microsofts, your SAPs, those that are providing those ERP systems into food processors, distribution facilities. And what I think COVID really showed us is, you know, we recognize that there were these dislocations in the supply chain, and why was that happening? You know, how could communication between the stakeholders, between the supply chain partners have been improved? How could forecasting and visibility, you know, you can't forecast a channel shutting down overnight like food service, but what can you do to be more agile and responsive to these dislocations? And what you really start to figure out is most of them have not been invested in for decades and decades. And we have this sort of very rigid food supply chain that is, you know, screaming for investment in more modern technology. So you start to see things like Industry 4.0, automation, internet, or industrial Internet of Things emerging across the manufacturing sector and a lot of other sectors. You know, that's next for food and ag, and really becoming a lot more agile and a lot more automated. We look at other areas like connected logistics. You know, how well are we loading up those trailers? They're going across the country with blueberries, and should they be shipped from Oregon to North Carolina, or should they be shipped from Maine to North Carolina? You know, all of these things that have historically, there's just about a lot of blind spots in our food supply chain. I think the opportunity for technology here is substantial. And in fact, if you talk to some of the operators, we pulled a couple of them and said, you know, how has COVID changed your appetite for investment in technology? And we had a couple say it's accelerated it by probably 5 years. Now maybe, you know, dial that back to 2 or 3 years. But even so, I think the silver lining of the pandemic was it caused a lot of people to sit up and say, we've got to start to make some of these investments to create tighter links between the demand side, the consumer, and the supply side. And I think what Michael said was spot on. You know, as you start to see omnichannel and direct-to-consumer models emerging, you see, you know, small brands that are delivering their products directly to consumers. That has implications on the supply chain. We're seeing more business model innovation. We're again seeing that need for connectivity. You know, if you know where your Amazon truck is coming down the road with your bag of cat food, yet if you're a retailer, you have no idea where that truck is en route with you know, $100,000 worth of perishable produce. So I think that in the next couple of years, we're really going to see a big shift in investment in that space.
And Shauna, just on that point, PitchBook came out with some numbers today, looking at the last mile, mostly the food tech side, the demand side. And they said that we're already this year at 86% of the investment level of the past greatest year. And the majority of that money is going towards food delivery, meal kits, more of those deals. More of them are later stage. And then the other thing is that the interesting thing for me was of the top largest 15 deals, only 5 were in the US. We're seeing a lot of investment occur in places like China and India and so forth. So this is, you know, everybody in the world's eating. So I think that's the important thing. And, you know, to Michael's earlier point about looking at solving the problems that we have now, we like to say that we actually have enough food right now. We have enough calories. What we don't have is the ability to get the right food to the right people at the right time. We will have challenges in terms of providing nutrition for 9 or 10 billion people. But if we inject this agility through digitalization now, we should have the tools to be able to meet those challenges in the future. Shauna and Michael, David's asking a question about aquaponics. Shauna, can I turn that one to you?
I think Michael might be better served for that one, but I can touch on it a little bit. So yeah, I mean, I think one of the challenges with the aquaponics and some of the other growing systems there has really been what's the right type of capital for them? You know, is it venture capital? Is it project finance? Is it real estate investment? And I think there's kind of been some, I don't know, challenges around alignment and capital and business models and really how you kind of differentiate those systems. So my comment with the investment hat on would really be one around capital alignment and making sure that people are approaching the right type of funders in order to get those projects off the ground.
And Michael, you know, we talked about this too as well, particularly on the greenhouse side. You is venture the appropriate tool? And just to be clear, we at Better Food Ventures, we don't invest in growing operations. We don't invest in facilities. We try to stay away from bricks and mortar. We even try to stay away from hardware by and large. We're really looking at the software, the digital picks and shovels needed to inject that agility into the food space. But Michael, you want to talk about that from a greenhouse perspective?
Well, I think greenhouse or some vertical, when you're looking at large operations, I think what you're going to see is you're going to see a blended capital stack. I think that if as a larger venture investor, other venture investors that want to come in and invest in the parent company as they're developing new technologies and processes and capabilities, that's one thing. But once you start to move on and these facilities are costing $30, $50 million per location, that there are other ways to fund that. And, looking at that is, debt financing, hard assets, it's going to be a much more blended approach than having venture, which may not be the most efficient way to fund, a new $50 million facility, particularly when you see people rolling out, tens of these, 20 of these in a couple of years span. It's pretty big capital expenditure.
The other just practical matter that I would touch on aquaponics is the complexity, right? You've got multiple systems, multiple biological systems that you're trying to manage. And I think scaling that up has been challenging. It's hard enough to do one system with strawberries or almonds or corn. Start to introduce multiple production systems. And there are a lot of complexities to that.
Yeah. Karim, before I hand it back to you, first, let me thank you for the opportunity to just have this chat with Shauna and Michael. And then the other thing, just to make sure everyone knows, all of these landscape analyses that we're talking about are available for download on our website at betterfoodventures.com. And thank you.
Thank you, Rob. Thank you, Michael, Shauna. So what was really interesting is actually I've looked at your website and looked at the landscapes. It's really, really interesting. Before you go, though, there was, I want to introduce you to a company called the World Food Bank, and the CEO and founder is Richard Lackey. And he's doing a lot of stuff in emerging countries. I don't know if you've heard of him or talked to him, but they're doing a lot of, everything that you talked about in the first half of your thing was exactly what they're trying to do in emerging countries to improve food production and feed 1 million people a day. I think that's their goal. And they've integrated agriculture, science, education, and learning through followers, YouTube videos and stuff like that. So it would be a good idea to synergize and have a connection with them at a certain point. And then later on, after this session, we have a couple of executives who are going to be speaking about creating a diversified fund in the CPG environment. And that might be interesting for an introduction, or if you've got time, stay and come back, and we'll figure that out at a certain point.
That's great.
Excellent. But thank you, Michael, Rob, and Shauna. Thank you so much for the information that you shared with us. It's been great.
Thank you.
Okay, bye. We're moving on next to Omri and Sujoy. Omri started out with Marqeta, and when they were young, small, emerging company, and saw them through the transition right up to them going public just recently. And then Sujoy, story is he's worked with Byton after doing a lot of other things. He's now with Byton, the car company, that accelerated their growth to unicorn company. So I thought it'd be great to have both of you today and talk about a little bit about the myth busting of building unicorn companies. Everyone's excited about a unicorn company. Everyone thinks, oh, I need to invest in a unicorn company. But tell us the story. Tell us the struggle. Tell us the joy, the hardship, the conflict, and the fight you've had to, Omri, start with you, how you took Marqeta from 0 to 100 miles an hour, and then Sujoy talk about moving from 60 miles an hour to 100 miles an hour, and then that going down to 20 miles an hour, and then picking that back up. So the whole life cycle of a little bit of the myth of building unicorn companies. And I'll let Omri start with an introduction of who he is now and what he does and what he's passionate about now. And then Sudro, you go next, and then I'll jump back in with some clarifying questions if that's okay.
Sounds great, Kareem. And thanks for having me here. It's exciting to be here. My name is Amri Dahan. I was the Chief Revenue Officer at Marqeta. I started with the company on the founding team back in 2011, early 2011, and led the commercial charge from the first dollar of revenue up through the filing of the S1, and definitely have a lot to share. And I'm happy to answer any questions about our journey into unicorn status and beyond. So, Joy?
Yeah, thanks, Amri. Thanks, Kareem. It's great to be back here. So I'm head of corporate development at a automotive technology company called Byton. I lead our corporate development, so strategic partnerships, M&A, strategic investments globally. Prior to Byton, I helped start a quantitative macro hedge fund and research company that was ultimately acquired by Forbes. And then before that, I joke around, I am a reformed investment banker, started my career at JP Morgan, focused really more on the real estate, and then switched to go to RBC Capital Markets, where I focus on internet and software companies. And yeah, I'm very excited to talk about the journey that I've had at Byton. It has not been an easy one with lots of ups and downs. So Amri, maybe you go first and I'll chime in after that.
Sounds good. Kareem, did you have any, you have a starting question, or should I just start talking? Not hard for me to do.
Start talking. I mean, because let's keep in mind, because when what we do here, I mean, by the way, just as a we were early investors in Marqeta a long time ago. So some of the challenges that we have as private investors is trying to understand what kind of companies we should be looking at to bring to our investor group, right? So we wait for a certain valuation, and then we look at the valuation, we look at the team that's involved, we look at what they're trying to accomplish, we look at the market that's surrounding that particular industry, and then we sort of guesstimate, estimate, fustimate about a potential liquidity event, or so that our investors then see the joy of that. But there's a lot of hardship in that, right? So guide us along trying to understand as investors what we should be looking at as companies start off where they do, raise the funding, and there's certain milestones that we perhaps should be looking at or looking for without the opportunity of being a publicly traded company and trying to look behind the curtain, so to speak.
Yeah. Look, I mean, I think entrepreneurs do the same thing that investors do in some ways. They look at an industry, they look at a company, they look at a product or a space, and they're investing something very valuable to themselves as well, which is their hearts and minds for several years at a time. And so I think, at least the way I have always thought about it is some combination, and I don't know the right percentages, but some combination of, is the space big and exciting? Is what we're doing in there going to have an impact? And are the people doing it, inspiring and people I want to spend a bunch of time with? And I think a lot of entrepreneurs probably have some version of the same, and maybe it's a little bit different for each of us, but it's a huge investment. It's a huge investment of time and energy and hearts and minds, but it's also an investment of reputation. And I think that's an important distinction, because along the way, especially in the early days, we can use the cliche, fighting for survival. Let me tell you what fighting for survival looks like when you're not just on the cap table, but inside the company. It's a pretty emotional experience. And I would say, for those of us who helped build a unicorn, that was the first time, life and death literally feels like life and death, certainly of your reputation and your career, right? There were many, many years at Marqeta where it wasn't just like, is this product going to work? Is this market going to work? Did I make the right decision? But it was also like, am I okay? Am I valid and worthwhile? And do I have something to offer the world and contribute to the world? Because if this thing doesn't work, man, so I'm back to square one. That's what it feels like. And now that may not be true, and we have other, probably get a job somewhere else in the valley, whatever, you're probably not going to starve. But in those moments when either you're trying to raise money or get a customer to sign a contract, it does feel like a good portion of your life is on the line, and your kind of reputation, your family, and how your kids look at you, and how your friends look at you, and everything. It feels that way. And I think we can certainly get into what are the milestones investors should look at along the way, and I'm happy to comment on that. But I think maybe I'll turn it over to Sujoy and hear his perspective on that, because I think that is the very first thing that most entrepreneurs, I think, go through, which is the personal side of survival.
Yeah, thanks, Omri. And I'm laughing because this well resonates with my experience at Byton over the last 4 years or so. First of all, I look at things from an investment perspective first, just given my hedge fund investing experience. But now I have the operating experience working at Byton. I can tell you, from an investor's standpoint, the first few things that I start to look at is, what is their existing problem that you're trying to solve, right? Is there a strong value proposition? And with that, what is that TAM? Does the team have a clear plan or vision in place? And do they have the team to actually be able to execute this? Next, what is the prototype that they're trying to build? And what is that in terms of the product market fit? Can they create a strong MVP from that perspective? And then can they generate leads? So partnerships, building out an ecosystem. And from that, can they create a strong product feedback loop? Because that's really important. Can you reiterate that product over and over by talking to your customers and seeing, is that product actually solving those problems that those customers need? And so those are kind of the checklist of questions that I start to look at when I first think about investing across a company. And I'm sure many of you who are on the line look at those exact examples. From the operating side, it is completely different. When you're starting out with just a blank piece of paper and you're thinking of an idea, you're trying to solve a problem at first. But getting from that, let's say what we call in the Valley, that PPT, that PowerPoint presentation to an actual product, it is miles and years away, right? And so, over the course of the last 4 years at Byton, we went from, just having a PPT to actually building a show car, which is our MVP. And the way we were trying to differentiate ourselves from Tesla, for example, was this large screen, this 48 by 13 inch screen inside of our car, where you can do anything on your smartphone inside of the vehicle. So watching Hulu, watching Netflix, video conferencing like we are right now. And that was our entire value proposition. We took some of the best team leaders from Tesla, from Honda, from really all the top OEMs, and we put them all together. We also added executives from Microsoft, from Apple, all the digital experts, especially here in the Bay Area, but also from Israel, to come in and help build up our team. We scaled significantly from about 10 employees all the way to 1,600 employees in a matter of 2 years. And this has been an exciting ride. We were the darlings at CES in 2018. But now we've had a lot of ups and downs. And part of that is just really building a startup, right? We've scaled too quickly. We had, we weren't managing our retention. We had certain cost issues. So exactly what Omri's been talking about, every day you don't know what you're going to get. It could be a great day. It could be a volatile day. But I will tell you this, this experience, at least at Byton, has been one of the best, journeys I've ever had. You learn through all your downs, and we've had plenty of downs. Right now, I was responsible for co-leading our Series B. We raised $500 million, huge win for us. For our Series C, we closed $210 million, which was short of our $500 million goal for our Series C, and this was because of COVID. We actually ended up cutting our funding short because we couldn't travel the world. And then we became into issues. We started, we couldn't pay some of our suppliers. We had to restructure the company. And that's what we've been focusing on. Now we've had a bunch of SPACs reach out to us, and we're thinking about how to really, go about becoming a public company like Marqeta. And so for us, this journey is just ups and downs every day, and you just never know what's going to happen. But I think that's also the exciting part of building a company. There is no right answer, right? You're running that journey. You're taking your lessons learned from all of your previous experiences, and you have great advisors, and you start building that company the right way, and you go through your ups and downs, and that's what makes it exciting. Kareem, any other questions?
Yeah, absolutely. So when we look at companies, when we start to look at companies and how they're trajectorying, what are some of the leading indicators, Omri, that we should be looking for? So I remember meeting Marqeta way back when, early days, pre Coinbase even, and they started verbalizing some of their their business models. And that obviously has iterated over the years. So as you test your MVP, as you test your market, what do you see as some of the leading indicators that, as outsiders, we should be paying attention to as we look into companies that are developing?
Yeah, I mean, I think it all depends on how much work you want to do, right? If you want to do a ton of work on a particular thesis in a particular space, right, you're going to be spending a ton of time doing research, let's say on payments or on card payments in the Marqeta's case, right? If you're that person, and I'll answer it if you're not that person in a minute, but if you're that person who really wants to do a lot of that research, you're going to look to leading indicators and signals kind of from the market side, right, and from the customer side. What is the market doing? What are customers doing? Is there overall growth in this TAM? Great. Are you seeing a bunch of new products in this TAM? Listen, if you have an opportunity to talk to someone at one of these companies, ask them what types of customers that they are going after. Ask them what types of customers are going to be using their product, and to Sujoy's point, right? What kind of problems are you solving for what kind of customers? Then look at what those customers are doing and start to ask yourself, okay, is it reasonable to believe that in 2015, JP Morgan Chase is going to take a flyer on a company out of Emeryville, California to run its debit program, its debit card program? That is not terribly reasonable to believe in 2015. However, in 2020, after numerous product announcements and enhancements, after numerous customer partnership announcements, right? Is it more reasonable to, and by the way, after JP Morgan Chase is getting kind of competitive heat from Cash App and Venmo and Chime, right, and Varo, and all of a sudden you're starting to see like, wow, these folks maybe have to compete in a new way with new competitors. Now I could actually see them entertaining the possibility of working with someone like Marqeta in a new way, right? So if you were watching that, you would have seen that coming down the pipe. Now, if you're not the person that's going to do a ton of research, if you're more of a broad sector player versus a kind of deep player in one particular subsector, then I think your best bet is to choose the space that you want to be in and do everything you can to learn about, as a friend of mine, an investor at Marqeta said, bet the jockey, right? Like figure out who the entrepreneurs are, figure out who the key 2, 3, 4 decision makers are, figure out what that management team is really all about, and bet the team. Because if you have space and you have the great team, they're going to usually figure out a way to make things successful one way or the other. And I think, how do you get information about that team? Read up about them, connect with them on LinkedIn, read their press releases, read everything you possibly can about them, get to know them, and try to kind of understand if they're the kind of team you want to back. Because ultimately, as Sujoy knows, and as I suspect a lot of folks on this call know, you have a plan, you do all the things you're supposed to do, you come up with good market research, you've got great engineers. Everyone does, right? Almost everybody does that. Right, like that's table stakes. It's who is going to go up the mountain and deal with all of the weather that's on the mountain, all of the different surprises that you're going to see there, and who's going to take that in with grace and persistence and resilience. To me, that's what I would do. I just bet the jockey, as long as I'm choose your space and then bet the jockey if you don't have time for more.
So Sujoy, you've not only with Biden, but you've vetted or tried to vet with your previous companies and the funds that you're getting involved with. You've tried to vet the jockey, and understand the jockey. But let's look at Uber as an example, and let's look at WeWork as an example. I mean, those were big bets on the jockeys at the time. That big money went in. When do things change with the jockey? What throws them off the horse?
Yeah, that's a great question. By the way, for Amri's example, I do horse bet. So I'm very used to this, betting on jockeys and betting on specific horses. But in all seriousness, it really comes down to a few things. And I just want to quickly add 3 other points before I answer that question. Completely agree with Amri. I would also say culture. Culture plays a huge factor here. I always try to look at what that overall corporate culture is. Are they aligning with that overall vision? Next, shareholders. Obviously, when you are scaling a company, you need supportive shareholders. And this is something that is completely understated here. I think a lot of times, and maybe this is just me, but I think there's a huge differentiation between smart money and dumb money. Not all money is treated the same. You need your shareholders and specifically board to be supportive of your overall goals and objectives, and you need them to be able to help you when the time is needed. So those are just a few aspects that I think also factors that I try to look at. I agree with Omri. You know, for me, I try to quantify everything, whether I'm investing in my own personal money or whether we're investing into a company from Byton's perspective. I always try to quantify everything, no matter what. Even if it's a team, you create what's called a factor-based approach, and this has always been my basis. Now, with the example of Uber or another Airbnb or other examples here, when you start scaling to a point, you only have so much data on a team. But what you do have data on is a cash burn. You do have data on, what are these teams spending money on, right? Is it all marketing or is it actually going to reinvestment into the product? And that's those are the core aspects I would like to know. If a company is spending 90% of their funding on marketing, trying to go and acquire customers, but are not reiterating that product, I don't think they'll necessarily be successful. I care a lot about strategy, and that's why I think strategy is so important when you're thinking about building these types of businesses. As you start to scale, as you go from your different life cycles, from your early stage to your mature to your shakeout period, right? You're completely having a different strategy. Sometimes that means you have to pivot your different products. Sometimes that means you have to pivot your overall corporate strategy. And that's really key here when you're thinking about looking at these different types of businesses. So I would say, is a company easily and are they able to pivot depending on which direction they're trying to go? Do they have a competitive advantage? And what is that moat exactly, right? And then from a funding perspective, are they actually using their funding in the right way? Are they reiterating that product or that engineering? Or are they just blowing that money and they're not, they're going to need additional funding and they're not getting to those goals? And that's why I think a milestone-based approach is always really key when you're actually evaluating these types of companies.
Thank you. I'm going to go to Omri. I mean, on a more intrinsic or intuitive level, when do you feel that the jockey is not going to make it to the end?
I remember in a business before Marquetta, I got some great advice from another entrepreneur who had been fairly successful. And they said, I said, listen, I'm at this company, I'm running the company, and we've got 12 months of cash. I don't know if we're gonna make it. And he said something great. He said, listen, give yourself a timeline that that if you haven't been able to produce the results you want to produce in X number of months or years or whatever it is, you're going to tap out, right? You're going to find some, high integrity way, give them money back to investors or sell the company or do something. You're going to have some high integrity way of moving on. And that's a tough thing to do. Let me tell you, it is a tough thing to do. I had told myself 12 months, I was very, following Sujou's advice, I was very numerical about it, quantitative about it. 12 months came and went. We were almost there. And, it's like, all right, I'm going to give this another 6 months. And you can kind of, years can go by while you're playing that game with yourself. And eventually, in my case, another 6 months went by. And luckily we got an acquisition offer and it was time to move on. But, there's a honesty with yourself that is, I think, is almost always really, really useful. But there's also there's time for that kind of sober honesty around, hey, you know what, this is not working. But there's also time for talking yourself into continuing, because there are also moments where the data suggests you just have to stop, and the data suggests like this thing is not going to happen. And then you move into another realm of yourself, which is like, I just believe in this thing. I have conviction, and I'm going to give it one more shot. And it's often that one more shot that you see are the the nadir of the J curve for a lot of businesses. It's very hard to kind of see that from the outside in as an investor in a business unless you have a relationship management team. Very hard to see that. Again, I think that just goes back to making sure you know who you're doing business with and getting to know that founder or that entrepreneur, that executive, that management team. But you know, the stories that we tell ourselves as entrepreneurs in order to keep going another day, most of the time serve us, and sometimes they don't.
Thank you. So as you are with this company, both of you have gone through this, I'm presuming. You were with the company, and you are with the company, Sudroy. And before the data hits there, before the data gets to you, there's this intuitive, because you're both leaders within your company. You have reports, you are day-to-day contact with the rest of your employees. Do you ever find that the employee sentiment that you see within the company gets to you a reflection of how the company is doing before the data does? And I'll start with you, Omri.
Does the employee sentiment about how the company's doing gets, in other words, they're more on the front lines and they see things that I don't get a chance to see yet? Yeah, I mean, there's a moment, and I suspect it happens in every business, where you're more in touch with what's going on. Maybe, you know, as a revenue leader, I was in customer meetings all the time, prospect meetings all the time, getting a feel for the market at conferences, that kind of thing. And then there's a moment where you're like, oh, okay, I can't scale that. There's no way to scale that other than to rely on your team. And, you know, the quality of data you get as an executive goes down in direct proportion with your seniority in the organization as the organization gets bigger and you go up. So you get all this filtered information, which, by the way, how you receive that information influences what people are willing to share with you, of course. And by sort of, you can find yourself kind of out of touch at some point. And I think that, you know, one of the things great leaders do, and certainly something that I always try to do, is have direct connections with the people who are on the front lines, have direct connections and relationships with customers, be in those conversations with them, be there as a supporting agent rather than as a leading agent in some of those conversations. And, you know, have an open door policy where people can come in and talk to you about those things. I think this goes to Sudroy's point around culture. How do you create a culture where that information, which is super important, in many ways more important than whatever it is you're talking about in the executive team that week, right? How do you create an environment where that information is freely shared, transparent, open, even if it's, and especially if it's bad news, right? Customer's not happy about something. How do you create an environment where the organization wants to learn about that rather than, you know, suppress that? So I think that's the challenge for executives. Sudroy?
Yeah, couldn't agree more, Omri. Listen, your customers, for any business, right? Your customers should be your number one focus, but your employees are your number one asset. And I think in listening to your employees, their needs, their concerns is so important. Having that open door policy, making sure that you, and again, Omri just hit the nail on the head. Having that, you know, transparency across an organization is really key. In terms of Biden, and just giving you my personal experience here, we have 3 different cultures. The car company is it's Chinese owned, but then we have a whole design team in Germany, and then we have the R&D base, which is here in Santa Clara, California. So you have literally 3 different continents, completely different cultures. Then you have the vehicle engineering side, which typically uses more of a waterfall approach when it comes to engineering. Then you have the digital engineers, right? So doing all the app designs, having to focus on this large screen inside of the car, trying to make everything work with the car itself. And that's more of an agile process. So you have that entire different engineering culture as well. So really being able to listen to the needs of all your employees, create a culture, you know, that everyone is heard is really key. And I do think it's hard to be able to get that data up front. You do need to listen to your employees, whether it's having that, you know, check in with your team leaders and those team leaders checking in with their teams to see what those concerns are. I do find that sentiment is one of the factors that I typically look at when I talked about that multi-factor approach. Having that sentiment is really key. And again, at Biden, I have all the employees who reach out to me when they have a concern, and I typically bring it to our CEOs and we talk about that. So,
thank you. I'm going to go to Omri, and then Sujoy, there's a question for you in the Q&A if you take a look at that. Omri, when you started, we're getting to time now. I thank you, appreciate the insights that you've given us. Now that you've stepped down and are exploring the world as you move forward, the freedom of that mind at the moment gives you a great opportunity to stand on a pedestal and look around you. And whether you are, I'm sure you've decided to take some time off, but if you were to look forward in the next 24 months, as investors and entrepreneurs, what kind of space or technology or infrastructure should we be paying attention to today for the next, that's going to have an impact in the next 24 months?
Look, I can tell you that the oldest businesses are still the most interesting businesses, to me at least. So if you think about money, right? You know, fintech, I've spent a lot of time in fintech, and you think about the ongoing evolution of fintech, despite the extraordinary success of Marqeta, despite the kind of modernization of card issuing in that space, for example. I don't know what the exact numbers are, but I think in the S1 they have treatment of this, but it's still, you're still in the 1% of market share with respect to card issuing. We are just at the beginning of multiple revolutions in how we think about money and value exchange. So whether that be card issuing, whether that be real-time payments, crypto and blockchain versus fiat, I mean, there's just so many spaces to stay in where there's a disruption that's going on at the app layer, at the service layer, and at the infrastructure layer, and will be for years to come. What's another space that I think, you know, I keep hearing about and sensing it's time for a pretty significant change is healthcare, right? One of the oldest businesses still in America, at least, extraordinarily inefficient, extraordinarily expensive to deliver, pretty mediocre care across the board. And one of the interesting things, if you think about the arc of US industrialization, the 20th century saw great productivity gains from manufacturing and kind of adding services and manufacturing together. But the application of technology to those businesses is still in a very, very nascent phase. And there is so much infrastructure that is legacy infrastructure, legacy companies that are ripe for disruption. It's a candy store. If you're an entrepreneur and you want to go do something using that technology to solve even a small corner of either of those two industries, it's incredible, the opportunities that are there. And so I don't think you need to look much further, frankly.
Thank you, Omri. It's a great pleasure having you. So I know Sujoy is going to answer his question, and then he's actually going to be leading on into another panel that's building a diversified fund to address CPG markets. But we wanted to thank you, Omri, for your time, your experience, and sharing some of your thoughts with us and the future outlook. Appreciate it.
I'm grateful for the opportunity. Thank you, everyone.
Thank you.
thanks, Omri. It was great.
Yeah, you too, Sujoy.
Yeah, so Kareem, to answer that question, I think it's posed by Jeff. So, you know, having a tangible solution, this is a great question. First of all, I think it really depends on what industry and what background you have, right? So if you're a software guy and you're working on a back-end solution for a retail investor who doesn't have any software experience, this could be, you know, a tough, let's say, opportunity to evaluate versus, let's say, you know, a company like ours, which is producing a tangible product like a car. Now, some of those data points, you know, pre-orders, reservations, those are things that you can quantify. But when it comes to the actual product, you can go take a look at that product. You can see it in a showroom. You can actually test drive it. And those are just additional, you know, factors that you can look into when you're trying to make your investment decision. When it comes to a non-tangible product or a product, let's say, that you can't understand or can't see right in front of you, it does make it harder if you don't necessarily have that background. But that's where, you know, you reach out to your network, you reach out to your ecosystem where someone will be able to evaluate it for you. And you can still look at the traditional metrics, let's say the team, the vision of the company, where you think the overall market is going and the trends. And so there's different ways to look at it, but I do think, for the let's say average retail investor, seeing and feeling a traditional product is always easier versus let's say non-traditional product.
Thank you.
Yeah,
so
great.
Thank you. We're ending that session. We're done. Change hats. We're going to bring Chris and Nick on board now, and you're leading this conversation. Again, I'll drop in when I have to. It's a pleasure to introduce Nicholas and Chris, who are building this great diversified fund, or a differentiated fund, in relation to CPG. Now, what was interesting to me as we look at liquidity, in most cases, people think of IPO or these days, what's it called, blank check or direct listing or one of those things. But I think we overlook time and time again is those companies that are actually going through liquidity events through acquisitions or merger, or more specifically acquisitions. And when you talk about building your fund at Grant Barker Capital, we look at CPG environment. Now, we had a couple of other panels before. We had Better Food Ventures here, and prior to that, we had gaming, and we all talked about CPG to a certain extent. So, Nicholas, welcome. Chris, welcome. Sujoy, I'll let you talk. Introduce your guests. Talk about the business model.
Yeah.
Ask a lot of hard questions that we are to do this afternoon, and tell us a little bit more, and then I'll pop back in.
Yeah, no, absolutely. And again, just so your audience is aware why I'm speaking here on this panel again, I've just spent the last 30 minutes talking about more of the operating side of things. Part of what I do is I also have several advisory and consulting positions. I'm a consultant to a last mile delivery company where they're focused on food delivery and building these electric scooters, companies called Zumo. I'm also a consultant to a new venture capital firm in the mobility space called Assembly Ventures, where they're really focusing on the future of mobility, so smart cities, transportation, logistics. And Chris is a good friend of mine. Chris reached out to me and asked me if I was interested in being part of his leadership council. So Chris and I met up a few months ago, and he started telling me all about this new fund that Chris and his partner Nick were building. And right away, Chris was able to sell me on joining their team, really because of what they're focusing on. And again, when I'm looking at new emerging funds, and again, there's many emerging funds out there, I really look for differentiation. What Chris and Nick are building is really exciting, especially when it's focused on a completely different sector than, let's say, most of you on this call are focused on. So they're focused on the CPG sector. Again, 95% of the market is really focused more on the tech or TMT sectors. So Chris and Nicholas have really positioned themselves focusing on CPG. And Chris, maybe you could chime in here and talk a little bit about what you're building with Grant Barco and why you're focusing specifically on CPG and how you're differentiated here.
Sure. Hi, so thanks for the introduction. My name is Chris Hahn. I'm the general partner of Grant Barco Capital. Very excited to be here. And to answer your question on why we're doing food and beverage is because I've always just been in the food and beverage business. That's all I've done since I graduated from college. First company I worked for was a company called Rima, which was a large private food import company. So for example, the tuna, banana peppers, you order at Subway sandwiches, that was from us. And then from there, PepsiCo reached out to me to work for them. So I got to work with some great brands like Gatorade, Tropicana, Quaker, Pure Leaf Tea, Starbucks, etc. And that was a great learning experience. I started from the bottom as a sales rep and merchandiser and worked my way up to key account manager. And then I ran the Midwest region. So I moved from New York to Iowa, and I got to visit 7 Midwest states I never thought I would visit, like South Dakota. But I had a great time. It was awesome. And then Anheuser-Busch reached out to me to work for them. So I was employee number 3, worked on the new Starbucks joint partnership. They launched ready-to-drink glass bottles of Teavana. And that was an awesome experience because I learned everything. I joined the team prior to when we had a tangible product. And I got to learn a lot about supply chain, finance, trade marketing, contracting, sales, distribution, etc. And then from there, I became the national director. I was actually the first director to run the wine business for Anheuser-Busch. So I was in partnership with the wine group, which is the second largest wine company in the world. I worked on the brand Cupcake Wine, and then they own Franzia, Chloe, etc. And then from there, we ventured off into spirits. So I was the national director of wine and spirits. But part of the reason why I wanted to start, I left. So I left back in November of 2020 to start this. And the main reason why was because, number one, I always had this entrepreneurial spirit and always wanted to do something on my own. But most importantly, Anheuser-Busch had a venture capital division called ZX Ventures. And ZX Ventures, I got to sit in a lot of meetings and worked a lot with them. And their role was to acquire companies. And then where I came into play was figure out how to get them into distribution and to get the product onto the shelf. So I realized that I could do this on my own because I personally knew about 70% of the distributors nationally, and they're not corporate owned. It's not owned by Anheuser-Busch. These are all private companies. So I have great relationships with them. And I realized that what I had to do was pretty much identify good companies for us to invest in and just plug into my network of distributors I knew. So when I started, it was just by myself, but now I have two great managing principals, Nick Timports and our other managing principal named Noah, who's also our general counsel. And I have 12 folks on my advisory board, including Sujoy, and 9 of them are all executive CEOs of major CPG companies such as Pabst, GoPuff, got folks from Anheuser-Busch, Miller Coors, etc. So that's how we kind of got to venture into the space.
And how did you meet Nick? I'd love to learn a little bit more about Nick's background and understand how you guys are a good team together.
Well, funny story on how I met Nick was when I was working at PepsiCo. We had a meeting in Chicago, and it was my first time visiting Chicago, so I decided to extend my trip into the weekend. And I went to this nice little speakeasy bar, and he sat next to me at the bar, and he ordered a really good old fashioned, and I was like, wow, that looks good. So I ordered the same thing, and I shared with him, and then we started talking, and then we became good friends. So
that sounds like you, Chris.
Yeah. It always sounds kind of romantic, but he's one of my best friends now. So,
Nick, why don't you walk us through your background? Now, you've sold 2 previous companies. You're an operator. You're now an investor. Up to you for you to give your background here, and then I have a few other questions.
Sure. Let me just do a quick sound check because we didn't get to that before I jumped right in. So, can you hear me okay?
Yeah, I can hear you.
Okay, perfect. So, yeah, my background is really in advertising and marketing, and that's where I've always, for the last 20 years, focused, starting several companies and then kind of moving through the progression of the last 20 years of technology, right? So you can imagine that over that time, adding on bit by bit as you move from traditional television, print, radio, advertising economy to the programmatic, social network, app-based advertising economy we have today, which offers an incredible amount of opportunity. These skills are now highly technical, and they are deep. So there's a lot of different areas you can focus on. But the benefit of kind of coming into my career through all of that, and so being able to piece that together, I have the partners and the network to help our portfolio of companies make the right decisions when it comes to specifically direct-to-consumer, which is a huge area of concern for most new consumer packaged goods or even mid-sized consumer packages. How do you get out from under the traditional retail model and begin to attract and sell directly to customers on a one-on-one basis? This is where everything is going. We're just closing Prime Day right now, which is one of the best examples of that in the world. And I would expect that it's going to be yet another record-shattering 2 days for Amazon. So, we're all about kind of this two-sided approach where Chris is bringing his traditional experience with this network of distributors, wholesalers, and retailers, and I'm able to layer in this additional component of moving people quickly, our portfolio companies quickly to a direct-to-consumer relationship in parallel with the retailer, wholesaler, distributor relationships.
That's helpful. That's really helpful. Now, I guess, a few questions from my side. So as we all know, venture capital has outperformed the market over the last 3 years. 2020 was a record year for venture fundraising. And it looks like 2021 will be another record year. But surprisingly, first-time investments into first-time managers has declined by nearly half, from roughly 160 emerging managers in 2018 to roughly 80 now in 2020. So what are you doing differently to build a differentiated fund? Why should some of the people on this call invest into your fund? And then maybe we could dive a little bit deeper into the fund. What metrics do you look at? How much are you raising? What specifically subverticals are you looking to analyze?
Yeah, so that's a good question. I mean, over 95% of VC firms are tech focused, and we're food and beverage. And one awesome thing about food and beverage is that it's a necessity. Everyone understands it. It's not rocket science that we're trying to sell. Part of the reason why I want to get into this is because major CPG companies like PepsiCo, Anheuser-Busch, they're horrible at building brands themselves in-house. So what they do is they like to identify, and I work with them personally, right? Both PepsiCo and AB. I've seen it firsthand where their job is to identify companies that are growing, and once they identify those companies, they're able to then acquire them. And the multiples are insane. Like one company I worked on was Babe Wine, which is it's a canned wine company that was owned by a social media star, but its name's that Jewish, if you guys are familiar. Anheuser-Busch bought that wine company for about $120 million. And I checked the numbers myself, and they're probably doing around, I don't know, anywhere between 5 to 6 million, I would guess, in sales. But the deal acquired at 120 million was unbelievable. So the multiples are just as high, in my personal opinion. That's what kind of excited me. And with my help, with my expertise, with my relationships, and with Nick's expertise in e-commerce, my job is to identify companies myself. We use a lot of analytics. We have a proprietary system where we use data. We use third-party data system where we're able to track any item that scans to the register. We're able to get that data and see how well those companies do. So we're able to track sales. We're able to track what percent of distribution they have in the whole retailer universe. We're able to identify average rate of sale, average items per store per week. We can get super granular. So any company that has a very positive growth story, any company that's been growing year after year, we're able to identify that. And then once we decide to invest and partner with them, our job is to then plug them into our distributors, because it's really hard to create your own product without having those proper relationships. So for example, Sujoy, if you want to start Sujoy's Coffee and you sold into, let's say, Target or Walmart, congratulations. But if you don't have a distributor to go in there, to go and sell it, to merchandise, good luck, But distributors have.
Chris, I wanted to just say, like, this area, consumer packaged goods, it's not your traditional, like, software, or even it's harder than that to disrupt. There are very few true disruptors in this space, and a lot of that actually goes back to Prohibition era laws and laws that govern, food and beverages, consumable items that are not going anywhere anytime soon and are actually quite difficult or impossible to get around. And so what you'll often see is any brand that's able to inflict enough damage into a large global conglomerate will get acquired at a very high multiple as a defensive play. And that model has proven out. I mean, we've all heard of, for example, Dollar Shave Club getting acquired by Gillette, and that was a $1 billion plus acquisition. And there are many more after that, where shelf space and direct consumer relationships resulted in an actually accelerated acquisition phase, where something that would have taken a 5 to 10 year liquidity type time frame, we're talking 2 to 3 years. So if you have the relationships and you're able to play within the traditional kind of handshake deal type of rooms that this all occurs in, like Chris is, you can actually bring somebody into a position for acquisition much faster than they would ever be able to do themselves, if they would even ever be able to do it themselves.
Right, and that makes a lot of sense to me. I mean, you have all these large mature companies like a PepsiCo, for instance. They're all looking to continue to grow, right? And how do they continue to grow? It's really through this inorganic method of acquiring companies. So what you guys are doing is really scouting the market. You already have these relationships in place. You're already able to track which brands are doing well. And basically, when you go and make an investment, you're also able to support them in terms of the aftermarket via distribution networks. So this obviously makes a lot of sense to me, and this is exactly why I'm excited. And maybe you could explain, obviously, in this new world that we live in, influencers are very important, especially in the digital age. How important is, let's say, having the right influencer to support your marketing needs, especially for all of your different brands that you're looking to invest in? And then also, just lastly, let's also touch upon the fund. How much are you looking for? How much capital are you looking to raise for your first fund? How much have you already raised? And then also, what type of capital?
I'll let Nick answer the influencer one first.
Yeah. Okay. Yeah. Good. Then you take the money stuff. So yeah, influencers, and let's define that first. These are typically, in the CPG space, what I consider to be kind of bifurcated into two portions. You have celebrities. And celebrities come out with consumer packaged products all the time. Lately, we've seen things like tequila and gin. With even The Rock now is just, if you look on his Instagram, it's pretty much all tequila-based messaging, because that's what he's up to right now. And there's a reason for that. He's able to bring a differentiator to a category that is, for the most part, hard for American consumers to understand or differentiate between products on the shelf. So that's one category. Certainly that has a lot of value when we see a deep partnership with an actual household name celebrity. That's something that we take into account when we're having conversations with those companies. And in fact, we have a fairly major announcement that we can't share today, but in the near future, we'll be able to share with a partnership just like that for one of our portfolio companies. We're very excited about it because that will bring immediate differentiation and credibility. Now, the other side of it is marketing and the day-to-day grind of bringing in influencers to try and talk about the product online. I think that's going to be something that will be a part of every brand that's in our portfolio. We're not operators, but we will strongly suggest that be part of the strategy, just because it's effective. And a lot of these products, you have to try them, and you have to be encouraged to sample before you're a consumer for life. And so influencers can play a great role in that. I mean, it's going to be different for every brand. So unfortunately, there's no one size fits all. But does that answer the question, Sudra?
Yeah, no, it definitely does.
Okay, great.
And Sudra, to answer your other previous question, so it's our first fund. We're only 8 months live. So eventually our goal is to get to fund number 2. So our first goal is looking to raise 10 million. Yep. And so far we're a little below 2 million. But our lead investor is Philip Bush. He's a good friend of mine, but he's also one of the heirs to the Anheuser-Busch family. So having him on board was great to serve as a lead investor, because from there it's just been a snowball effect where I guess we call it the FOMO effect, where a lot of people are now getting really interested. And then with, as I mentioned before, we can't announce it now, but we have a mega global superstar that we're going to be partnering with. So that's been generating a lot of buzz and getting the leading support meetings with potential investors.
And I mean, this has been a big catalyst, right? Having the Anheuser-Busch family invested into your company. I know when I looked at your advisory board, you have the Wilpon family, you have several other figures that have huge celebrity status here, which I think will also help as you start to continue to market your fund.
Yeah, I mean, that's one thing I'm very proud of. I mean, if it was just me, Chris on, people would be like, okay, cool, like Warren. But I'm really proud of my advisory board, because there are folks that I built relationships with throughout the last decade of my career. So, I mean, just not to quickly name drop, I got Philip Bush, again, one of the years in the Bush family. I got Bruce Wilbon, who's the family that owned the New York Mets. I have the vice president of Pabst, great beer. I have the vice president of GoPuff, which is now an $8 billion e-commerce company.
Yeah.
I got 2 Super Bowl winning NFL players, Najee Good and Brian Raymond. I got the CEO of Willis Hot Sauce on my board, and obviously, and a couple other, and I got the vice president of the wine group, again, the second largest wine company in the world, but just a bunch of folks, a bunch of CPG executives and sports figures who sit on my board, which has been super awesome.
Yeah, I almost said no once I saw the Wilpon family, since I'm a Yankees fan. maybe one more last question. I know we're getting over time here.
So you're still on time, but I want to interrupt with a question.
Oh yeah, please, Kareem, go ahead.
So when we look at traditional funds, VC funds that they raise, it's a 220 or the 110 or the 125, whatever the management fee and the carry. This is a several part question. How are you structured? Secondly, when you look at traditional VC funds, the idea that they have is pay as a number. We're raising 100 million. We're going to deploy this over 5 years. We're going to invest in so many companies because we know 95% of them fail, and you'll get maybe 5%, 3% will do a home run, which will bring up the averages to a certain IRR or return on your investment. Help us understand a little bit of how you're structured, what your time horizon looks like. And the third part of this question, if you look at your initial investor and the advisory board that you have, there are questions that are going to come up, which people are not asking. Well, if that's the level of advisory board and that level of backing that you have, the $10 million should have been pretty easy to raise, given your experience. So if you could address those things.
Yeah, I think, so it's a $10 million fund. We are looking to, how it works is it's a traditional, so 20, but 2.5 model. So what I mean by that is, we keep 20, once a company gets acquired, we keep 20% of the profits. But for LPs, when they commit, you have to pay 2.5% for management fees up to 6 years. Our investment period is 4 years, and then but we're open. It's 4 years, and then our fund term is 10 years. But even though it might seem like that's quite long, it's actually the norm. I especially consult with a lot of my attorneys. So that's the whole the structure portion of it. But to answer your second question about yes, I have a pretty stellar advisory board. By now, should I have raised 10 million by now? But to be fair, we're only 8 months in. I started this company in November 2020, and it was just me. And then by January, I was able to then get Nick, get my other managing principal, and then form this advisory board. So when I started, it was just me, just by myself. So if you shave some of that time off, we're technically maybe about 5 months in raising. So, but I personally think the traction that we made so far within this short amount of time has been pretty good. So I'm pretty proud of what we've been able to accomplish, especially for, we're merging managers, first time funds. Never raised money before in my life. So this year.
I just got on. Okay, all clean up. Thank you.
Okay, perfect. Thank you. See you on there.
Thanks, buddy.
Yeah, I want to say something too here, because the reality is what we're building is new. And go find another CPG fund. You won't find one. It doesn't exist, and the model doesn't exist. So we, before we go out and raise money, we wanted to make sure that we understood the risks and the opportunities. And that took actually a lot of analysis and soul searching, because many of the companies that we thought we wanted to invest in month 2, we realized by month 5 that there's certain issues with those that would not make them great long-term investments for our LPs, and that's important. And so when the three of us came together, and Noah, who isn't here today, is an experienced attorney that really has helped us take what would be a kind of traditional standard for VC and bend it a little bit to the unique situation that we're in an environment that really doesn't have a set model. we needed our time to figure out exactly how we want to do it. But now, we have, as of probably the last 8 weeks, we're really focused around, about 60 different data points that we look at and evaluate a company. And that has so far proven out to be a really great way to move forward, because it lets us cut through a lot of the noise and, focus on the companies that are potentially, big winners over the next 4 to 6 years. And so Chris is a very humble guy. He's definitely, it is the first time he's raising a significant amount of money. That is true. But I really think that he's also cautious about how he does it. And, we just wanted to make sure we've got the right types of lenses to view this world through. We're kind of in a new territory, but I think that's exciting. And I think it should be exciting for anyone that, wants to allocate a small portion of their investment into something that, truly has a lot of upside potential and is in a different space than software, than, your traditional VC companies with, high multiples. These are just as high and maybe higher. We're very excited about that.
Thank you. So, Sudhir, there is a question for a Q&A, and you can direct that question, but
yep.
I wanted to just make a comment here. It seems like throughout the course of the day, what we've been hearing is that this is not easy. Identifying companies, diversifying your portfolio, selecting companies to invest in, identifying the jockey, and to a certain extent, identifying the horse. Which race are you at? What are you doing? Making sure you're at the right game. That's important as well. So thank you for clarifying that. So as we go through this learning experience at Global Invest Conference, it's just something that we all need to pay attention to, right? I mean, it's important to understand that this is not an easy task for anyone in any industry, in any vertical, and to actually pay attention to some of the people who are spending most of their time doing what they love to identify some opportunities for the rest of us. So, and in that case, I mean, the plug for Link2 obviously is we've identified companies that are interesting in different verticals, and you'll find this on our platform. And there is a special going on right now. If you're a first-time investor and wants to diversify some of your portfolio, look at Link2, register there, and we'll give you $1,000 credit towards your investment if you're a first-time investor on Link2. And if you're a returning investor, choose something that's different from what you already have on your portfolio, and we'll provide $1,000 credit to that as well. So keeping with the theme of identifying companies, it's not easy, it's tough, it's a long road. But understanding what you want to invest in is important, and understanding that due diligence is just as important in whatever you do is significant. Sudhir, do you want to take the last question, and we can move on to the next panel?
Yeah, absolutely. And maybe just two things to add as well. Listen, obviously I've been speaking for the last hour or so. My background is tech, media, telecom. What I really am excited about with Nick and Chris and what they're building at Grand Barco is the fact that most tech funds, you're going to have 1 to 2 large winners that will really define the multiples and the amounts from those 2 specific wins, right? Mostly everything else, 90% will be loss making. With what Nick and Chris are doing, they're focusing on CPG, which is really a focus on capital efficiency, right? And so when you want to diversify your portfolio, sure, I'm heavily invested in tech as well, but I also look at de-risking my portfolio. This is a perfect way to do that by investing across CPG. That's why I really like this. You're going to see a lot more wins, really focus, let's say, if you're a statistics guy, focus on the center of the mean versus then just, let's say, extreme outliers, which will get you that 100, times return. So here you're going to see maybe, let's say, less multiples, maybe, 5 times return, 6 times return, but you'll see that on a more consistent basis. And I think that's really important when you're creating your own portfolio. So just getting to the last question here, this is by Jeff. He asked basically, as you're looking to continue to raise capital for your fund, do you prefer, let's say, a large syndicate or a large number of people raising from that, or let's say a small group with, let's say, 2 people with 5 million each? Do you prefer one? Or does it really not matter as you think about your cap table?
Well, if I had a preference, it'd be less LPs versus a whole group.
Yeah.
Because it's just less relationships to manage. And if I had 50 people trying to invest, that's a whole separate amount of time that I have to put into manage those relationships. So if I had a preference, it would be I'd rather have a smaller number of LPs who are committing much more money into the fund versus the alternative. But I won't say no to any option.
All right, sounds good. I think that's the question's answered for Jeff. Kareem, is there any other questions? Or
No, thank you very much, Dick, Chris, Sujoy. Thank you very much for your time and effort, and hopefully we'll get positive feedback from our viewers today. Says, hey, start a fund, get involved with your fund, and hopefully we'll see what that reaction is, and maybe you'll give us the opportunity to get engaged with you at some point in the future as you find more traction. Thank you so much.
Absolutely. Thank you very much.
Thank you.
Thanks, Chris. Thanks.
Thanks.
Bye-bye.
Now, if you want to find out about CPG and outer space or space, stay for the next event. And as we welcome our next group, Victor, led by Victor, joined by Buddy, Jordan, who did I miss out?
And Peter.
And Peter, yes. So outlier, I think we take that word from the last session and we go to space. Victor. By the way, I've had a great podcast with Sujoy and his group. That's on the website that you can look at. Victor and I had a great conversation. I don't remember us doing a podcast, but very in-depth, very, very enlightening. And today he's going to bring a little bit more. You were with 25 years. You were with a very large, promising company. And then you took the leap and you're doing Cambrian works. I mean, it seems like everyone's talking about space now. Victor, can you talk a little bit about your background and introduce Peter and Buddy and Jordan? I know you guys are in the investment space looking at as well investments in strange, wonderful environments, and make introductions of yourselves and tell us a little bit about why this market's important. And I'll pop in after the introductions. Thank you.
Okay, sure. I'll do a quick start. I mean, I started working in space about 35 years ago and have been involved with NASA, with the DoD, with the intelligence community, the whole spectrum of the US government, as well as international space science activities over the course of many years. And as I mentioned by Kareem, just decided about a year and a half ago to really jump into the space venture side of things and get our company started. We're finally seeing, I'd say, a tremendous infusion of new technologies and capabilities and realization of how space can affect the global economy and how a separate economy can be blossoming in space in addition to interacting with the terrestrial economy. So that's been a focus of my career, developing new technologies and figuring out how to utilize space and not trying to do that commercially. And so based on the request, I invited Jordan, Peter, and Buddy to join in. Peter's actually the CEO of a company. I'll let him introduce himself. And then Jordan and Buddy are involved more on the investment side. I'll let them introduce themselves as well. So go ahead, Peter.
Victor, thank you so much for the introduction. It's great to see you again. It's kind of funny to see both you and Buddy. Victor and I worked together at SRI International when I was leading the federal government activities there, and Victor was running the space team. And then Buddy is lucky enough to be investor in two of the companies that I've been CEO of. So happy to be really nice to Buddy on this call. Anyway, it's a pleasure. I am Pete Can. I'm CEO of Axion Systems. We are a 6-year-old startup just about finishing our Series C raise, and we provide highly efficient, very small thrusters or engines for satellites in space to enable in-space navigation and movement for satellites of all sizes, starting in low Earth orbit all the way to GEO and even interplanetary. And shameless plug, we have 2 systems going up on Friday on the SpaceX launch, so just look up and you get to see us, so it'll be exciting.
You want to go ahead, Jordan?
Yeah, absolutely. So I'm Jordan Kroom. I'm an investor at Side Door Ventures, which is a generalist fund with pre-seed to Series B investments. While the fund is generalist, my background's in deep tech and frontier tech as a technologist in space, robotics, drones, additive manufacturing, and autonomous vehicles. So my focus is in investing in those areas, or at least my particular interest. So really interested to talk to you about space investing as well as some other frontier tech stuff. Yeah, pass it over to Buddy.
Let's see if I can get my mute off. Hi, everybody. Buddy Arnheim. I am a co-founder of a new venture fund called Lobby Capital. We launched our firm about 3 months ago in connection with the closing of our inaugural fund, which is a $250 million early stage focused, very traditional venture fund. What brought me to the venture business is I've been a very active angel investor over the last 20 years, investing across a bunch of different technologies, from marketplaces like OpenTable and Trulia to infrastructure software like Cloudera and application software like Box. About 7 or 8 years ago, in my nights and weekends, I ended up co-founding a drone company called Time.am-am, which had the vision of creating atmospheric satellites, so solar-powered drones that fly at high altitude, from which you'd be able to provide different communication services and imaging services. And a couple of years into that journey, we were acquired by Google, which gave me a little bit more resource to continue investing. And in particular, at that time, I started focusing on more frontier stuff, drone stuff, aerospace, computer vision, navigation, and so forth. I also, more recently, ended up helping get another company off the ground called Spin Launch. And Spin Launch is about a 3-year-old startup that believes it has a mechanism for getting things into space cheaper, faster, with more reliability. And they're doing it with a giant vacuumed vacuum chamber centrifuge. In any event, I am an investor in Axion. I've done a number of other sort of aerospace and new space related things. Happy to tell you about all the learnings and scar tissue that I've developed along the way. But I am a believer that we are in the verge of an incredible new market in space and all the resources that are going to come with that.
It's funny. First of all, Peter, congratulations on being funded and seeing some of your equipment up there in space. And then Jordan and Buddy, thanks for your support for all of these emerging entrepreneurs. And I'm sure Victor will have something there. What's really interesting for us to see and our group here is the opportunities that we don't have visibility into. Right? We, like you, Buddy, we've looked at traditional. I mean, we made our first foray and we invested in Zipline. We're along on Zipline, as a drone company. But, that's available on our platform for early stage investors. But what we'd like to see, and the purpose of this Global Investor Conference, is to get some feelings and get some perspective from folks like you who are on the front line. Jordan, Buddy, you look at lots of technology. We are interested in hearing some of the scar tissue, but we're also interested in hearing what the future looks like. And I think there's a fund there, I'm not sure, but a different perspective or a different viewpoint. I've heard a lot of the traditional things a lot of traditional technologies you talk about. I think one of the things that led us to invest in carbon was we understanding that 3D printing was leading to a lot of research, development, and manufacture of products that could not be done traditionally. And so 3D got really interesting to us, and that's why we invest in carbon. But educate us a little bit on the higher level and the perspective that we need to take to identify the up-and-coming trends, up-and-coming companies that we need to start paying attention to today to start understanding how we can make progress in 2 years. I don't want to go 5 years because I think things have changed so quickly and attention span is small. So Victor, can you start, or Buddy, or whoever wants to set a stage for this?
I'll make an initial comment. I mean, my key focus area has been on the major change is the shift in perspective to what I call global systems and the ability to actually envision the whole globe as one place. And so you see some of the early stage activities that are dominating now in communications and Earth observation. But I think it's going to go beyond that, where we start thinking about how global systems tie together, like global logistics. And we're seeing things associated with maritime and terrestrial logistics and how things tie together, for instance. And companies such as Amazon and such are taking advantage of that already in their terrestrial instantiations. I think you're going to see that happening more at a global scale. In addition, I think there are industries that are going to start to see more activity that are not related in any way, shape, or form to boundaries. For instance, medical. Amazing amount of things can be done in the medical profession that don't depend on any one particular country, and so they can span across country boundaries, and also then do things in space that apply to all countries they might want to work in. And then similarly, financial and insurance are two other sectors that have a tremendous amount of activity associated with them that's really global in nature. I mean, you can start to tie financial systems across the globe and make a connection between what's happening in, say, Singapore and what's happening in New York in a more timely fashion. Not necessarily high-frequency trading necessarily, but things like exchanging the right information about what trades are happening or what kind of reference material people are using for their decision-making. That kind of information shared globally has a significant value to a business and is not then impeded by boundaries of geography or political boundaries. Just a general comment, I'll let anybody else. It sounds like Buddy has some ideas there too. So.
No, I think that's I will sort of echo your sentiment. It's interesting. I think I caught the tail end of the prior discussion where one of the investors was sharing that their perspective is to shoot for the moon on each investment, and there is a little of that in the venture business. Having been a sort of early stage angel investor and seed investor, the lens through which I sort of made those investments were more pragmatic, and they were oftentimes oriented more at a 2-year time frame than a 5 or 10-year time frame. As a venture capitalist, my eyes are sort of have a little wider, a little longer, little less myopic. They're looking outward a little bit further and looking for larger opportunities. But when I think of sort of the new space world, or just aerospace generally, I think about what infrastructure needs to come into existence in order to enable the resource exploitation, the sort of travel and entertainment opportunity, the sort of curiosity and science opportunities that this new environment potentially brings. And I think of things like launch, and I think of things like SAT to terrestrial communication. I think of different form factors and different sort of orbits for satellites and that have different types of missions. I think about the things that are necessary to keep those satellites functioning for a period of time, because it's not cheap to sort of build and launch and manage them. So space debris and monitoring space debris is interesting to me. I think of refueling. I think of, so there's a whole bunch of I'm not going to go on and on about this, but I think about the infrastructure, and to me, those are sort of the exciting places to place a bet that could come into sort of a liquidity event over the next 2 to 5 years. After which, I think there's a whole nother realm of opportunities that are fascinating. By the way, the 2 to 5 year, don't quote me on that time frame, because I think anybody that has more than sort of a minor amount of confidence on timing is either a fool or kind of non-human. But if I were sort of to share with you where we're looking for investments that are going to pay out under a sort of standard venture time frame, that's kind of where we're looking, more on the infrastructure side.
I'll take a shot at this next. So I guess when thinking about what's interesting about space, the high level way I like to think about it is in terms of resources. So space has some really unique resources that are either difficult to get elsewhere or impossible. So there's infinite or unlimited functionally power, heat sources and heat sinks. There's zero gravity. There's free vacuum. There's isolation from disturbances. There's line of sight, which is what you're thinking about with all these Earth observation opportunities. And eventually in the glorious future, raw materials exploitation for space-to-space markets. So you can pretty much condense any current space business or foreseen space business into those categories. But I think it's also important when looking at these to consider the basics for investing, which are you want to invest in a company that has a product or service with a clear market that's ideally really large, with customers willing to pay, and with some durable advantage. And I think some of the early pitfalls in the space market have fallen short on that last box there, which is the durable advantage, because just because you're building something in space and it's hard to do it, doesn't mean there's not somebody else who can do it too. And you see some of these trends in the consolidation of the launch market, for example, where when SpaceX was around, it seemed impossible that somebody else could challenge them, and now there's actually quite a few competitors driving costs down. And my bet is that in the next 2 to 5 years, I'm willing to commit on this, that there will be some consolidation of either failed companies or mergers there because they simply can't compete on costs due to commoditization, or there's some lack of differentiation between them and other competitors. So definitely have to keep the fundamentals in mind, even though this is a really interesting sort of quote unquote moonshot opportunity.
The only thing, Kareem, if I may jump in and add, a 2-year time frame in space is instantaneous, if you will. Just to give a sense, we were ready to put our product into space, last year or earlier, or one of our first funded, customer missions, and we're going up cheap flight ride share. We booked that ride on the rocket last March. It was supposed to launch in February, and it's now launching on Friday. So that's a product that's ready to go with a paying customer, proven, regulatory approval, all this, all the kind of stuff you've got to do in your 16 months from I got an order to launch. Sometimes it can be quicker, and we certainly, I'm with Jordan, man, I want all those launch providers to come super fast because we could use more rides as it comes in. But I think if you're looking for a liquidity event in 2 years, you're looking for someone who's later stage, already in space, and has some initial customer set. Otherwise, if they're saying, hey, I'm going to go mine water off of meteorites, or I'm going to do manufacturing in space, but I'm going to put my system up, or I've got this super cool optical comms capability that will connect all of these mega constellations and shoot the internet and Netflix videos across the world instantaneously with no internet fees. But I don't have anything up in space yet. You're 2 years away from anything going up in space, from showing that capability, much less a liquidity event.
But I will add to that comment that, I'll say one of the things that I think is changing dramatically is the access to space has already shifted dramatically from a maybe 2 to 3 year time frame in the past to now 12 to 18 month time frame, and rapidly increasing. And I think what you're going to see over the next 2 years, quite frankly, is that opportunity space of people who can get up there and do things 6 to 8 months, 6 to 9 month time frames, as ones are going to start leading the floor, as it were, into the new era of space, where it's no longer taking years for things to be matured. And in fact, you can start seeing product or start seeing technology being applied in less than a year time frame. But it's still going to be longer than terrestrial necessarily. But I think it is improving. It's increasing rapidly.
No. I appreciate the feedback and the catalyst, because we just need to set the stage, right? It's like, hey, if you're going to invest, this is a longer term horizon than you ordinarily think. It's almost like a sales cycle for SAP, but it's coming. It's coming, and it's coming quickly. Before we get into really eclectic topics like ownership in space and currencies that exist and various other things, talk to us a little bit about the almost like the iteration of technology and some of the infrastructure technology I think Buddy was referring to that has iterated slowly or quickly towards enabling space investments.
I think that's one of the things that's actually changing very rapidly. Is a lot of technology, the way I like to think about it, has been pent up by the slow pace of getting technology to space in the past, primarily driven by the fact that access to space was dominated by governments. What we're seeing has changed over the last few years is that access to space has become much more commercialized. And so now you're breaking down those barriers to access. And so technologies that have been developing for the last 30, 40 years on the ground are going to leapfrog and be able to get into space very quickly as access opens up and people can get up there. Investment is still expensive and it still takes time, as Peter mentioned. It took almost a year and a half to get something to orbit that was already finished. But I think that's going to continue to mature faster and faster. And you're going to see high-end computing move into space that, 10 years ago, you wouldn't have ever seen a teraflop computer in space. But today, you get a teraflop computer on your fingertip. And it's, 100 times more power efficient as well. So you can now put that in space and do a lot more things on orbit than you could do. And you can actually move technology into space at a much lower price point than you could 10 years ago.
So when we look at return on investment, and these are going to Jordan and Buddy, I think to a certain extent, is when you invest in a company that's doing space technology, how do you measure the return? How do you measure a value?
Well, on the front end, it can sometimes be difficult because I see a lot of pitch decks from companies that are, you think about sort of a quad of existing technology, existing customer, new technology, existing customer, new customer, existing technology. A lot of the companies are falling in this upper right corner, which is new technology, new customer, and that's a lot harder to evaluate because especially if it's a new market rather than a new customer. You have to kind of take it on faith, which is a big leap, and you see companies where that's paid off, but I think it's more seldom. The good news is that a lot of companies can establish a foothold in existing markets, or at least existing customer bases of some kind, where you can establish what is the order of magnitude opportunity here, and then you're taking a leap of faith in the technology, which is to some degree easier to evaluate. So I think if you're in this sort of new technology, new customer space, that's definitely sort of the realm of angel investors or something like that, where you're focused on enabling something new rather than necessarily making a huge return.
Yeah, I think it's really, I think Jordan nailed it. It's really hard to get your mind around, get confidence in a plan that talks about sort of customers that don't exist today, or companies that exist today that have not spent on anything remotely similar to what the startup is peddling. In the aerospace world, there's a couple of case studies that I think are worth paying attention to. Boom Supersonic, which was is an upstart building a supersonic commercial jet that came out of YC, was successful in raising its initial round of capital, not only because it came out of YC, not only because it's run by a brilliant entrepreneur, but they had non-binding LOIs to purchase the aircraft. It was, of course, non-binding and subject to ifs, whens, buts, but it nevertheless demonstrated that Boom had conversations with potential acquirers of these aircraft, and that assuming some sort of major milestones were met, that those customers would be inclined to buy, and that gave investors a lot of confidence, at least to sort of place that first bet. It validated that there was demand, there was likely to be demand in the market for what they were building. In the space launch world, there's been sort of similar approaches towards validating the opportunity, where companies have gone out, and I am familiar with one in particular, went out to potential customers, both sort of traditional businesses as well as upstarts that were sort of prophesizing that they were going to launch and manage constellations, went to those folks and said, hey, if we could do this, and if the cost per kilogram is this, and if the cadence is that, and if the liability is such and such, would you be a buyer for some rideshare on our aircraft, or our launcher? And the answer was yes, assuming all those great, wonderful things that may happen, we would be buyers, or we'd be inclined to be buyers. And so I think in the new space world, that's part of it. There was a business that I'm not an investor in, but I've sort of taken a close look at, and I think the founder is wonderful, that's doing refueling, in space refueling. And there's not a lot going on right now. There's not a lot of satellites that are being refueled today. But if you believe that there's going to be constellations, and if you sort of believe that the companies behind those promising constellations are thinking carefully about their infrastructure needs, that company went to those folks and said, hey, if we had this, would this be of interest? Would you buy? Would you want us to help refuel? And the answers came back, yeah, that would be super interesting. It would extend the lifespan of our aircraft, and that would be of value to us. So I think that's a long-winded way to say, I think the way smart startups have tackled this question about, is there a market, is to sort of talk to different types of customers early on and get non-binding albeit specific commitments from them.
So Peter, this one is next for you. I know if we ask you for your scar tissues, there'll be a lot, but we have limited time. So tell us about your deepest scar tissue in trying to raise funds, and then your greatest joy and what it took to get there. How did you have to change or adapt or adopt your messaging to get investors to back you up?
Yeah, it's an excellent question, Kareem, and I think it's common to any hard tech play, and certainly one with a longer time frame in hard tech like space. And you know, it's something I had to learn. This is my first space company. I've run other startups, but this is the first space one. So first, there's a couple, and it goes to how valuation happens, and it goes to what Buddy and Jordan said, which is a key point on getting those LOIs or that customer testimonial, even sales to pre-sales to get this to happen. So one is there was a lot of focus in the early stages at, I would say, the angel and seed level of the company on look how great the tech is. Look at what it can do. Look how it performs versus other thrusters or other engines. Look at the power of this team, the intelligence of the team, the strength of the IP that they're coming out with, and all this kind of stuff. But it was really all about the tech itself. And the business opportunity was seen as, well, of course, if there's going to be 30,000 satellites up in LEO pretty soon and things are going to be in GEO, there's going to be a market to be had. So early stage was all about, is there, as Jordan and Buddy originally pointed out, is there defensible, arguable tech that can, you know, other people can't do easily? And what is the scale of the team? However, the ability of the team to get there. As we got to the later phases, Series A, Series B definitely, and now the Series C, everything was about risk and access to market. And what I mean by access to market is access to space. So a lot of the investors are like, hey, that's really cool. Your team's really cool. Sounds like it'll work. Tell us when it's up in space and work, and we'll give you some money. So getting that space heritage, it is painful. It is painful. And a lot of companies will spend time, in fact, Axiom was spending time, trying to get free ways up into space. Hey, can we go up on this government mission? Can we get a customer to try us out if we beg, borrow, and steal, go on an academic mission? But those are hard to get, and B, unreliable at the time. And so in the end, not having that space heritage, you had a lot of customers saying, hey, great team, great tech, defensible, let us know when it works, and it's in space. And we had to spend basically a year building product on spec, getting into space, getting onto launches, you know, by hook or by crook, either paying for them or whatnot. But now that we have that, that's what's turned around our valuation. Not turned around, it was still very high valuation, but that's what made our Series C go much more positively, that we have these LOIs, these customer testimonials, these use cases, these demo flights, and systems in space operating was huge. Before that, you just had a lot of, wow, that's a really cool tech. We really, you take a lot of meetings. It was never a fast no, unfortunately. You'd love the fast no sometimes. Yeah. But it was a really long no, and the really long no came down to basically that, you know, investors, they're not stupid. They would call customers, they would call people in the field, and every customer would say, and that's what they have, if it works, is really cool. When it works, we're going to buy it. Let us know when it works. And until we have that space heritage, which is unique to the space industry, the space heritage hurdle, got to overcome it. So I would ask anyone who's sitting here investing, when you're looking at folks, and I think Jordan touched on it a little bit here. Number one is, how are you going to initially get into space? So if you're saying, hey, I'm going to refuel rockets on Mars, then how are you going to show you can refuel rockets at all in space before you ever get to Mars? What is that pathway? So what are your initial stepping stones into the market? And the second piece, if I was an investor, I would ask it in the first meeting is, what is your pathway to space heritage? How are you going to show you're going to be in space, and how are you going to do it? And how strong that is would tell you if that company has a pathway to at least get to those higher level rounds, or even to revenue.
And commenting on that, I think, you know, if you're a SaaS investor, a lot of times when you get to Series A, you're talking about what's your, you know, evidence of product market fit. A lot of the space companies that we see are raising, you know, seed rounds at $30, $50 million plus valuations, just because they need enough money to get to the next round and have that evidence of risk reduction without insane dilution. And it really requires a mind shift for a lot of investors that have been around in sort of like SaaS, where, you know, you can launch something with a few $1 million and have some customers, even if it's not your full scope product, but at least show that people are willing to pay, and they are in fact paying you. In the space market, that step is sort of replaced with this risk reduction. So I've seen companies where they're doing an Earth observation sensor, a new type, and they say, well, we put it on some airplanes, flew it over a city, gathered data, and we've made it look like it would look from space, and then we sold it to another company, and they're interested in it. So you kind of have to go jump through these hoops of how do we demonstrate product market fit without being able to build a product because we don't have enough time and money to do so before the next round.
I think a lot of that comes to what was commented to by everybody else, that you really have to start off thinking of an actual business model that makes sense. And I think that's the problem with almost all the efforts I've seen in space, and we all tend to slip into that if you have any space background, is you get enamored by the technology instead of thinking about the business model. And in the end, it has to really be a business model to make sense. And so it doesn't matter how cool the tech is, if there is no business model, as Peter mentioned, it's going to flounder eventually, and you're not going to get the motivation, you're not going to get the consistency back, and you need even to get through the risk reduction.
And you see a lot of companies fail in that step because a lot of people in space come from government funding backgrounds. Governments fund cool technologies, investors fund cool businesses, and it takes people kind of a little bit of time to make that shift.
Victor, if you would go into the Q&A section and look at the questions there on the bottom of the screen. It's about interstellar currency. I think we talked about that before, if you want to respond to that. And then the decentralized ISP architecture. Both these questions come from David. David, thank you so much for asking them. And we'll address those questions, and then we'll close out with a few words and get ready for the next round. Thanks.
Sure. So the first question on the interstellar currency, that is one of the biggest challenges or risks from a business perspective right now in space, is that there really is no particular space law outside of some of the space policies that exist and some of the space treaties. And so even who owns particular property, like if you go and touch a satellite, there's a big debate that goes on about who owns that satellite if something happens after you touch it. So there's questions about just the ownership of property in space still, let alone currency questions. And so I think those are very much open, and anybody who was interested in space and space investment has to understand that that is a totally open field, and I don't think there's any agreement yet on how that space currency question will be resolved, although there's a lot of interest in things like cryptocurrency, for instance, distributed currency systems that might not be tied to a particular national infrastructure, for instance, or a political infrastructure. So there might be opportunity there for some things like cryptocurrency. I don't know if anybody else in the panel has any thoughts on that as well.
A quick thought on that. I think the most likely interstellar currency is going to be water. When you get down to it, if your car breaks down on the side of the road, somebody offers you a pot of gold or a bottle of water, you're probably going to take the water.
Good point. Good point. Anything else, buddy? Peter?
So it was interesting. We had a couple of sessions before this, and it was Joshua Fairfield was up here, and we talked about exactly that, ownership in space. So we touched that a little bit, and that opened a can of worms there. And then we have mass robotics and Jason from Waypoint Robotics, and we talked about robotics in space as well, and what that potentially looks like. So there's a lot of aspects here that we can cover. We don't have the time today, but I would like to thank you all for showing up today, for educating us a little bit more, sharing your knowledge and time with us today. If you have a few closing words, absolutely, before I introduce our next panel. Victor, do you want to start?
I'll just say on that other question that was in the Q&A on the decentralized ISP architecture space, that's an area that I'm very excited about, and we see a lot of investment coming to see communications as the foundation for all other aspects of space economy, as well as power being the other one that Jordan mentioned earlier. Power is available in space. And so those two are foundational elements for a future space economy. And I think that over the next 2 to 5 years, we will see a dramatic revolution in space as people understand the question of how do you create a business model that makes it possible to actually do transactions and make revenue in space. And so we'll see how that goes. Initially, it'll be tied to terrestrial things, trying to return things to the Earth, but I think within 2 to 3 years, we'll see an in-space economy starting to mature. I'll leave it at that, and that'll stop. Jordan, any other comments?
I'll jump in. I mean, my only comment is Buddy and Jordan and Victor always put it better. So that ability to find a business plan and how are you going to get to space and how is space different for your tech is critical. People that I can move this light from this, this laser jet from this satellite to another. There are no plasma winds on the surface of the Earth. There's no changes in the magnetic poles on the surface of Earth. It doesn't, nothing throws you off if you go over the pole versus over the equator. All of that happens in space. So, how the team can start looking at those things, it's critical to have that sense. And, everything's put onto the team as you're doing your due diligence. We can help you with some of those questions with huge as you make the investment.
The last thing I'll add is, unlike some of the sort of tech sectors that we've seen come into existence and be fruitful over the last 20, 25 years, space is a sort of very capital. It strikes me that the winners in this new space economy are going to require a lot of capital. It's not a capital. It is hard to envision a successful space infrastructure business that doesn't consume a lot of capital just by virtue of the fact of what Peter and Gordon and Victor were saying. And so as you're looking at making investments in the sector, what I would encourage you to sort of think about is whether the team behind which you're about to place the investment is in a good position to be able to assemble more capital, lots of capital, as these very difficult milestones are met. It takes a certain species to sort of be able to access. The interesting thing that has unfolded over the past, I'd say 12 months or so, has been this whole sort of resurgence of SPACs that are really venture scale investments made by the public market. I don't know how long it's going to last. I don't know if it's sort of a viable opportunity, but for now, some of these very capital intensive venture scale opportunities, whether in new space or other places, are procuring capital in that fashion. But I wouldn't, anyway, that's just an observation, not sort of a promise. And but capital intensity is one of the things that these businesses seem to require, and that is inevitably also going to steer some early stage venture guys like me away from the sector.
Thank you. Jordan, close us out.
Sure. So one comment on SPACs, because how can I not take the bait? Looking at these, and I was doing so recently to look at some comps in the space, and some of these companies that are going for 1.5 billion plus, I was looking at the revenue, and they're at 20, 30 million in revenue per year, with these amazing PowerPoint charts that show them going to like hundreds of millions of dollars per year. But it still makes me a little bit nervous, and for that reason, I'm a little skeptical that this is going to last for a long time, or at least in this form. But I'm hopeful, because then it makes it easier to invest in space and get an exit. For those of you who are looking to invest, I think it's like I said before, it's important to keep the basics in mind, that you're investing in a business, not a cool technology. So you want something with a clear market, a large market, customers that are willing to pay, and some durable long-term advantage. And I think keeping that North Star in mind is really important to tread into this space, even more so than some SaaS companies, because it's if you're in YC, you can pivot your business idea for your SaaS company 10 times before launch day. You do not have the opportunity to pivot 10 times before launch day as a space company. So you really got to be committed to that long-term business.
Thank you, sir. Thank you, guys. Thank you very much for sharing your knowledge and time. Stay if you can. We've got an interesting panel coming up. 3 more. And the team's already here. Thanks. Thanks, Jordan. Buddy. Victor. Chris Lee, welcome. Christopher Lee. Gaurav. Welcome, Julian. So I'm glad you were all there at the very last moment of the event that we just passed. They opened a can of worms for you. SPAC, investable opportunities. I know Gaurav's got, 13 or 15 patents, 14 books that he's written. Chris, I know you've been looking at family offices, investments in the US, in Europe, in Asia, in Australia. You're looking at all sorts of investments with what you do. Julian, I know you're looking at all sorts of executives that you're placing into hyper-growth companies, removing others that don't do their job, and fostering an environment of success. So I'm going to leave it up to you, Chris, to lead this panel. Thank you all for joining us today. Chris, thank you, Laura, for coming, and for Julian. And over to you, Chris. Introduce yourself, your panel, and your topic. And we'll give you a little extra time before we have to shut you off at 5:05.
Thank you. So just for full disclosure, this is Christopher Lee with FAA Investment. I'm also a Series A investor in Thing2, and as well as also serving on the strategic advisory board. So my job is actually to introduce my distinguished panel to you. So we've got Julian and also Gaurav. And so let me say a few words about Julian, and then I'll say a few words about Gaurav. And Julian and I actually have known each other for a few years. And so he is actually now an investor and also the executive committee member for another angel group in Washington, D.C. called K Street Capital. So he'll tell us a little bit more about that later on. So he's been there for 5 years already. And you know, in the last 15 years, Julian, I think 15 is the right number. You've been with Hybrid and Struggle, right, since about 2006 as a partner and also a practice leader. And your job is to help big companies, the Fortune 500, to search for their CEOs and board of directors, and also specifically help them with looking for talent in government affairs and also public policy, right? So given your location in Washington, D.C., you're zooming in from D.C., so that is a very, I think, a big advantage that you have. And I should also mention that, Julian, you're also a member of the Economic Club of Washington, D.C., the premier forum for executive networking, which is exactly what we're doing here, you know, networking and also teaching each other about investing and also crypto ecosystem. And so in terms of board membership, Julian has actually got international mandate as well as domestic mandate. So domestically, Julian is a board member at the Public Affairs Council, the PAC, which is an association for all the people who work in public policy and also administration. And then internationally, you're on the board of US Ardian Association as well. And I think earlier in your career, you are also like us in the venture investment side, working for a fund that's backed by FBR, the Friedman, Billings and Ramsey. So I'm sort of like giving away your age a little bit, even though you look young, but those of us on the West Coast are familiar with Alex Brown and also Robbie Stevens, and FBR is, again, you know, one of those companies. And then before you got into the investing world, you were a lawyer. You got your law degree from NYU and worked for big law firms like Linklaters and Baker and also Paul Weiss. So that's a long resume.
Thank you so much for the introduction. My parents would be proud.
Then to Gaurav a little bit. And, so thank you for being here, Gaurav. And so good to have you here, managing partner in the last few years, since I think 2019 with Omega Venture Partner. So welcome, you representing Omega on this platform. And before that, I think you were also with City Group, Global Venture. And then before that, you were also with SAP. So both corporate venture as well as like industry venture capital experience. And before coming out to the West Coast, we all love the Golden Gate Bridge behind you. And you were in Boston and also was working for Highland Capital Partners, I think, for more than 5 years. And so, you know, very good East Coast and West Coast perspective in venture investing. And earlier, I think in your career, you were with McKinsey and Company for management consulting, IBM, and also Microsoft, all these big tech names. And as Kareem alluded to earlier, you had actually, I checked the number, 9 US patents under your name. So did I get that number right or more?
You did get it right.
Okay, thank you. And so well recognized by industry associations like IEEE, ACM, and including the U.S. Department of Homeland Security. So welcome our distinguished panel, Julian and also Gaurav. And so let me Julian first. I mean, you know, I'm sure I missed something in the brief introduction. Feel free to fill in. And but I think that perhaps we can start with you, just share a bit more about K Street Capital's recent investment, given that you guys are in Washington D.C. and very close to the regulatory ecosystem. And are you seeing more interest from your investors in the crypto space now? Maybe we can start with that, and also have a bit more update from you on your recent activities.
Sure. Well, first of all, thank you, Chris, and the pleasure to be with you all and with Gaurav. So yes, K Street Capital is an angel investing group based in the DMV area, which is DC, Maryland, Virginia. That's our acronym. And we have about 65, 70 members, quite engaged. We've been around since 2013. And as you mentioned, I'm on the Exco now. Again, we all have day jobs, right? And but many of us are in, I would say, public affairs, advocacy, political roles. Some of us have served in previous or current administrations. So we kind of bring that lens to our investing analysis. So to see if some of these ideas would succeed from a regulatory standpoint or from a, sort of from a regulated markets lens. We also have former entrepreneurs and founders amongst our membership, which I think adds to the discussion when we look at deals and potential investments. Just some quick stats. I think since we've been in formation, we've invested in over about 50 companies. We've deployed about close to 5 million in capital. About 2/3 of that is new investments, and 1/3 of that is follow-ons. And then I think I was looking at the numbers the other night. I think we've had about 6 successful exits so far, one of which is a unicorn. So we're really delighted about that. And we're happy the East Coast can also represent a little bit. I'll just finish it off and turn back to you and answer your question around crypto. It's still a very evolving space. We've seen a few early stage ideas, but nothing that we've been able to, I think, action yet. And that's maybe because, frankly, a lot of the action is on the West Coast. We'll talk about later, many of my clients are involved in that space right now. We've been helping a lot of startups or VC-backed companies with some of their build-outs, as well as VC firms that are raising funds to invest in crypto. But on the angel side, we haven't yet committed anything yet. But we're certainly on the hunt and open to ideas.
Well, I mean, I think this would be perfect segue to Gaurav. I mean, on the West Coast, maybe you can share a bit more on Omega Venture Partners' recent strategies and update. And in particular, if you could speak a bit more about your portfolio names, maybe even some fintech companies, some companies that are involved with DeFi, decentralized finance, which was talked a lot, I think, earlier in the base conference. So over to you, Gaurav.
Yeah, absolutely, and pleasure to be here. I would say, as you noted, I've been at institutional venture capital firms for 15, 16 years now. And in that time, have seen the model on both the East Coast and the West Coast. One of the catalysts behind forming Omega was our recognition that we're at the cusp of a massive transformation that's being catalyzed through the convergence of machine intelligence, data, and digitization. And so we're a thematically focused fund. We typically focused on early growth stage companies, which is companies that are starting to show traction and momentum and are ready for expansion capital to solidify and create a market leadership position. And we really started with the premise of being a uniquely differentiated kind of a firm. So we've really, if you look at our team, we very deliberately meshed the presence of our investment team here in Silicon Valley and that acumen, pattern recognition, and networks formed over the years, and married that with deep domain expertise from MIT, from serial entrepreneurs. And that combination, is really how we see the venture model itself evolving, which is going from, a kind of a generalist capital provider model to more of a specialized value-add strategic partner for the most compelling entrepreneurs and most consequential companies. Within that broad swath, certainly having managed Citicorp Ventures immediately prior, fintech is an area that I've been immersed in for several years and been incredibly fortunate to have backed companies like Square and Plaid, more recently Feedzai, which is a very recent new investment for us, even though we have a long history with the company, as well as companies like Zen Business that are large online platforms where financial services and fintech is a core part of their value proposition. So when we look at applied artificial intelligence as a force for creating disruptive value creation across many different sectors and industries, a key sector is, of course, financial services. And while wave one of fintech was around evolving and digitizing the incumbent models, wave two is very much around trying to rethink things like the payments rails, right, and blockchain and central bank digital currencies, and going beyond the concept of e-money to more efficient and next generation models of being able to think about transactional and modalities and stores of value. And we're seeing that obviously manifest pretty substantially in the intersection of artificial intelligence, data, fintech, and DeFi is a very interesting area for us. We actually think that the data layer and the intelligence layer is going to be a key part of the value proposition of dApps, distributed applications, and decentralized finance to actually manifest itself. Because it's by leveraging the data, by turning it into actionable insights, that these products are able to deliver a unique value proposition, a level of personalization that can enable them to get substantial adoption at the end of the day.
Wow, that's great. I've learned so much just from that, few seconds at the end. And just again, many of our, I think, attendees today are trying to learn a bit more about what's happening in Washington, D.C. and the regulatory ecosystem. So given your location in D.C. and also I know, Julian, you're involved with very influential industry groups like the CCI, Crypto Council of Innovation, and also, given the current regulatory environment surrounding the uncertainty of cryptocurrency, can you just maybe educate us a bit more about the industry groups that you work with, such as the CCI, and also what is their mandate and what are they trying to help investors and also industry players in Washington?
Sure, Chris. Happy to. I mean, just quickly on the regulatory scene, I would say it's certainly evolving, right? It's very nascent, and that's something that we're all watching very closely, because I think what regulators do decide, or if they don't decide, will move the needle. I mean, as we've seen just last night, when China has come out and said that, and sort of tamping down crypto miners there, that's had a very, very negative impact on many of the coins, right, including Bitcoin and ETH and others. So I think what happens out of Treasury or SEC or CFTC or OCC, all these alphabet regulators, exactly, will have a huge impact later on. The other acronym you mentioned, CCI, is the Crypto Council for Innovation, which is a relatively newly formed trade association.
This year, or just
yes, just probably about 2-3 months ago, I think it was announced.
This is brand new.
It's brand new. In fact, one of the core founding members was one of the companies that Gaurav invested in, which is Square. Jack Dorsey's other venture. And you also have Coinbase as a founding cryptocurrency exchange member. You have Paradigm, which is an active venture capital firm in the space, Ribbit Capital. And also, breaking news, A16Z, Andreessen Horowitz, has also signed up as a member, as a founding member.
Oh, that's good. They just, I see.
That's right. That's right. Because all of them have, for continue to or will be raising funds that will invest in crypto enabling technologies, right? You also have Fidelity Digital Assets representing the institutional investors, Square representing sort of the payment side of things. It won't be a very large trade association by membership, by design. I think they want to keep it very much, sort of a dozen at most, but very much at the top of the house. Again, given some of the names I've mentioned, hopefully that reflects that. So full disclosure, my firm, I'm representing CCI to help them identify a new CEO.
Oh, that's your day job, helping.
That's my day job. That's right. It merges a little bit, and again, I think it's we're very honored to be helping them. It's a fascinating group. They want to again find the right leader who can be the face and the voice of the cryptocurrency space, and so we're in the thick of that. To the second part of your question, yes, there are a number of trade associations that have formed through the years, and I can sort of reference them a little bit quickly. There's one called ADAM, which is the Association for Digital Asset Markets. That was founded, I think, about 2 or 3 years ago. They have, I think, under 20 members. They have some other crypto investment firms and service providers. There's the Blockchain Association, which again was founded about 3 years ago. I think there were about 40 members now. And they also work on promoting blockchain and cryptocurrencies. You have CDC, which is the Chamber of Digital Commerce. That was founded maybe about 6-7 years ago. They're much larger. They have 200+ members, and they're more the broad swath of crypto and financial services, fintech type companies that do DeFi, smart contracts, et cetera, et cetera. And so you get a sense of some of the different players. But again, I think there's still a need and for a CCI, frankly, to represent and really talk about some of the important aspects, positive aspects of cryptocurrencies. The first thing they did was actually they commissioned the former CIA director, Mike Morrell, independent, no editorial input, obviously, on the use of cryptocurrencies and their role in sort of illicit finance. Because again, many folks still associated with sort of the Silk Road days. But as Director Morrell concluded in his study, the percentage of cryptos being involved in some of these things is still very, very small when you compare it to fiat currencies. So just an example of what I think CCI hopes to do in the future to again provide a balanced view, but talk about some of the positive aspects that are emerging with the adoption of cryptocurrency.
Great example. And you mentioned we're still at the very early stages, right, of understanding and working in this ecosystem. And so, I mean, Omega, venture partner is clearly a leader in VC and fintech and also DeFi. So, Gaurav, if you could sort of be in this early stage of interacting with the regulators and the trade association people, right? What will be the key things that you think you would be asking from the regulators or maybe from the trade association, from your perspective, from our perspective, so that we could benefit more investors on our panel?
Yeah, it's a very interesting question, Christopher. And we're fortunate that in our investor base, we have some of the world's largest financial institutions and some of the most innovative fintech companies and their founders involved. So it's a topic that we have had a fairly iterative and continual dialogue on with some key figures that are influencing the policy and are shaping the opinions. And in my mind, what it comes down to is 2 broad pillars. So one pillar is around consumer protection, right? And that ties into, like you say, it's avoiding the negative connotations, but also really protecting consumers. The Silk Road incident, as you pointed out, has such a loaded perception in the zeitgeist, right? And then you have episodes like Colonial Pipeline being paid through crypto, but it is a tiny, tiny percentage of the total transaction volume, yet it grabs the headlines. So I think on one hand, consumer protection guide rails, and some of that is imparting knowledge, informing the consumer, informing the individual who's investing, out of the Midwest into an NFT or a next new stable coin about what it is, right? Making sure companies like Tether, et cetera, have those guardrails in place. I think that's important because in the long term, the more we can protect consumers and make them feel safer in this ecosystem, the more conducive it will be to the overall growth of the pie, and lead to less kind of unexpected, unanticipated negative consequences and boomerangs. The second part of it is, some level of regulatory clarity. And I think that's going to necessarily differ country by country. It's really, really clear that there are certain parties who don't like decentralized, anonymized, or pseudo-anonymized transactions taking place. I mean, and there are some parties who are okay with that. And particularly as we start to, I think what we are starting to see in parallel, though, is the central bank-based digital currencies, that are blockchain-based, that are not just the old ledger-based system, but really are using blockchain come up. Now that has significant privacy implications, but it also impacts how will startups operate in that regulatory framework. So we need some, I think, guidance, and we do our best to guide our startups, and certainly, having folks who are, at some of our investors and, our advisors and even our team members who are at the forefront of this. I think we would like to think that we're at the avant-garde of being able to stay in the loop. But even then, there's a lot of lack of clarity. And I think there's a lot, from a legal perspective, there's a lot of gray area that, you take on as risk. It's never going to fully go away, but the sooner we get some level of regulatory clarity on, what types of permissioning, what types of compliance requirements, even things like AML, KYC standards, as more and more of those get defined, it will create the basic foundation for startups to flourish without necessarily having to spend inordinate money to hedge the risk or to hesitate from innovating in the first place. And I think these things are naturally developing, and they're developing at a reasonably good clip, but I think that both of them are important, both protecting the consumer and setting sort of a regulatory guardrail for the innovators to be able to shape their products and services.
I see, yeah. Well, I mean, I am very lucky today that I have both of you, right, on this panel. So I actually want to put the two of you in dialogue with each other. And I think, just picking on your point, Julian, you mentioned A16Z earlier, and we know that they have actually decided to staff up their sort of like a government and SEC kind of like department. They hire Katie Hong as the SEC, government sort of like specialist. And so if you were to talk to another very influential VC firm like Omega, right, how important is having a government relations team in a VC firm? If you could maybe just pretend you are pitching to Gaurav, and then maybe I would love to hear just your reply on Julian's pitch to you, Gaurav. So,
and of course, you would engage Hydrick to lead the search for that team.
Well, thank you, Rob. I appreciate that. No, look, obviously, I'm talking up my own book here, but I do feel pretty passionate, and having worked with other, earlier stage companies. I'm doing some work for a fintech company that's pre-IPO right now, and they get it, right? They know that if they don't stay on the right side of things, or if they don't monitor what's happening here in DC, it could really impact negatively or positively, right? It could create a great opportunity that they may not have spotted if they don't have somebody sort of leading that charge, being the point person, and liaising with all those alphabetical acronym regulators that I just mentioned. And those are the types of roles that I specialize in. Now, again, it may not be necessary to have one person at one portfolio company, right? For an Omega or a A16Z or Ribbit, it might make sense to have someone come in as an operating partner or a sort of regulatory specialist who can look across all your portfolio companies, Gaurav, and assess that. Or or even help you diligence opportunities and say, look, this is going to sounds like a great idea, but it's never going to fly, right? Or you're going to have to really work on tweaking the model, or hey, this is a white space that no one has thought of, and if we can go fast, go hard, we can own it, and then we can make sure that we get the regulators to catch up. So again, that would be sort of the pitch, and again, there are firms, like you said, Chris, who have, I think, cottoned on to that idea and are getting ahead of it and bringing on folks who have a regulatory background in-house. I don't know, how does that sound, Gaurav?
I think that's a very sensible and very prudent answer. And I think, it's consistent with, because I think to your point, what we try to do when we bring in a resource, first of all, being able to leverage that resource across the portfolio, it creates a nice network effect in an ideal world where, we're constantly being able to cross-pollinate learnings. But then secondly, the biggest thing is somebody from the investor side has deep incentive alignment. They've got real skin in the game. You've got equity ownership in these companies where alongside the entrepreneur, it's a different dynamic than than the company hiring an advisor who may not be as deeply incentivized or as deep. There's some excellent advisors out there, don't get me wrong. But I think we've seriously considered this notion of, as you say, an operating partner or maybe a venture partner, and within sort of certain areas, our team has outstanding expertise. In this emerging area, I think this can be a shared service in that sense being provided to the portfolio in a highly incentive aligned manner. And I think the key there is to do it, to scale it with size. And I think, as to your credit, as you develop initiatives like CCI, they will become, pillars of this overall, call it guidance infrastructure. And create just from the membership you've already had from innovative companies as well as VCs, I think you're starting to see that scaffolding take place, which is really encouraging for me to hear about as well.
Yeah, I think we're going to pay more and more attention to what's happening on the East Coast in Washington, and also, the whole crypto regulatory environment. I see that Kareem just popped up, and I think that this is a sign to us that our time is almost up. So I wanted to just see if Julian, you have any closing remarks, and then we'll pass it on to Gaurav for some closing remarks as well. If not, it's okay, but any closing remarks will be great.
No, I just wanted to thank you, Chris and Kareem and Gaurav, for the opportunity to visit with you all and to discuss a little bit about crypto and what's happening here on the East Coast. So thank you very much. Appreciate it.
I would say, yes, thank you. And I would just note that, what a wonderful time to be alive, right? That we are seeing such momentous transformations taking place. It's just so exciting. And, just kind of the level of innovation and out of the box thinking that's being applied and the new models that are being made possible is really what, when I think I speak for our entire team on this, it gets us, out of bed with a springer in our step every single day, because we just think the next few years will unleash innovation that will dwarf what we've seen in the past. So thank you again for this great opportunity, Christopher and Julian.
So Gaurav, are you saying, we've seen the term revenge spending right now that we're coming out, are we having revenge investing? Is that what's going to happen? Just kidding. We're going to make up.
Panel. So thank you again, Julian, zooming in from Washington, D.C., providing the East Coast perspective. And thank you again, Gaurav, from the West Coast. So over to you, Kareem. Thank you.
Thank you, Julian. Thank you, Gaurav. Thank you. And I want to put this into context. I've known Gaurav for, over 13 years. We met first in Boston when he was a partner at one of the big venture firms there. Julian, it's a pleasure to know you now. Interestingly enough, I'm looking forward to our next panel as well. Joe and Jacob. Jacob's out of Singapore with Kraken and MD, and he's an early stage investor, so I hope you guys can stay. But here's the thing, Gaurav, for the folks who are still on the phone on the conference, look at the backgrounds of the folks that we have today. Gaurav has got a large experience in AI. He's written several patents, several books on patents as well, and emerging technologies. One of our portfolio companies, actually, that we're an investor in is Telium, which is also part of Omega's portfolio companies. And they just in February announced new funding of just under $100 million. They're now a unicorn company, and we're hoping they do well for our investors as well. But here's the thing. This is the last poll of the day, and I'm glad that Jacob's here because he'll get a response to it. So Julian and Gaurav, you have the opportunity. Mike, if you can put the poll up. This is our last poll of the day of the companies that we have on our platform that are likely to find liquidity first. So in your mind, choose a company, Gaurav and Julian, and then whoever wins this gets 2 books now. They get the book of Matthew Lemerle, Early Stage Investing in Silicon Valley, and they get Jacob's Runaway Technologies that are affected by the law. You both get 2 books for the winning choice, and the winners will be either Gaurav or Julian, whichever company they choose. So the votes up. Thank you all. While I introduce my next panel, Jacob Zarowski out in Singapore. Thank you very much for joining us. Hopefully you've had breakfast. We're all looking towards cocktail time. And Joe, welcome back. I know you're on the East Coast right now celebrating Father's Day with your family. Welcome back. Looking forward to that conversation that you have there. In a few minutes, we'll bring back the poll results. But I'm going to ask Julian first, which company did you choose out of that list that's going to go public first? And then
Sure. So my video has been turned off, but hopefully you can still hear me.
Yes.
And we weren't able to vote, but I think I think Impossible Foods might actually go public first. So I had to swim against the grain here, but from what I understand, they're pretty close, but I may be wrong.
Now, we're all right. Eventually, they'll all go there.
Right.
This one's first. Gaurav, what about you?
Well,
I hope you choose Telium. That's part of your portfolio.
choose Telium?
Telium.
Of course.
The right answer.
that goes. By the way, that goes without saying. I think that's a phenomenal company, and I remember when I was doing diligence on a company, I called their #1 competitor, and the founder of the #1 competitor said, "Don't bet against Jeff Lunsford," which is the Telium CEO. And when you hear that from the #1 competitor in a diligence call, it's just such a strong endorsement. And I think it's just a fabulous management team we've got there, and a company that, quite frankly, is expanding its TAM as we speak. So we're very, very pleased to have been involved with Jeff now for several years, and the great team he's built. So I'd say, look, I think if I wasn't pitched, if you don't let me choose Telium because of the affiliation, I would probably, on that list, I may pick, it would be between Automation Anywhere and Kraken for me.
All right, Jacob, that must be very nice for you that Kraken's going to be a choice of going public first out of our list. But can we see the results or hear the results? Kraken, there you go. Kraken takes it. Kraken is likely to be the next liquidity company on our platform. So as an offer for link to, the last offer of the day is if you are a new investor, invest now and you get $1,000 credit towards your purchase. If you're a returning investor, diversify your portfolio, and the company that you choose next will get $1,000 credit to that application. Thank you guys. Thank you, Gaurav. Thank you, Julian. We want to talk to you more at our link to learn. We hand it off to Chris. Thank you so much for moderating. Wonderful job as usual. We want to hand it off to now Jacob. Talk to us about Singapore. Talk to us about what's happening in the digital currency market. And Joe, welcome back. Thank you all.
Thank you.
Thank you. Jacob?
Hey, can you hear me?
I can hear you just fine, and I want to thank you, first of all, for coming on so early in the morning your time.
No, thank you for having me. Really looking forward to the discussion.
Well, as you saw, Kraken just topped the poll. They were in #2 and #3 positions earlier in the day, but I guess they've now caught up and sped beyond the other entrants. So we're going to wait and see whether, Jesse Powell, who's already said that you definitely are going to go public. We'll see whether his timing is on the shorter rather than the longer end of that time frame.
Yeah, I don't know. I don't have any inside information on this,
No.
but yeah, I think it's the right timing for a call like this. I think the past few months for the whole industry were just amazing, and I think this definitely has sped up the whole process of potential IPO. So hopefully the momentum will continue.
Yes, but until that happens, there's a lot of work to be done, I would imagine, at Kraken, and so I want to spend a little bit of time talking about that, and in particular, that bit of work that is your responsibility in the Asia Pacific region, Jacob. So just as an introduction to our customers who don't know you, Jacob, if you haven't read business publications, especially those that cover the Asia region, is probably one of the foremost young tech entrepreneurs in that part of the world, which is pretty damn amazing given that he isn't from that part of the world. He has his roots in his native Poland. He was schooled there, but also in business school in Barcelona at ESADE. But he's made a career in technology entrepreneurship in the Asia Pacific region, which is the second largest region in terms of its development of unicorn tech companies in the world outside the United States. So Jacob was an early member of the founding team at Lazada, which was an Asian e-commerce company that ended up getting acquired for $1 billion plus by Alibaba. He then moved on to fintech and led the growth of Revolut, the neobank, in that part of the world, and is now at Kraken doing the same thing. So I'm just excited and looking forward to seeing your contribution at Kraken. We are big fans of Kraken at Ling2. Jacob, we've over a period of the last 12 months roughly consolidated a fairly material position in the company stock and brought in a whole bunch of Ling2's customers to participate in that investment, and that investment grows by the day. So tell us a little bit about what you believe the market potential is for Kraken in Asia Pacific and what your plans are for growing the firm's presence there.
So first of all, thank you very much for a very nice intro. You probably skipped a lot of days of blood, sweat, and tears that were in between Lazada, Revolut, and Kraken. But yeah, it sounds like a good story. I think the story for me was always to be at the right place at the right time when it comes to the technology innovation and the region. So I was very fortunate with Lazada, very fortunate with Revolut and Kraken as well. And I like learning. I think this is the most important thing. So being at the forefront or being inside of a leading company in crypto and seeing and learning about crypto, learning about blockchain, seeing all these projects, it's definitely very exciting, and I'm very lucky to be inside of it. As you've mentioned, I think for me, when it comes to crypto, and I think Gaurav mentioned that just before our call, we're still very early. And what we've also learned, looking at previous waves of big tech companies, and whether it's neobanks or whether it's e-commerce, Asia Pacific region is usually this half step before the innovation. We see innovation usually happening in the US, and Asia was always playing catch up. We've seen that with Amazon and the e-commerce boom in Southeast Asia. We've seen that with neobanks and fintechs. The first fintechs in PayPal, I would consider the first wave of fintech. It's still, we would still need to have a couple of years to catch up when it comes to Asia Pacific, and crypto is very similar. So having said that, the speed at which Asia is catching up is definitely increasing. And we already see that, or it's my personal bet, that within an industry that is growing probably the fastest, and it's the most fascinating industry right now, especially for someone who is a big fan of fintech. And Asia Pacific is growing the fastest when it comes to region of adoption of fintech, adoption of new technology. Everyone basically here in developing countries is having a mobile phone and spending majority of their time on mobile. it's just a massive opportunity, not only for companies like Kraken, but also for any other tech company out there, because it's definitely it's still early when it comes to adoption of many business models over here. So for me, I think what I'm most excited about is that crypto is definitely going to be the fastest growing industry worldwide. And I believe Asia Pacific is going to be one of the fastest growing regions. So I think the combination of these two will be great, not only for the industry, but also for myself to be at the right place and at the right time.
Yeah. So in the Asian market, you are up against competition that in some respects is more formidable because of scale, as well as earlier market entry than you are in the U.S. market, even, right, where your most direct competitor is Coinbase. But in Asia, you have exchanges that are certainly bigger and more established even than Coinbase, have larger market shares. Binance comes to mind. It's certainly not the only one, though. That's a much more competitive market. How do you navigate that, and how do you intend to carve out a major position for Kraken in that much more crowded marketplace?
Right. So I think you're right, and the way that I like to look at it, and it's similarly for the whole company, is that we understand what the competition is doing, but we're customer first. We're customer obsessed. We look at what customers really want, and this is something that we believe it's gonna help us in the long term. We understand what the competition is doing, so we keep an eye on this. But majority of our efforts are focused on customer experience, how we can make it easier and better and more competitive than ever for people to get into cryptocurrencies. I think a big difference is also because of our CEO, that it's actually setting the vision of the company to empower people to get into cryptocurrencies, and that's why the educational part of Kraken is also very important for us. We want to empower people with crypto. We want to foster the financial freedom for people with crypto, and that's why a lot of education is required, not only to be a platform for people to buy say crypto, but also educate them what is the potential, what is crypto actually doing, what are the potential risks of crypto, because we see our clients as long-term partners. So I think for us, we are very busy, and we have a lot of things on the roadmap that are linked to making it easier and better for our clients, and to also educate our clients. And we believe that this is something that it's a better long-term strategy, not only in APAC but also globally.
So I'd love it if you could maybe expand a little bit on that thread about customers, Jacob. So when I look at the U.S. market specifically, right, and I look at the relative market positioning of Kraken versus Coinbase, one of the things I would probably say is that Kraken is much more institutional in its roots and its product development, and in it, certainly in the kind of trading volume that is in the U.S. market today. I point, for example, to the fact that you have a much higher degree of futures trading volume and exposure than Coinbase does, which is a product that's much more institutional than retail, and Coinbase is the more retail. And as the market now evolves, you see Coinbase developing their Coinbase Pro product to try to move up market and get some of that institutional traffic. And you, in comparison to Kraken, are introducing your app to try to get more mobile orientated retail type of trading, right? Do you see the same type of, what's the relative positioning in the Asian market, Jacob? Is it a similar kind of a thing as in the States, or is it a different dynamic altogether?
Right. So I think it's a good question, and I think it goes probably there are two things to consider here. I think when it comes to strategy and when it comes to persona segmentation that you've mentioned, I don't think it's going to be that different from region to region. The mission is to literally accelerate the adoption of cryptocurrency, and whether there is an average Joe that wants to get a piece of Bitcoin, or if it's a institutional player, or if it's a high frequency trading firm, we want to ensure that each of these groups have a great experience when dealing with Kraken. So you're right saying that Kraken has always been one of the go-to players when it comes to more established companies. But I think this is also already changing, and we are able to show products and ship products that are actually appealing to a variety of groups of people that want to be a part of this new digital economy. So I think this is the first half of that hopefully answers your question. I think the second half, and this is a lesson that I've also got from my previous experiences, is that we need to be able to properly localize the product in order to succeed in particular geos, in particular markets. I think when it comes to us, it's a communication strategy. It's also ability to have local payment rails and to be able to tell a local story that is aligned with our global vision. So there are two parts of it. I think our global vision has always been the same: to empower people to basically and accelerate the adoption of cryptocurrency that actually allows our client to achieve financial freedom. But we're able to understand the local nuances of different markets and different regions where we are, and then we're trying to localize our product, our platform, our communication accordingly.
That is a really interesting point. If you look at the Asia market as a whole, it's certainly not homogeneous, right? And that's exactly the point you're making about the need for localization. Just from a layman's perspective, to somebody that's from outside Asia and looking in, how would you very broadly categorize that market into sort of constituent elements or components when you localize, right? There's obviously the big China market, but what are the other components of that Asia Pacific market that you're facing for Kraken, Jacob?
Yeah, so if we look at Asia specifically, when it comes to taking a step back, and not only with Kraken, but also with my previous experiences, I think there are plenty of different ways to categorize it, but I think the best way to look at it is that there are three buckets. One is China, which is basically a species on its own. The other one is developed countries, and by developed countries we mean Singapore, we mean Hong Kong, Korea, Japan, etc. And developing economies, which is basically majority of Southeast Asia. We're looking at Malaysia, Thailand, Philippines, Indonesia, etc. So these are probably the three big buckets of what actually Asia really is. And you're very, very right saying that it's all of these buckets and also countries within the buckets are different. Unlike European Union, for example, or United States, where it's a little bit easier when it comes to localization and when it comes to especially regulation that you guys have discussed previously. Here we see like it's very different from country to country. What is combining all these three buckets is the pace of growth when it comes to GDP, when it comes to tech adoption. We see Indonesia growing really fast in the region, and a lot of PE companies and VCs are pouring money into Indonesia, Philippines as well. But the markets are already very big when it comes to countries like Korea, like Japan, and obviously China. So I would say in general, these are the three buckets. I think as Kraken, we're definitely focusing right now on the developed countries. So we've recently obtained a Japan operating license. We've acquired a company in Australia. So this is definitely something that's our core markets when it comes to our expansion region. But on our roadmap, we have basically the whole region, appreciating the differences and appreciating the nuances of each of these countries and each of these buckets that they have. The good thing is it's definitely the right time to be looking at it and the right region to be looking at, and we're definitely seeing that as a pillar for our growth strategy moving forward.
Do you foresee a day where Kraken's total global volume is such that
Asia Pacific actually constitutes a majority of the firm's trading volume rather than the minority?
Joe, I would say that this would be an excellent thing for my KPIs, definitely, if this will happen. So fingers crossed that this will happen very soon. And I think this is an expected outcome, not only for me, and I might be a little bit subjective here, not only for me, but if we look at the pace of events, if we look at the pace of adoption when it comes to crypto in the region, and where we are currently with Europe and where we are in the US, APAC is going to be a growing region, and that's why I want to be at the forefront of it. And I'm sure it's going to be very good for my KPIs, and I think the company is looking at it from a same lens when it comes to what is it that we're actually trying to achieve in this region.
Yeah, I actually asked that question because I don't disagree at all with your conclusion. I mean, certainly, if population were a measure, the numbers are in Asia Pacific's favor. The other thing that's in your favor, which is probably maybe less obvious until recent days, is that while you said even if technology adoption is an area where Asia may have lagged and is trying to catch up, regulatory innovation is an area where Asia actually has the lead and where America is downright archaic. And, it's gotten to the point now, certainly in the crypto industry, where companies like Coinbase and Kraken are speaking openly about, leaving the United States because it's they feel so constrained. And so that's certainly an advantage in Asia, right? You can move much more swiftly with greater agility because you have regulatory frameworks that provide you with kind of clarity that we just don't have in the States right now. You want to comment
that's
on
right.
that, competitive advantage?
Yeah, I wouldn't say it's a competitive advantage, but I think it's definitely something that makes it easier when it comes to executing go-to-market plans. And this is also something that can save a lot of money when it comes to legal fees. That, as you guys know, if something is gray area, definitely is the lawyers benefiting a lot on putting legal opinions out there. So I think, seeing how basically the regulation evolves in Singapore, I think it to me it looks like a gold standard when it comes to the right sizing of fintechs and payments regulation. So I think I'm very lucky to be inside of Singapore and seeing how regulation can foster innovation and not stop innovation. The Hong Kong regulators are very similar. And the good thing is that a lot of other regulators around the region are highly influenced by what MAS is doing in Singapore and HKMA is doing in Hong Kong. And these countries also, because of the size and the nature of these countries, they have to be at the forefront of innovation. They have to be ensuring that there's money coming into the country from outside in the form of investments. And they need to be able to build that infrastructure that allows it to actually happen. So that's why Singapore and Hong Kong were always ensuring that they are business-friendly places. And as in any other areas of business, it's exactly the same when it comes to financial services, payments, and crypto as well. So in my opinion, I have a balanced opinion when it comes to regulation. I understand what type of problems the regulators are trying to solve with regulation, protecting the users, and I believe that this should be there. But I also, as a person who's an early stage person and is enjoying early stage company venture building, I understand that the less barriers to enter, the better, for more innovation to happen, for more companies to be building amazing products. So I believe the best outcome is the right size regulation, and for right size regulation, you need to have people that actually understand the problems that they're trying to solve with regulation and not trying to over-regulate everything. So I think this is the key, and I think Singapore and Hong Kong have done a great job when it comes to this.
Yeah, I agree with you in that respect, Jacob. So a final question before I maybe open this up to any questions from our audience. I remember it was sometime around the middle of April, I think, that Jesse Powell was giving an interview on American Business TV, probably CNBC,
And he at the time said that he foresaw a coming crackdown, and I think those were the exact terms he used, crackdown on crypto from various governmental authorities, and not just the United States. Back in April, when it was all rock and roll, people probably thought that was a little bit of a downer, but since then, as you've seen how the market has been, he was probably a little prophetic in that respect. So given kind of where we are in the market today, do you care to make maybe your own sort of estimation of what the situation is in the crypto market? Are we just going through another cyclical adjustment as we adjust to these new sort of regulatory pressures, or are we in a moment of fundamental restructuring of that market?
Well, that's a good question, and I don't have an answer to that. Jesse is probably one of the top thought leaders when it comes to crypto, and maybe he's a little bit prophetic, but probably he has much more data points and better judgment when it comes to things like this than I do, given that he has been a builder of the overall industry. So he has seen it inside out. He's been there from the very beginning, and he has a way better judgment on these things that I have. So probably it's a better question to ask him. I think from my side, the things that I've learned is definitely the cyclical nature of crypto. I'm not trying to look at it from a capital markets perspective. I'm not a capital markets guy, and it will be very hard for me to make a judgment if it's a right time, if it's going to go up or down. What I truly believe in is that there are many problems within financial services that cryptocurrencies can help solving when it comes to money transfers, when it comes to storing of value, when it comes to payments. And until we are in a position where moving money is as easy and as cheap as sending a text message, we still have a lot to do. So for me, this is a North Star. I wish I knew if the markets are going to go up or down, and if there's a structural shift and trade because of this. But I try not to focus on things that are outside of my control, and I don't have enough information. I think it's very few people that really can make bets on how the trend will look like in the next few months, and probably Jesse is one of these few people. So maybe I should speak more with him about these things. But in essence, for me, I'm trying to zoom out from the cyclical ups and downs. I'm trying to really understand the problems that I've seen in the industry, especially on the back office side, how we can make financial services just working like a Swiss clock using the technology, and with the support of these awesome companies that are building bits and pieces that can help solving that. So this is what I try to focus on, and this is what I try to educate myself in. And I'm probably I can give probably the worst trading advice when it comes to, is it a good time to buy or is it a good time to sell? Because I don't know, I'm not a trader, and I'm also, this is not the reason why I wanted to be a part of this industry.
Yeah, that's actually the perfect way, by the way, Jacob, for you to end this conversation, because like you, we are actually not traders ourselves. We are investors, and therefore we look at that North Star. And I think we are both agreed on what that North Star is, which is the fundamental and permanent lasting impact that the technology that underlies these cryptocurrencies will have a huge disruptive and positive influence, right, on financial systems and other forms of value transfer. If you believe that, then you can make a long-term bet with some comfort, despite the short-term cyclicality that's caused by supply and demand. So, I mean, I think we both agree on that, and that's why you're at Kraken. That's why we're at Link2, continuing to invest aggressively in the space. So, thank you, Jacob.
That's right.
Grim, I'm going to turn it over to you.
So, Jacob, thank you so much. Joe, thank you so much. You obviously asked and answered all the questions, and we have no Q&As, but I'll finish with this. Jacob, thank you so much. We'd like to do this. We'd like for you and Jesse to be back at our September 21st Global Investor Conference, and you can ask him the questions that we want to hear the answers for. So September 21st, book that on your calendar. Have Jesse book that as well, and we'd like to see you both there.
Yeah, I may ask Jacob back sooner for some of our link to events.
Wonderful.
Been a great guest.
Thank you for having me, guys. Very good questions asked. Hopefully, I added value.
Right. So make your KPIs, Jacob. If you make your KPIs, we'll make our KPIs, and we'll all be happy.
Sounds good.
Thank you. Hopefully, you can stay for the next event, which is the last conference, the last session of the day. We've spent 9 hours and 45 minutes traversing the globe from Europe to the US to APAC, and now we're closing it out with a great opportunity to hear from Angelina Kwan of HashKey Group, Walter Jennings of HashKey, and Scott Thiel of DLA Piper. The topic that we're going to talk about is Get Tokenized, Opportunities for Capital Raising on Digital Asset Exchanges. Just to keep in mind, Walter, Angelina, and Scott, there are a lot of questions about this, significant questions, and unfortunately, next time on September 21st, we're going to have you wake up in the middle of the night to address all the American folks. So just keep that in mind for the 21st. But thank you so much for joining us today, Angelina, Walter, and Scott. Talk to us about what we need to see, what we need to be aware of, and how the world is changing around your securities and tokenization. I know that Angelina just completed her law degree, MIT, and you're a speaker, or was it Harvard, MIT, somewhere beautiful, and you'll talk to us about what's happening now and what's going to happen in the future. Thanks. I'll let you guys take it away.
Great. Thank you very much, Kareem. Good morning, good afternoon, and good evening, wherever you're dialing in from around the world. My name is Walter Jennings. I lead marketing and communications at HashKey Group, and I am your host for today's panel. We're going to talk about Get Tokenized, opportunities for capital raising on digital asset exchanges. And we wanted to approach this from the perspective of an issuer. If you are a company or an investor, or you have real estate, you have asked, how do you go about this and what is the process? I'm joined by, on my right, Angelina Kwan, who I'll ask to introduce herself in a moment. She serves as Chief Operating Officer and Chief Risk Officer for HashKey Group here in Hong Kong, and has had COO and director positions with digital asset exchanges, the Hong Kong Exchange, senior roles with Cantor Fitzgerald and the SFC. Also joining us is Scott Thiel. He's the partner at DLA Piper, and he's the Asia head of their global technology and fintech sector initiative. He's really the go-to guy, advisor for all things data and tech related for his client. And Scott has a bit of a secret weapon up his sleeve when it comes to tokenization, and I'm not going to lift the lid on that surprise quite yet. I want to start by asking the panelists to introduce themselves and what's the relevance of their role to today's subject. So let me turn first to Scott, who we haven't seen yet. Scott, can you briefly introduce your role and your relevance to the subject of tokenization?
Thanks very much, Walter. Great to connect again, Angelina, as well on this next panel. I'm excited to be here. So yeah, it's a very broad topic, I think, is the first observation, and there's a lot of opportunity in this space. It's fascinating listening to the last couple of sessions in advance of this around cryptocurrencies, and in many respects, I see the evolution from crypto into NFTs, and then truly sort of asset-backed, fractionalized digital instruments as being the next wave, and really the future of finance and the digitization of these markets. So, in terms of my role, you've introduced me as the head of the tech sector, which I am. My background is, I'm a computer science grad turned lawyer. That was a decision I may have regretted if I look back. But IT wasn't yet cool. I'm old enough that when I was doing that, it wasn't yet the future. But what we've been doing, and you alluded to the secret weapon, so what we've been doing at DLA Piper over the last couple of years, we've built our own tokenization engine and platform as well, so we're able to create digital assets for clients. So in addition to sort of helping clients with decisions around technology, particularly as it relates to, you know, choices of DLT technologies, and there are some really fundamental different attributes of those technologies that are going to be, you know, better suited to different use cases in this space around tokenization. And then we can help clients with the, you know, the kind of the transliteration, the taking, you know, structuring the investments and the investing documentation, which is really the role of the traditional lawyer that we've always done. But then being able to now take that and then morph that into the digital form to ensure the smart contract is a faithful representation of the investment documentation, and then help clients with that full journey. So, you know, we can sit with our Toko engine now with clients, we can help them build digital assets, we can bake in, you know, information, diligence information, investor rights, and attributes, and you know, tokenization, kind of tokenomics around, you know, the flows of monies, and actually help create that digital product, help, you know, then take that to market for them. So it's a combination of law plus tech.
Sorry to jump in. I also want to now turn to Angelina and ask her to introduce her experience and relevance to the subject matter.
Sure. So I've been working with a number of digital asset exchanges, and I think this is probably the most exciting area, as Scott was saying. So I am now the Chief Operating Officer of the HashKey Group. What we are offering is a exchange that hopefully will be the second licensed exchange in Hong Kong. We have over-the-counter services in terms of we sell Bitcoin and we sell digital assets, but we also have a fund management arm, and we also have a number of other businesses, including tokenization. And one of the reasons why Scott and I have been working together is we're going to work together, hopefully, where Scott provides that secret weapon to tokenize the product, and we actually list and sell that product on our exchange. So why is this important to have both people working together? Is because Scott has the legal side in terms of the lawyers that actually will look at prospectuses, look at prospective deals, and then our exchange will actually list it on our exchange, and then we will have the clients actually sell these products too, which makes an exchange much more interesting, but not just selling buy and sell Bitcoin, but also selling interesting alternatives to clients. So you've got the traditional digital assets, but you also have what is called tokenization now, where you're taking interesting projects, anywhere from real estate, which is something that Scott and I have been talking about, to assets like receivables, to horse racing, horses and tokenizing horses. So the opportunities are there, and what you need to do is you need to commoditize this and put it into a format that can actually be tokenized and then sold to individual investors. And this isn't investment advice, but this is a way that people with Bitcoin or with digital assets can actually invest in other assets at the same time through a digital asset exchange like HashKey. So we will help clients buy and sell their digital assets, but we will also give them the opportunity to get invested in interesting real estate around the world, or horse racing, or whatever it happens to be the assets. And there's no stops in terms of, there's no boundaries in what can be done, as long as it's actually regulatorily compliant and legally compliant, and that's exactly what Scott and HashKey would be doing.
Fantastic. Scott, can you explain to us what's the difference between tokenization and a traditional IPO?
Yeah, that's a great question, Walter. And I'm going to start by saying I'm not best placed to answer it, including because, as I think one of the last speakers was just saying, I'm not a capital markets guy. You know, I'm a technology contracts lawyer. So I come at this question unencumbered by too much knowledge about the existing capital markets. However, there are some definite distinctions and features. And I was having a conversation yesterday with a potential client who was talking about listed REITs, and you know how you know there's already fractionalized real estate, and you know people can already buy and sell shares in these and therefore participate in real estate. And I asked him if he'd ever met an investor that felt their REIT personally and passionately and really had a connection with that asset in any meaningful sense. And he looked at me blankly and I said, well, there's your answer. You know, most of the kind of the way of people using listed shares as a way of participating. Either you're buying a share in a company that does a broad range of things, even if it's really a holdco for a bundle of assets. It is typically that, it's a bundle of assets. Like in the real estate context, you're usually talking about, you know, in excess of 100 different pieces of property in there. So, you know, what am I really investing in? Well, I'm investing in a sector. I'm not really investing in a building, for example, which I think is a fundamentally different thing from saying, look, I'm investing in a project, an individual project or an individual building. And I can walk past it and say, I own a piece of that. And there's that real immediate connection between the asset, the operator of that asset, and then the investor. So I think it's a fundamentally different type of investment structure to that which we're seeing, you know, today. And you know, the reality of a lot of those listcos is that they are the domain of pension funds and large scale institutional investors. I think as we look towards, you know, DLT technology being a way of democratizing finance and gaining further participation by a wider class of investors in a more direct way, I think it's those kind of features that are going to be fundamentally different. And you know, it's and Angela and I are both working on this problem from different ends of the spectrum. These are going to be a lot easier to hopefully list and get raised, rather than the enormous complexity and cost associated with an IPO, which is a very large scale event.
So that's the area that Scott has touched on something. In tokenization, we can be a lot more nimbler. The amounts that are going to be raised will probably be smaller. So we don't see, Hashkey doesn't see itself as interfering with the largest exchanges in the world. We're going to be helping institutional investors that have assets they want to tokenize, that are smaller in size and easy and nimble. And the cost to getting to market and tokenizing and getting to the end client should be cheaper and more transparent. And with the neat way that smart contracts work now, I mean, you can basically track the interest payments, you can track all different types of things that you couldn't do before. But once you own a token, you can receive payments for your interest or your share of the rent or whatever it happens to be, as it's stipulated in the contract. So for tokenization, it brings to institutional investors choice, but it also brings ease to market. It brings lower costs, which is what Scott just said, and it brings a way that people can actually hold tokens and invest into tokens in a different way.
Okay, but I think tokenization is of interest to more than just institutional investors. So I'm going to ask, what are some of the use cases? What can be tokenized?
Well, we've talked about real estate as one, and I think a lot of clients have been going to start on real estate. But we're seeing questions about possibly a whole consortium of racehorses, for example, or we're seeing a consortium of that a company has a lot of receivables. They're willing to pay interest on that, and a regular higher rate of interest, for example. So if you're somebody that trusts in the company, this is a well-known company, by the way, and they want to free up some of their receivables, and they're willing to tokenize them and pay interest off of that, then that's something that might be interesting for people that want a steady rate of return. And if we can bring enough people to the table for that, us as an exchange and us as a company would be interesting, for example, to investors like them too. So I think there's a whole ecosystem that's opening up. And what digital assets have done for both Scott and for DLA and for Hashkey is to open up an entirely new area of business for us to explore and for us to get into and develop new clients. And that's the most exciting part, which means new investment opportunities.
Fantastic.
Maybe I just add to that, if you can have a quick moment there, Walter. You know, I agree with all of what Angelina says there. I mean, yes, we've been doing a lot of real estate, but actually the first project we signed after we launched Toko was a subsea phosphate deposit, and we've actually now got 3 different mining projects where people are looking to tokenize the assets before they're dug up, essentially, and providing sort of future rights to it. We're also seeing other asset classes, bundles of intellectual property rights, music, patent portfolios, video, energy futures, art. We've done some art, including NFTs and also fractional art projects that we've already done. So there really is no limit to this. And I think one of the interesting things for me, and we did a bit of a brainstorming session yesterday, there is this huge illiquid alternative asset market class out there that it really hasn't found a way to market yet. And I think tokenization represents, and again, rather than going head to head with perhaps what's happening in traditional capital markets and those types of things, this is actually an opportunity to, tap into and provide liquidity and financing for the estimated 60% of the world's GDP that is currently totally illiquid. And that, I think, is the really interesting opportunity here.
Okay, well, a lot of our listeners are with startups or small and medium enterprises, and we earlier made a comparison to this being a lower cost and more simplified approach than an IPO. What are some of the capital raising opportunities available for our audience and the business professionals? Angelina?
Well, one of the things, as I said, is if you've got assets that are of value, it's a way for you to unlock that value. So, as we said, one of the biggest shipping companies in Hong Kong, for example, are looking for ways. They know that they're going to receive the receivables. They know they have certain assets on their books, but they want to make their balance sheet more nimble, and they want to use their assets in a more efficient manner. So in that case, they're looking for alternatives, and that's why they're investing in digital exchanges to be able to do that and take part in that, not only as an investor, but also take part as a user of this type of exchange. And also, a lot of clients have digital assets, want opportunities to invest in new assets, which may be stock, which may be receivables or shares of companies. And this is a way for people to do that.
Scott, what does an issuer need to prepare? How invasive is this process? Well, you're not a capital markets guy, so I won't ask you to compare it to an IPO, but tell us about the process and the steps along the way.
It's a really complicated question, that actually, and it partly depends on the nature of what the issue or the asset owner is intending to do, and what bundle of rights they're trying to tokenize, what their objectives are. Is it a financing, or is it a future sharing of revenue? So there are some pretty fundamental questions. We've actually developed now a quite a complex Q&A to help tease out the particulars, because one of the things we're seeing. The first thing we are definitely seeing is that those that are coming to talk to us are in that early adopter category. And a lot of people that are interested, and they're interested in watching on and seeing how things develop. They're not ready to go. So we are looking for that kind of first mover type of asset owner that is looking to make a splash, do something new, take something of a bet on that this is going to be the future. And that trickle is starting to turn into a rush already, and I think we're still just at the bottom of that hockey stick, to be honest. But there are some fundamentals that are important, and one of the things we do when we're qualifying deals is really look at why are you trying to do digital? Because if this is the last possible chance of doing a fundraising because nothing else will work, there's probably a problem. And there is the saying that going digital won't make a poor offering good. It could make a good offering excellent, and that's a really important distinction. So this has to be a good product. It has to be well run, well managed assets. It has to be a trustworthy issuer. It has to be structured in a way that is attractive to investors. And none of this is new. These are the same fundamentals in any investment. So really, that's important that the issuer recognises that there is a real process, and there are legal compliance issues, and there are disclosure documentations, and there are investor rights. And none of this is new. This is the same really in terms of any financing and fundraising activity that might be undertaken today. It's just now leveraging the technology to do things and to carve things up in a way that perhaps products are emerging that didn't exist before, but those products still need to meet those fundamentals of, are you telling people the truth? Is it going to perform? Do people believe in your vision? Do they believe in you? All those same types of questions that are essential. Otherwise, you can structure a project and go to market, and there are no buyers. So it's the same fundamentals.
And that's something we would want to put our clients into too, as exchange members. So it has to be good for the clients also, and that's why our structure, we would use a listing committee that would actually look at the merits of the transaction, relying on our partners like Honduras, like PLA, that would actually be vetting and making sure the asset is actually there. So it has to be good for the client, it has to be good for the market, or else our reputations as professionals are not going to be there. And this is a burgeoning and very, very growing asset class. And it's really, really important that we do the right thing for our investors. And hey, we're here to stay. We made our reputations and we're here to stay, and that's what we're trying to build right now.
Okay, so far we've talked with the lawyers and the exchanges. Who are the other parties involved in the tokenization? We have the asset owner, we have Scott Beal at DLA Piper, and we have Angelina Kwan at Adachi Group.
We have the bean counters, we have the accountants that will opine that the assets are actually there. And we will have the technology people that will actually be tokenizing the token, which Scott has in terms of his secret weapon. We also have the promoters that will actually be working with the companies or whatever the asset is in terms of putting together prospectuses or putting together a package so that this can be marketed outwards. But the process will be a lot tighter in terms of and quicker to market if it's a smaller deal and we have all the different pieces in place. And that's what both DLA and Adachi are putting in place now. So we ourselves have procedures in terms of our listing committee, in terms of documentation, making sure that our regulators are comfortable with this also. This is going to be very, very important because ultimately Hong Kong is an international financial center. And what we want to see is our companies, which are doing great, that are tokenized, will eventually grow to something that may even either issue more tokens or even move to a major listing at a major exchange. So that would be like the biggest kudo.
And Scott, what advantages does blockchain provide during tokenization?
Well, there are a number of features, I think, of distributed ledger technologies, and I use that phrase instead of blockchain deliberately because I think some of the features of the early blockchains, Bitcoin and Ethereum 1.0, I think there are some benefits to proof of stake protocols, and we've been working with a number of layer 1 protocols, and the attributes of those technologies I think are going to be better suited. So I think it's important to realize that the benefits need to be matched to the technology so that the technology will allow those benefits to happen. So things like liquidity is obviously one, and Angelina and Adachi providing that digital asset exchange is going to be a key opportunity. Now, compare the stock exchange, which opens occasionally on a few hours a day when it suits local clearing banks, and then will probably settle sometime in the next 3 days, to the way a crypto exchange runs today. Always on, 24/7, settlement in seconds. So liquidity and finality, key opportunities in terms of that secondary market piece. I think the nature of the smart contract technology, and I think I agree with Angelina about the other participants in the ecosystem that she referenced, but we're now starting to look at getting a bit more creative with the use of this technology. So building in automatic functionality within smart contracts so that tokens can do things automatically. Part of the way to drive that automatic functionality is going to depend on external data sources, trusted data oracles that will then feed in information that will be the basis for driving, the if-then statements within smart contract functionality that we're starting to build, so that these things can start operating in an autonomous way, whether that's to do calculations of capital distributions and then indeed automate the capital distribution itself, which is a feature of Toko that we're currently building. So again, I think when we look at the way this technology can be used, these things will actually be able to operate in a way that is far smarter than, I think that the term smart contract has been largely grossly overused because most of the, efforts in tokenization to date haven't been that smart. They've been a relatively simple proof of ownership if you've got the private key. We're now looking to really extend that and actually create some functionality around the smart contracts. And that's something that can't be done with a share, on a stock exchange. It's just an ownership right, the same type of thing. This technology will enable these assets to be tracked. You'll be able to do dissemination of information, not only at primary issuance stage, sort of the electronic data room stage, but then have a living and breathing data room so that you can continue to communicate to token holders and the world at large about this is what's happening with the underlying assets. So it becomes a real-time living and breathing, always-on data. Now
that terrifies some of the issuers we're talking to, which is one of the things, if it does, maybe you're not the issuer we want to be working with. But for those that say, fantastic, I finally get to show the world what a great job I'm doing, that's a really interesting conversation. Now, compare that to what I get from a share on the share registry and the occasional public disclosures that they're forced to make. So I think there's going to be lots of opportunities as to how the technology can really underpin a lot more transparency, creation of new products, the liquidity, and faster settlement situation as well. So I think quite a lot of opportunity out there that we're only just beginning to scratch the surface of.
And with these tokens now, we've moved so much further than early 2017, 2018, where you saw the ICOs where basically they were told nothing happened. But now you can actually track. We have AML ability, we have trackability and ability. And that's the exciting part, because investors really can see their investments and information can be sent out about their investments, which you didn't have any tracking before. So we're light years different now, and that's why this has become such an interesting area for both investors to invest in, as well as issuers to invest in their assets.
Fantastic. So you have a lot more connection with your investment. Now, if you're an investor and you're looking to participate and understand the various offerings, the STOs coming up, how do you get the alerts? How do you track the different opportunities? Because I assume there are multiple exchanges with multiple offerings. You really have to track each exchange.
Well, the interesting thing is not that many exchanges are moving into it as fast as they should be. And many of the exchanges, and we just heard from Kraken, are focusing on trading of digital assets first. In Hong Kong, we have a requirement that requires us to actually, as part of the license, is to securitize an asset. So we have that requirement, and that has become a very important part of our business plan. So that is part of our licensing process required by the Securities and Futures Commission. So we are fully compliant with SEC rules, and we will make sure that whatever we do, including tokenization, follows those rules. And that's one of the reasons why it's a part of our business plan in terms of doing a tokenization service. And we're putting together structures, listing rules, listing committee to be able to do that in a fast manner.
Now, Kareem mentioned at the outset that there were a lot of questions from the audience. You can use the Q&A panel. Alternatively, if you don't have an opportunity yet to ask the questions, or we don't have time, A, come back on 21 September, and B, you can reach me on Twitter. My handle is @FacingChina. And also at hashkey.com, you can sign up for our newsletters, and we will be issuing, before the September event, a field guide to tokenization. So a bit of a user's manual. Scott, I wanted, one of my last questions for you before, in minutes we have, is what are some of the trends you're watching in the tokenization field? I guess it's early adoption, but are there any other kind of areas or issues that you're looking at?
Yeah, there's a few. I'm passionate about technology, so I'm very interested in watching the way the technologies are emerging. So we collaborate very closely with a member of the Hedera Government Council, for example, and they launched the Hedera Native Token Service, which means no smart contracts you can build straight away on their protocol. And so we've now integrated HTS into Toko, and we can mint tokens on that protocol, and we're looking at doing similar things with other protocols. So I'm very interested in tracking the technology developments. And again, to Angelina's point, go back 3 years, it's been a quantum shift in terms of the technology enablement that's coming out of the protocol. So that's one area. The other piece, and I'm portraying my day job as a lawyer here, is the regulatory trends around the world, and there's quite a lot of regulatory arbitrage to be had. So a lot of our projects that we're structuring, we're ducking and diving a little bit depending on where the regulators have licensed people already, whether there are advantages, disadvantages to certain markets. One thing I've definitely seen in the last few months is the beginnings in certain parts of the world, and I'll cite the Middle East as a great example of a recognition that this is the future and they better get on board.
And so I think there are some kind of tailwinds starting to drive some of the regulatory developments around the world, as opposed to fear being the dominant force as it perhaps has been in some markets to date. So we're tracking that very, very closely, because essentially it does dictate where you can, that one of the fundamental questions when we look at what a client wants to do is, okay, well, given what you want to do, what is your route to market? And Hong Kong's, getting there, but it's by no means the most progressive jurisdiction yet. Singapore is certainly ahead as at today, but there are some very interesting, other markets, whether it's Switzerland, New Zealand, interestingly, Europe. There are routes to market in the US, albeit they're pretty clunky and expensive. So there's this huge question of regulatory route to market, and what does that mean from a cost and time to issue perspective. And so we're tracking that very, very closely, and I think we're going to see an acceleration as the fear of missing out starts to take over from fear itself.
Okay, well, we know many markets are driven by fear of missing out, or FOMO. Last question for you, Angelina. Where will we be 1 year from now in the tokenization market?
1 year from now, I expect there will be a number, and this is not investment advice, but I think there will be a number of successful tokenizations. I think investors will be very, very interested. And this is really not investment advice, but I believe this current shift in the market will only make digital asset exchanges stronger. I think investors are adopting digital assets as an asset class. And as regulators around the world, including the SEC, including the SEC and CFTC, come out with more regulations, that is a honest assessment and also a vindication that this is a real asset class. And if you're not in this asset class, you will have FOMO. So in a year from now, I think we're going to have more and more tokens in terms of investor choice and choices for all types of investors, high net worth, professional investors. And I think DLA and Hashkey will be trading them like hotcakes, and digital assets will regain even more value, because I think this temporary change and this temporary readjustment is only temporary. I think Bitcoin will continue to grow. And that's my thing for a year from now.
Scott, any predictions or forecasts? Where do you see?
I'm not going to make any predictions on the price of Bitcoin at the end of the year, as I was put on the spot the last panel I was on.
I'm saying, where will we be in 1 year from now?
Yeah, I think I agree with Angelina. We're going to see the first successful tokenization. I mean, we have a significant pipeline of real deals that are starting to go through. We did this exercise last week when we analysed where we think the market's going to go, and I do think a year is a long time, but it's also a relatively short time in some respects. So I think we will have success stories, without doubt, within the next 12 months across certainly projects that we're involved in across a range of regions. So I have no doubt we will have success stories. That doesn't mean we will have a fully functioning marketplace of marketplaces with digital assets flying around the world yet. That's probably another 2 to 3 years away before we get there. But as I was asked someone recently, what was the volume of trading on the New York Stock Exchange on day one? And these things do take some time to grow. But I think a year from now we will have the basis for successful projects that are out there in the market and are trading, and that will start to grow adoption, and it'll be very much a slowly, quickly adoption, I think, soon thereafter.
Fantastic. Well, thank you to today's panelists, Angelina Kwan and Scott.
Wait. I have a prediction. I think Scott, Walter, Angelina, you're all wrong. You're all wrong. By the time the next GIC comes along, you will see so much more traction than you see today. It's not going to be a year. It's going to be before the end of the year. I mean, if you look at what's happening in the US, I mean, Securitize raised their B round just over $50 million. I mean, that means a lot. There is one question for you, Scott. Which jurisdictions, in the jurisdictions in which you operate, how is XRP classified?
Oh, well, that's a tricky question, and particularly in light of the SEC's analysis. I'd almost been afraid of Angelina on Hong Kong analysis. That I mean, we really haven't seen, for example, the SFC coming out swinging at any of the cryptocurrencies at all. And they followed suit and declared Bitcoin and Ether likely to be, not regulated, but they haven't really given any guidance. I mean, I don't think anywhere else in the world really is wrestling with the question and interrogating the same way as the SEC is now. To that end, there isn't any regulatory guidance on that question. We've certainly done legal opinions in a range of jurisdictions, including Hong Kong, Singapore, the UK, Gibraltar, et cetera, which have declared, new currencies to be non-regulated assets where there was sufficient utility, for want of a better word, in the nature of those new cryptocurrencies. Ripple has some unique attributes to it because of the way they have, built products and services in addition to it just being a cryptocurrency. And I think that's why it's distinguishable from potentially other cryptos. I'm going around in circles there without really answering the question. But my gut feel is we're not going to see large scale global prosecution of China, maybe aside, because it bans Bitcoin and everything every week. But most markets I don't think are necessarily going to take the lead on prosecuting native currencies of layer ones. That's not. I just don't see that happening, to be honest. We didn't even see it in Angelina and I have discussed this. We haven't really even seen, with one exception, where there was a wind back of an ICO. We haven't even seen any prosecutions from our regulator in Hong Kong against ICOs, many of which I think were far more questionable than perhaps a true high volume, high usage cryptocurrency. So I just don't think regulators in many parts of the world either have the skills or the appetite for taking on a battle like that, far less, what the legal analysis actually is. I think the regulatory risk for many of them is relatively low. I don't know if you agree with that, Angelina, given your previous role in the regulators.
Yeah, I do agree with what you're saying. And Hong Kong, as you may be aware, holds the seat of the International Organization of Securities Commission's chairperson. So I think where regulators will go is they will hold the exchanges responsible if there are products that aren't up to the standard of which they have set their policy that they're given their license on. So it is that way that they will look at the exchanges, their license. But I think the US has been the most aggressive in XRP from what I've seen, but other markets around the world we have not seen that yet. However, if there is a scam in Hong Kong where something is not working properly and it is not good, then of course the police and regulators will step in. And I think that would be the case around the world, but we haven't seen it.
Yeah. So yeah, in closing, I would say, having been at this desk for close to 11 hours now, having seen the panels that I've gone through today, the sentiment is more positive than negative. More positive than negative and more positive than neutral in relation to this whole area of crypto, digital assets, regulations, and what's happening as we move forward. So I anticipate a quicker adoption and adaptation of what we're seeing in the near future. It'll be interesting to see what happens. I suspect, just like anything else, we at these conferences we find a thread and we are talking about it, and it doesn't take long for these things to catch up with us. And I think they'll be more positive than negative. So I think you guys are in the right place. You're doing the right thing, and you're at the forefront, and I appreciate that and applaud that. So thank you so much for the insights and the work that you're doing ahead of time to make all of these things happen. It is coming to the end of the day for us in the West Coast. It's the end of the day for a lot of folks in the East Coast. But we had about, and Europe obviously is asleep, but we had close to 1,100 registered attendees, and this video will be shared with them, or it'll be on the link to YouTube, and you can use it to share it with your network, of course. And then looking forward to seeing you in September. And I think what we'll do is try and change the time zone a little bit for you and have you wake up a little bit earlier.
Happy to do so.
Sounds great.
Yeah.
Right.
Yeah, you'll find, Kareem, that our late night is when you're just waking up, and our brains are kind of nodding off. So
yeah,
flexible, and look forward to participating again.
Yeah, we'll flip it around a little bit. Angelina, Scott, Walter, thank you so much. It's been a pleasure. I appreciate and applaud you for being here today. Thank you.
Kareem, I want to in on your deal, by the way. If you're a Link 2 customer, I'm going to get in on that.
Hey, we're looking for it. Look, it's still your day. You can argue for it, but get on it now and get it going.
Okay.
Thank you.
Thank you. Thank you.
Thank you.
Thank you, guys.
Thanks. Bye.
Bye. Kareem, thank you.
Thank you, Angelina. Pleasure.
I'll contact you separately.
Okay, great. Thanks. Thanks.
All right, Karim, we're going to wrap up the conference then. We'll go ahead and end the session.
Yeah, that'd be great. Thank you. Thank you, guys.
Excellent.
Thank you all.
Thank you all for attending and sticking with us till the end, and we hope you have a good day.
Bye-bye, everybody.
Yeah.
Ciao, ciao.